going? Can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola.
Hello.
You're leaving me alone with him. And I have to.
I can say the same thing.
I could be remote today. I choose to come in on Wednesday. It's not even a good lunch today.
You know what? I agree with you.
Yeah.
I'm not a big JP Graciano fan. It's way overrated.
It's okay. I'm gonna probably just have a salad, and then I'm gonna be
overrated.
I'm gonna be angry.
Oh my God! I remember when we found Graziano's. You were all over it.
The first time I thought it was really good, but you know what? I've soured. I much prefer.
I don't need you to
Don't
sweeten.
travel. I've been telling you this. I've been telling you this for decades. Things don't travel. You got to eat it fresh. That's the key.
Subs travel. Like sub is like the number one thing that like food wise that travels.
No,
I mean,
once you put the
Like
oil
a
and
cold
vinegar
sub,
on it,
yeah, no, those are fine.
I prefer like Tempesto or Montano's, Bari. Tori doesn't do
Montano's
Bari.
is good. I will give you that. Yeah.
Tori doesn't
Bari's
do
good.
Bari.
Take it up with Tori. Don't look at me like that. I'm hashtag Team Tori. Hashtag all
Oh,
day.
you know what? I'm sorry the free lunch isn't good enough for you two. Okay. Yeah, really, I'm really disappointed by this free lunch not being good enough for the two of you.
You could have a salad.
The only salad I like from Sweet Greens,
Yes.
You can go and buy your own lunch.
it has the avocado in it, but I don't like the apples, or the chips, or the rice that they put in
Okay, so you just want avocado?
there. I like the avocado and the chicken.
Yeah. Oh, I think it's like the chicken avocado ranch one.
Yeah, that one. That
Yeah,
one.
that's Jessica's favorite.
Ooh,
Ooh.
that's girly.
I'm a kale Caesar girly. I know. Okay.
I like
well,
the kale Caesar too.
It's all gross. It's salad. But we have to make adjustments as we get older because our metabolisms just went on strike. They don't work anymore.
Yeah, but kale Caesar's not
What do you mean kale Caesar's not
worth it.
worth it?
Caesar's not worth living for.
It's got protein. It's got fiber.
Ugh.
It's yeah. All right. Nah, it's so
Nah,
weird.
I don't like the cold chicken in there.
Do you want hot chicken on a
I
salad?
agree with you. I don't
want
like
want
that.
anything.
I don't like that cold chicken either. It's gross.
It's good
Yeah,
with the
it's gross.
dressing, with the Caesar dressing. It's not bad.
Cold chicken in there is gross. The only thing,
Yeah, cold chicken is
best
gross.
thing that they do at Sweet Green
Yeah.
is their fries.
We don't get the fries here
I know.
though. The budget cuts.
But it's their best, it's their best thing that they have.
Okay, I've never had their fries because we don't get them here.
Great. You have to go in there. It's great.
Yeah, but it just makes me mad to pay $25 for a meal at a salad place.
Salad and fries, 35.
Yeah.
Custom.
Yeah.
Custom.
Thank you.
You know how
Chicago.
much Chinese food that gets me in Chinatown? I eat for 3 days like a queen. $35 worth of Chinese food lasts me 3 days.
It's true. It's true. You you retain a little bit of sodium though, a little bit.
That's fine.
Right.
Meh.
I'm going to be
It involves you going down to Chinatown?
it actually involves me going uptown, but yes.
Okay. Like a drag brunch. What are you doing?
No. Little Chinese barbecue.
Sunhua?
Yeah.
But I thought they were closed.
No, they were only closed for a week.
Oh, okay. Are you sure that they're back open?
Not 100%.
You don't know. Maybe they took the summer off. Maybe they're like, we've been doing this too long. We need a break.
Maybe, but I doubt
Okay, I would double check if I were you. What'd you do last night? How about that? We'll get into that.
it. I was stuck here until really late. I had a meeting.
Oh, boo-hoo.
I had a meeting, so I didn't get home till 6.
Oh, no.
Yeah, I know.
He was bitching all day long yesterday about this thing he had to do. It was
Oh, no, I
unbelievable.
was here. I was here all day. He was just dragging his sorry leg around, and he was just like looking for someone to play basketball with. And then sitting at my desk. I wear AirPods because it's an open office and it's just it's too overstimulating for me. Anyway, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me, and I honestly didn't hear you.
I just asked if you were there.
And so, and it was, where else would I be? I was sitting in the corner. And then, so I get a text message back. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" Not even remotely work related. So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT."
Ask Gronk, Sosnoff.
No, she said she had some software that can find, like she found that sweatshirt for you. So I wasn't sure what software she used to find where you get.
When you guys were twinning in your yacht caftans.
We'll do that again in September. You know, the weather's just too hot right now for.
But did I find it?
Yeah, you did find it.
And so I proceed to use technology to find it for him. And so then he complains to me about what the price is.
Found.
As if I had set the price for this. It's because the chair's no longer available. So it's on like reseller sites. And he was like, "Well, how much did I pay for it originally?" As if I would know.
Son of, this is your adulter. This is the person we've been looking for your entire life.
Let me tell you right now, she is not my adulter.
But I did what you asked. But you still complain, like you were still had problems with everything.
I need an adulter.
Welcome to my world, Vanetta. This goes on day and night.
I needed an adulter that does not complain.
I didn't complain. I found it for you. I complain when you ask me stuff that I have no control over. Like, why would I set the price of chairs on the resale market? Anyway, so yeah, he was a bear all day yesterday because he had to be here and he didn't want to be here.
Oh my God!
After hours, he had to be.
Yeah, because half day Tom.
Right.
Oh man! So did you have more crawfish for dinner, or did you eat it all?
No, I did not have any more crawfish.
So what'd you have for dinner?
It
was gross. Whose fault is that?
It's mine. I just didn't feel like I had a bunch of stuff to do, and I feel like it's not a good story. So I'm not even gonna go there.
Oh, wow, this is bad.
Yeah.
So you didn't eat, or you did eat?
Oh, I ate. I just wasn't worth talking about.
Okay.
Then I watched the little Cubs game. They crashed and burned, and then.
Who were they playing?
They're playing the Reds.
Oh no! Are the Reds are good?
Oh, they're okay.
Oh, okay.
But the Cubs are crashing and burning right now.
They really are falling apart.
Do you believe in the "call her daddy" curse?
No.
That's what they're calling it. So, like, ever since those ladies, I guess, sang the 7th inning stretch, the Cubs have been on a skid, and they're calling it the "call her daddy" curse.
No, I'm not.
Why not? We need a good curse in Chicago for
I'm
the
not
Cubs.
buying into the "call her daddy" curse.
Okay.
But
all right, debunked then.
That was.
But then what's going on with the Cubs? How else do you explain it?
Their best hitters aren't hitting, and their pitchers are all hurt.
Pitching has not come to play.
They're hurt.
You didn't get the call. They didn't. They're not going to call you up.
I did not get the call. I'm planning on going Sunday though, so we'll see.
You're going to go to the game on Sunday. Yeah. It might rain.
Sunday?
No, Friday. Yes. Yeah, it might rain on Sunday.
It's Wednesday. Who knows what's going to
happen on Sunday? Meteorologist.
They play the Pirates. I got tickets.
Okay. Are you excited? Are you gonna wear your jersey?
Ooh, Sadluck, that's a good question. You're gonna wear the jersey?
No, but I was told I'm going to Bears opening night.
I heard. Who is this secretive financier that is
just so you know, Tom and Scott are going to the opener because
I know some dude who has a luxury pied-à-terre in the South Loop.
They had a little head start.
That'd be Pete Clink.
Oh, it's Clink? Oh, Clink. holla at your girl. I want to go to the Bears game, but you're not going to make it because you got to walk 17 minutes, and that was a no-go.
That's what he thinks. We got to get the good parking.
But the traffic's going to be a nightmare. Like, it's literally faster to walk.
Not when I bring my handicap guy.
That doesn't... There's not a handicap lane in traffic. There's handicap... Do you not understand?
He thinks there is. Shh. He thinks there is. Just don't tell him.
Do you think you're going to take, like, a sky taxi there? Like, I don't understand.
We're all good.
But how does a handicap pass get you through game traffic?
I don't know. Don't worry about me. I've never missed a kickoff yet. I'm not going to start now.
But you've never known someone that you were going to tailgate before, like to pregame at their place.
Oh my God, don't you worry about me. I've had plenty of brats pregame. I'm good.
Okay. Who do the Bears open the season against?
Minnesota,
I think. Right?
So you're going to a regular season game, not preseason, or is it a preseason game?
No, the Monday night, the opening night.
So the regular season.
Yeah.
Okay.
Monday night, they open on Monday night.
Okay, against the Vikings.
Yes.
Okay.
Yes. Yeah, we got a bunch of stuff planned.
That should be 0-1.
Want to know? I love the Bears.
I am going
I have unlimited on the Bears right now.
I am going to call in sick that Tuesday. Because it's a school night. That's rough for you.
Yeah, you can't do that.
Yeah.
Yeah, I think we're going to get to go on the field, too.
Because you know how long it's going to take you to get home on that Monday night? I'm just, like, especially if you're driving.
That's why I'm going to get parking.
But again, that doesn't negate the traffic. I think you just think parking is this magical thing that's going to solve all your problems.
You get the good spot in Soldier Field.
Yeah.
And then you get out right onto the highway, you beat everybody.
Okay. Sure.
Trust me on this one.
Okay.
Pro.
You're not.
Soldier Field Pro.
Why do you get to go on the field?
Know somebody?
But how
Might know somebody.
I'm so tired. Who knows somebody? Mike?
No, I might know somebody.
Oh, you might know somebody.
Yeah. So I'm trying to work my angles.
That would be very cool.
I know.
I mean, then you would have to fly the colors. Like, you're not just going to go on the field
I'm a Bears fan.
in a black T-shirt and your motorcycle boots.
No. I got a Bears. I got a Bears hoodie.
Oh, is it bedazzled?
He's got a bear skirt. He's got like a lovable. He's got
I
like
know.
an old
I have a Bears headband. Do you want it?
Nope.
Well, Sadlov had a little bit of a head start here on me.
I got Bears. I got Bears attire.
Okay, girl.
I got Bears shirts. I got Bears sweatshirts. I got Bears hoodies. I'm good.
Might be too hot.
You know why? Because Costco sells them.
That's true. Costco does sell licensed apparel.
He's got the off-brand stuff. Yeah, not like the good stuff. He's got the off-brand stuff.
Off-brand. Thank you.
Off-brand.
Wait, so Bat, how come you didn't get the nod?
I have the Cubs Bears reversible jersey. Just flipped it over.
Ooh.
No. You got the seconds. Like, there's a little something wrong with them. Like, they're not cut right at the bottom, or the logo's a little bit off.
Oh yeah.
That kind of, like,
So
seconds.
wait, Bat, how come you didn't get the nod?
Oh, I'm going to get the nod. I was trying to explain to you. He met a gentleman who I'm going to meet later this month, who has an in these sporting events, and he fell in love with Tom, but he never met the bat. So now he's going to find the bat, and it'll be. And I got an inside track. I don't want to face Sosnoff, but he'll be carrying my ball bag.
Why do you have a ball bag at a foot? What?
Because I'm gonna have all the guys sign it for me.
I hate it here. Really do.
You'll see.
Okay, well, I love all of this for you.
I was gonna take you, Vanetta, but yeah.
I am a Bears fan. I would love to go. I haven't been to a Bears game in a really long time.
Yeah.
I went to 2 last year.
Congratulations, me lord. Yeah, but you paid a lot for those tickets.
Yeah, they're expensive.
No, actually, did you go to 2 and paid for 3, or did you go to 1 and paid for 2?
What?
You never got your 1 set of tickets that you paid for.
Oh, that's a couple years ago. Yeah.
Right. So you either went to 2 and paid for 3, or you went to 1 and paid for 2.
I went to 2 games last year.
Paid for 3.
Maybe.
I only once was able to get Bears tickets at face value, like dropped the Ticketmaster opened their sales, for the season. I was using like 2 computers and my phone, and I was able to get face value Bears tickets. It's only happened once in my life.
Yeah.
And then that's it.
Well, last year we got tickets at face value.
How?
Just a second,
Because they were bad? Because the Bears are bad?
Yeah, they were bad.
Yeah, towards the end there.
Yeah.
All right. Well, we'll see what happens. What's your over-under on the Bears? Are you 8 push or what? Like
I bought 8.5s.
You bought 8.5s?
Yep.
Okay.
I loaded the flotola at 8.5.
How about you, Bat? What do you say?
I faded the Sosnoff and Sheridan at 8.5. Gave him a little taste. As soon as they pay 9, I got a truckload.
He's not a fan. That's the problem.
He's a fan. Why can you say that?
If you're a fan, you don't sell your team.
Okay. All right.
No, I am a fan, and then this could be the year they cover Sosnoff because I never bet against them. I don't know.
Did you see that viral video of Caleb Williams trying to throw the
So
ball
horrible.
into that football
So
thing
horrible.
with the squares? It's not great.
He's so
do you know what I'm
horrible.
talking about?
I can't stand it anymore.
Oh, yeah, it was not great. But that's fine. Because I'm also a Chiefs fan, so I have an NFC team and I have an AFC team.
There you go.
So and Bears Chiefs play preseason this year. They play each other, so she probably won't. Not for the preseason, but I am very excited for her to go to all the Chiefs games and all the dads, Brads, and Chads to cry about it. Bat, how was your evening last night? How was your home-built sauna?
Not yet. Maybe the 24th. It was supposed to come on the 4th. It's a little delayed. The Taiwanese sources say it's in transit.
Oh no! You have to pay tariffs on that yawn?
No tariffs. This made in Minnesota. So,
Hey, that's nice.
All good, yeah.
Tom,
yeah,
are you going to go in Bat's sauna?
If I'm in
100% when it comes to my pool party.
if I'm ever in Bat sauna, something
Clothing optional, Sosnoff. Clothing optional.
If I ever was in Bat sauna, something went horribly wrong in my life, or I'm dead.
It's good for you.
What?
You would love a sauna.
I don't love saunas.
Why don't you love saunas?
I've been in saunas.
When was the last time you were in a sauna?
I was in a sauna the last time when I was in
Sweden, Denmark, Brussels,
Paris, France.
When I was in Helsinki.
Oh, when I was in Helsinki. That's in Finland for you pores.
That's in Finland for you, Batista.
For you pores.
Geographically challenged. I was in Finland.
What was this, 1980?
We had one in our room. That was a couple years ago.
Yeah, I remember that. But so you don't like saunas, but you like hot tubs.
Yeah, I like hot tubs.
See, that's weird. That's
Hot
weird
tubs
to
are
me.
nice. Saunas are weird.
Okay.
Don't get them.
All right.
Saunas are weird. They're so good for you. It's awesome. Saunas are the best. It's
Okay,
like,
all right, then enjoy your sauna.
I'm going to.
Okay, I know. I just don't like saunas.
I don't want to look like you when I'm your age.
I don't
That's
like
all.
saunas. Steam rooms and saunas don't do anything for me.
No? All right. So you just like to...
I know, because you're a pillar of health there. I watch you get up. You're so limber. And you're so amazing. You've done everything right. I can tell you that.
I like a hot tub, but
Sure.
not a sauna.
All right. Duly noted. I will add it to my file.
I got one of those too. I got like a resort out here for you.
Yeah.
Hey, we got a great show for you today, which you can watch us from your sauna or your hot tub on this wonderful Wednesday here at Tasty Live. The top of the 8 o'clock hour, we have an options jive. How often do large gaps get filled? What are you talking about? Like your teeth? Like what?
Something like that. No, they're talking about, big up or down openings.
Oh, okay.
How often do they come back and fill those gaps?
Oh, okay. That will be interesting. I would like to see the research behind that. Then 8:40, excuse me, what's your assumption? It is a Assume the Position Wednesday, so viewers are submitting their trade ideas. Tom and Bat are going to see what they can do. Viewers write in with an underlying, and they have a directional bias. And then Tom and Bat are going to put on some viewer-submitted trades. 9 o'clock, we have Jacob in the house, the original geek, the skinny on options math. Unpacking backtest statistics.
Actually, it's a compliment to last week's piece, but this week we're just looking at backtesting and how accurate it is.
Okay. And we have a wonderful backtesting feature here on our platform.
We're using it on the show today.
That is great. And then we got live from the trade desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. Is Scott a sauna guy? Scott seems like a sauna guy.
That's a good question. I've never been in a sauna with Scott. I've been in a hot tub.
You've been in a hot tub with Scott?
I've been in a hot tub with Scott.
Okay.
I've slept in a waterbed with Scott.
Okay, wow.
Enough.
Hey man, we don't judge. Love is love. Love is love.
I think I've been in a steam
We
room
don't
with
judge,
Scott.
but we don't have to hear about it.
So a steam room, that's like a sauna. Like what's
I've been in a steam room with Scott. But
Okay.
I don't think I've ever been in a sauna with Scott.
Oh, you got a nice schwitz.
Yeah.
You love the
Have
schwitz.
you ever gone into a strip club with him?
Strip club. No.
Okay, well, that took a weird turn. Omaha. Well, Scott's going to be in at 9:30. We will ask what his preference is. And then we also got Nikki Badin. This is great if you have a smaller sized account. Nick Batista has your back with his Johnny trades, coming in with trades for mere mortal sized accounts. So Nikki's going to be in at 9:40. And the lovely and talented Liz and Jenny are back at it again, back on the floor, broadcasting live from the floor of the SIBO. That is at 10 a.m. today. So just a packed show, bell to bell, basically. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news,
Breaking
across the wire. Our leading story, top story, just in.
today's headline.
This just in.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It is August the 6th. This is the part of the show I like to call the Daily Dose, where we talk about today's financial news and headlines. Do you know what today is the 10-year anniversary of?
Can you give me a hint?
It's culture related.
That's not a lot of it.
It's a cultural phenomenon.
Cultural phenomenon.
Cultural phenomenon. 10 years.
I need more of a hint.
Alexander Hamilton.
Alexander Hamilton.
Alexander Hamilton.
That was not in my top 1,000 guesses.
It is the 10-year anniversary of the award-winning musical written by Lin-Manuel Miranda, one of my favorites, all-time best-selling cast recording, seen by 26 million people because they have touring company.
Like I said,
it was a cultural and global phenomenon.
That's literally not-
Alexander Hamilton.
Literally not in my top.
He was a
1,000.
bastard orphan, son of a whore and a Scotsman, dropped in the middle of a forgotten spot in the Caribbean. Okay? No? Okay. Anyway, happy anniversary. Bat, what are earnings on deck for today?
Airbnb, Lily, D-Dog, not too many of the popular ones. Although Lily is one of the biggest movers, typically up or down on the high option volume list. Markets aren't the best there.
All right. Hey, prediction markets are placing their bets for who's going to take over the Fed. This is interesting. So the National Economic Council Director, Kevin Hassett, and former Fed Governor Kevin Warsh, the Battle of the Kevins, and current Fed Governor Christopher Waller have all been floated as contenders to lead the central bank. Scott Bessent, who is our current Treasury Secretary, said that he didn't want to be Fed chair. So now prediction markets are like, hey, who's up next to be head of the Fed? Of course, Powell's contract runs out through 2026. But I think it's interesting that people are betting on this. Do you have a pick that you like?
I do not know. I don't know either of those two people.
I thought you know
not know.
Kevin Warsh. Yes, you do. You know him.
Is he at Robinhood now?
I don't know his CV, but I think you know him. You've talked about him before.
He's the guy at Robinhood right now. If he's working at Robinhood right now, I think I know him.
Okay.
I don't know.
You're like, I don't know her.
Hassett.
Okay.
Scott Bessent is too stupid to run the Fed.
He's not. I took that as not. I just said he's not.
just way
He already has a job though, so he
I know, but
doesn't
he's-
even matter.
He's too stupid for any job. Let
Sure.
alone run
Okay.
the Fed.
Nope. Okay.
But I think Kevin Warsh, people like him. I don't really. I met him once.
Both Hassett and Warsh have advocated for lower interest rates, so it'll be interesting to see. Let's just talk about bonds. How about that?
They're down today.
Okay. Do you want them to be?
I'd like them to be.
Do they get too hot?
I'd like them to be about a point lower, actually. Then I could.
Oh, you would? Okay.
Just to buy some.
Okay.
115.22. They flirted 116 last night. The 115.13 is the low. Let's call it mid-range.
Yeah, they're mid-range. The mid-range. The notes are down a little bit today. There's a huge 10-year Treasury auction at 1 today.
Oh, okay. I think that's interesting how we have to talk about Treasury auctions now.
I'm just saying there's a 1 o'clock.
No, but it doesn't move. Sometimes it moves the market.
I think the bond. Well, it's a 10-year note.
Sure.
So I think that maybe that'll move the market a little bit later.
All right, we'll see what happens. Hey, Wells Fargo, they downgraded U.S. small cap equities to unfavorable from neutral, pointing to its heavy tariff exposure. Let's talk about maybe small caps in relation to the other indices.
Well, they've been super strong the last 2 days.
Okay. So, but this is good because normally they only downgrade stuff when it's like already on its butt.
Yeah, I mean, the small cap indexes have been really strong for the last 2 days. Unfavorable.
What are you doing in like RUT or IWM with nothing?
Nothing.
Literally nothing?
Literally nothing right now.
Okay.
Yeah, IWM IV rank of 21, kind of at the lower end of.
It was just in single digits like last couple of days.
It was,
Sure.
Yeah.
So the rut was really small. I'm sorry, not really small. The rut was really bid up the last 2 days. It's been the strongest index. So kind of makes sense that it maybe sells off a little bit today.
Okay. What are you doing in like the Qs or SPY?
Again, everybody has a really low IVR right now. So Qs and SPY were just naked short.
Okay. That seems dangerous.
It is dangerous because I live dangerously because
August can sometimes have
dangerous man in a
crazy.
dangerous town and I live a dangerous life.
Okay, August, you live your life a quarter mile at a time. No, August can sometimes be like really volatile and like the liquidity is not always there, so you get like these wild swings. So just be careful, is all I'm saying.
I said I'm a dangerous man.
Okay, you bad man. Hey, Coinbase had a no good, very bad, terrible day yesterday. Shares continued to slide. The crypto company took a double-digit fall from their July record. Shares of Coinbase slid as the company announced a $2 billion private offering of convertible senior notes. Many analysts, though, are optimistic on Coinbase's long-term prospects, but some have warned that it may be time to take chips off of the table.
Coinbase had lousy earnings and they got beat up yesterday on the exchange news.
Yeah, the CFTC.
Yeah, I mean, Coinbase has dropped $100. It's 25% lower than it was 3 weeks ago.
Wow.
Yeah, this one we didn't get caught on, but Coinbase trading at 300, up around $2 today. But
Yeah, we
you
did
are
not.
right, Sal.
Let's be very clear about that. We did not get caught this time.
Okay, good job. Good job, you guys.
Thanks.
The New York Fed finds a 1% rise in overall household debt in the second quarter. So total household debt levels did rise as a growing number of student loan borrowers and some newer home borrowers faced rising credit challenges as we enter a new era of the end of interest payment pauses and more interest is going to kick in, and there are also payment pauses, so everything is now like restarting. That's kind of a big matzo ball that's out there because we are in a $1 trillion student loan crisis. Are you worried about the New York Fed's findings about household debt, credit levels, student loan levels?
Am I worried about
delinquency
no,
rates?
I think the headline is correct. I think it's more if they flagged a rise, which is a red flag essentially.
Right.
That's all. It's just something to be aware of.
Okay, it makes me scared though. But just to think about how people are still going to have to pay now for the interest on their loans, and still the cost of living for lots of things is still really high, and there's still a lot of uncertainty about what the impact that the tariffs are going to cause.
We have a student loan issue in this country.
Yeah.
Because of the cost of it, higher education.
Sure.
We have to figure it out. Somebody has to address it.
Well, good luck with that. Hey, let's get to the earnings from last night. I have a ton. AMD reported weaker than expected earnings, even as their revenue topped estimates. The company trails NVIDIA in the market for GPUs, but big customers like Meta and OpenAI are increasingly looking to AMD to provide an alternative to NVIDIA. AMD reported revenue of $7.69 billion versus $7.42 expected. What did you do in AMD?
So it's funny. The stock actually opened up about $2, but it did not look good. It opened $2 higher when the earnings came out.
Okay.
Didn't look good, and then
What do you mean it didn't look good? If it was up $2,
because $2 is not exactly a huge move.
Oh.
So it was about $2 higher, and on the revenue number, and then they sold it off $10 after that. So it's down 10.
Okay.
And that's where it sits right now, down $10, 164.
Yeah, it's pretty
Well,
much
what was
flat
the
there.
expected move?
It's probably, I'm guessing, at least around 10, but I.
Oh, okay.
Right around there, $164 stock right now,
So-
$174.
What did you do in AMD?
We sold strangles, puts and calls.
Mm-hmm.
We sold the now there's 2-day. We sold the 2-day and the September. So we sold August weeklies and the September monthly strangles. I think we're going to be fine. I know we'll be fine in the weeklies.
Okay.
I don't know about the September monthlies. It depends where the stock opens. But that's what we did.
Okay. In other earnings chip news, Super Micro shares plunged 15% after the company reported weak results and disappointing guidance. The company's growth rate has slowed since last year. SMCI reported revenue $5.76 billion versus $5.89 expected. Revenue did increase 7.5% for the quarter, but it wasn't enough.
So that stock we did not trade because I thought the expected move in there of $6 was way too low.
Yeah, now it's over 10.
Yeah, the move's actually 10 to the downside. We were right on thinking that move was too low.
It was a good no call.
It was a good no trade.
Right.
Yeah, it was. It moved actually a little over 20%.
Ooh.
And I think
That's a very big move for $57. I mean, 20% is a big move for any stock.
Yeah.
But $57 that's a big move.
But they had that move priced at about like a little over 10%.
Yeah.
So yeah, it's a bad trade.
Okay.
Yep. A bad
Well,
selling trade, yes, but we didn't do anything.
We didn't do anything.
okay, good. There you go. To just as a footnote here, Super Micro shares were up around 88% for 2025. So that is nice little move if you can get it. Hey, Disney reported their earnings. I didn't see the numbers because I think they came out this morning, but I do have a Disney story. Disney's ESPN is going to acquire NFL media assets in a major deal. They reached a landmark deal with the NFL to acquire the NFL Network and other media assets. In exchange, the NFL is taking a 10% equity stake in the sports network. Do you think ESPN can still be impartial on their reporting on what's going on in the league if the league is an owner?
Yeah.
No way.
I do.
I don't know. Disney destroys everything, though. I don't know.
I think that, sports is a little different. I think they do a pretty good job.
What? You just said a bunch of nonsense there.
I think
You think that there's no corruption or cover-ups or things that need to be
talking about
exposed
a bunch of
in the NFL?
I'm not talking about that.
They need to be held to account for things. There needs to be.
I'm talking about announcers and people that are providing the color on air.
I'm talking about journalism. I'm talking about the NFL PA rep dropping dimes at a strip club.
It's a difference.
Somebody needs to report that. How do you have an 8-hour business meeting at a strip club?
It's so funny. That guy is so stupid.
They got good wings.
It's so
No,
funny.
but that's still reporting. That's someone that needed to be held to account for misusing NFL funds and not representing.
They didn't have any problem reporting on him.
Okay, well, but the NFL didn't own them. That the NFL.
That was the Players Association.
I know, but it's still part of the NFL.
No, that's the Players Association.
Okay, well, it's still all tied together. What did Disney do this morning for earnings? I'm done with you.
Disney's down about $2.50 to $3.
Did you trade Disney or no? No. Okay.
No, we did not like what we were looking at in Disney.
Okay. Hey, hot little meme stock for a second, Opendoor, just open, bat, tanked after earnings, but the CEO thanks new investors for increased visibility. Carrie Wheeler said, "We appreciate your enthusiasm for what we're building, and we're listening intently to your feedback." I don't think that she gets that they're just, like a meme.
Where's
or
that stock
whatever.
trading now? $2?
Exactly $2. Yes, up on the offer, it closed at 250.
Well, it was 51 cents in June, though.
Okay.
Okay, that is 100% true. I mean, it was much higher last year too. So I mean,
Yeah.
you want to look at.
Okay.
I just thought it was interesting because they did get caught up in like that meme-ness, and then I was like, oh, they have to report their actual earnings, and it was rough. So the turnaround isn't showing much evidence of working yet. They reported a revenue increase of about 4% to 1.57 billion, but their net loss was 29 million, which is pretty good from 92 million a year earlier. Yikes.
No, I would say nothing's working right now. No.
Yeah.
Right.
I'm surprised they did $1 billion in revenue.
Well, see what happens. Hey, in other earnings news, Rivian loss was bigger than expected on higher costs. China's curbs on the export of heavy rare earth minerals, an essential component for EV motors, sharply increased material costs and disrupted supply chains. The company also said they're facing other impacts related to the tariffs. They reported an adjusted loss per share of 80 cents for the second quarter. I don't know if you're doing anything.
We did not trade Rivian. Okay. I haven't looked at Rivian. Last time I looked at it was $10. What is it, Pat?
11.30, Sosnoff, down around 75 cents. This year it made some highs around $17 or so. Its lows are around 10.
They did deliver 10,661 vehicles, but that's a 22% decline from the same period a year earlier. In other EV report news, your precious Lucid softened their full-year production forecast, and they also missed estimates. They now anticipate producing between 18 to 20,000 vehicles for the year. Previously, they had projected 20,000. Lucid brought in revenue $259 million versus $280 million expected.
Stock's down 18 cents.
Okay.
Right about the expected move.
Yep.
Yeah. Do you think Tesla's had an effect on the overall softening in the EV market as a whole?
It's a tough question. I don't know.
Because I saw an article that had sort of said,
I saw an article where they're losing, where Rivian's losing like $40,000 a car or something like that. I don't know if it's possible.
That seems high. I don't doubt that they're losing money per car, but I mean, maybe it's 40,000, but
I don't know.
Yeah.
I mean, I don't know.
Tesla unchanged, maybe down 50 cents.
One final earnings to report. Snap. Remember Snap?
They don't.
Their shares plummeted 15% after weak second quarter revenue metric. Okay, if I could just get my words out. The company reported 569 million global daily active users, bringing in revenue about 1.34 billion versus 1.35 expected. Earnings per share was a loss of 16 cents. So
how do these companies survive if they lose money every single quarter? Forgot about Uber.
If they might have come out this morning and I just didn't.
They did.
I didn't have. Okay.
Stock's unchanged.
Okay, so I don't know when I was supposed to pull that number when I was driving.
In your sleep.
Okay.
Would you be able to?
Okay, so what did you do in Snap, Uber, Snoober? I don't know what we're talking about.
Snoober, we're going to be good because it's literally it's actually unchanged to the penny.
Unched.
Unched.
Okay.
So premium sellers are going to be happy in
Nice.
Uber Goober.
That's great. But nothing in Snap. You didn't trade Snap.
I needed nothing.
Okay, you did trade it.
I did.
Okay, so why are you acting like you didn't trade
I'm going to
it?
be long some stock at $8.
Okay, well, congratulations.
I'm going to be able to sleep tonight.
Yay! Hey, Apple may announce its entire iPhone 17 family on September 9th. September's right around the corner, and that means it's time for a new iPhone. A leak is a leak, but we are getting very close. People have spotted this new phone out in the wild. They say it might have LiDAR. I cannot confirm or deny. Just it is lasers. It's just space lasers. No, I don't know. But this is the first look at the iPhone 17 colorways. It will run iOS 26 with liquid glass. What are you doing in Apple? Sometimes these big Apple events are mini binary events.
Apple up $2, by the way.
See, Street likes it.
He loves it.
What are you doing in Apple?
We're short some premium. That's it.
All right. Well, it is what it is. Hey, this is cool. OpenAI has released 2 new open weight language models that are going to be lower cost to compete better with Meta and DeepSeek. OpenAI announced that they are releasing the new models again, these are going to be open weight to improve output and predictions. It's an exciting time as it seems that we get a new AI model every day. You can't trade OpenAI, but you can trade Microsoft. What's Microsoft doing?
Microsoft.
Mr. Softy signing off. Mr. Softy's trading 530 and change on the bid. That would be up around $2.25. Market's a little bit stronger too, with even the S&P's up 10, Russell up 32.
Hey, Alaska Airlines. Have you ever flown Alaska Airlines?
Yes, I have.
Oh, okay. To like Denver or to Seattle?
I've flown them to Seattle.
Okay. So I was like, you weren't going to Alaska.
No, I've never been to Alaska.
Okay.
But I've flown them to Seattle. I've flown them in California. I can't remember from like San Francisco to Vegas. I mean, I've flown them, I don't remember, a bunch of different times. Probably like maybe 5 times.
Pat, have you ever flown Alaska Air?
I don't believe so. I may have done it one time. I don't remember.
They have like the animals on the tails of the plane. Tom hates it.
No. They don't have the animals. They have the
No, they have animals on the
caveman.
Indigenous person, don't they?
Yeah, the indigenous person.
That's
not a caveman.
Eskimo.
No, but they also have animals.
Eskimo,
No,
caveman.
animals
oh,
are frontier.
Sadnov, that was racist. That was racist right there.
Okay. Hey, well, Alaska
Frontier
Airlines.
has
Okay.
the animals.
Alaska Airlines is going international. Girl, what? They want to launch flights to London and Iceland. You are doing too much. They're adding daily service from Seattle to London Heathrow. That is a long flight. And to Reykjavik, Iceland next May. Reykjavik. That's what I'm saying it the Icelandic way.
I'm helping you.
You're not helping.
I'm going to
have
go
a
with Vanetta for 100 on
Do
this.
they have a plane that can go from Seattle? What do they have? I didn't know Alaska Airlines had like a 787.
I mean, it seems like that would be the first question that their team looked at before they made this press release.
No, I'm glad that they do, but I didn't know that they had
They
that.
plan to have at least 12 nonstop intercontinental flights from Seattle by 2030.
Nice.
Okay. I don't know what I'm doing here. I don't even know.
Sometimes life's decisions just bite you in the ass, don't they?
Hey, Airbnb set to report earnings after the bell. And here's something fun. Since the movie Poltergeist came out in 1982, the house where the movie was filmed went on the market for the first time. Exciting horror fans. Well, now you can do a movie themed stay by booking on Airbnb. That is a hell no from me. I've never seen Poltergeist. I'm not a big horror movie. But you can stay in the Poltergeist house located in Simi Valley. And the best amenity of all, you can have custom curated experiences where it feels like you're being watched in the house. No, thank you.
That was a scary movie.
Is that the one, they're here? Is that Poltergeist?
Yes, it is.
Okay, thank you, John. Yes. Yeah. I know the pop culture, but I can't watch scary
Poltergeist
movies.
was really scary. I
Okay.
didn't like it.
Well, you can
I
stay
don't
in
think
this
it'll
house.
stand the
though.
test of time, but it was very scary. I agree with you.
Okay, well, now
I mean, I haven't seen it in 40 years, but
Right.
Well, the house hasn't been updated since then, so
okay. Where is this house?
it's in Simi Valley. It's
Where's
in
that?
California. It's in
Okay.
California.
Oh, okay.
Do you want me to give you
No.
the coordinates? Okay. It sleeps up to 8 guests. There are 4 bedrooms, 2.5 baths, and it starts at $800 per night. And you still have to take your own trash out and clean. But okay. What are you going to do in Airbnb for earnings? Nothing?
I haven't traded Airbnb probably this entire year.
Yeah. All right, just figured it.
ABNB, we haven't traded like Tom said in forever. It is $130 stock right now. IV rank of 38. Expected move is just under $10. So it has a decent expected move with an IV rank of 38.
Okay, might be something to do there. Hey, there's a new ice cream flavor that's going to be available nationwide, but you haven't had this flavor since you were a baby. A new company called Oddfellows and Frida, a small batch ice cream company based in New York, have partnered to release a limited number of breast milk flavored ice cream pints nationwide. That's right, booby milk.
Oh.
Where is this place located?
It's based in New York, but this is going to be nationwide. It is not made, for all of you asking, from real human breast milk. The flavor is just intended to mimic it.
This is a bit of a reach.
Breast milk is sweet, a little salty, smooth, with hints of honey and sprinkles of colostrum. Features a distinct yellow tinge. I hate everything about this.
That wants to know where you can order this from?
I can get you the information. It is available on the Frida website while supplies last, and you can get it at a pop-up event in Dumbo, Brooklyn, down under the Manhattan Bridge, from August 5th through the 10th. So, get you some booby milk ice cream. What am I doing?
Thank you, no thank you.
Have you guys ever had breast milk? No, like your wife pumps, it goes in the fridge. You never got like curious. You're like, hey, I never have had it because I've never lactated. But if I were, I would taste it because it's. One time
we were in Miami, Sodnoff lactated, and some may have gotten in my mouth. I'm
just curious. Like I've tasted my dog's food. Like she gets like she had like the farmer's dog, whatever, some fancy dog food. So I tasted her food, but I've never had breast milk. Like I'm not anti-breast milk. Some of my best friends make breast milk. I'm going to move on. In a seismic decision last night from the NFL, the league announced they are banning ammonia and smelling salts in any form at games, including capsules, inhalers, and the smelling salts. They say the inhalants are not proven to be safe and could mask potential signs of a concussion. This upset George Kittle so much, he broke into an NFL broadcast and said that he might have to straight up retire because he uses these literally on every play. And he's like, there has to be some sort of middle ground. But I like him because he's a Swiftie now. So what are your thoughts on this? And have you ever done smelling salts?
Only one time when we ordered them for that event. We did some event. We came out as a joke.
Really? I want to film this for social.
Oh my God. It was
they are strong.
It was so much stronger than I thought they were going to be.
Well, yeah.
I couldn't believe how strong they were.
Yeah. Do we still have them? Oh man, I want to make a video.
I don't know, but they were so much stronger than I never knew how strong smelling salts were.
Right.
Crazy. I did not enjoy it.
Well, NFL says they banned. They gone.
Okay.
So,
I wonder why they're banning them.
I don't know.
Well, I literally said because the FDA issued a warning that they're not safe and that they could mask signs of a concussion. Because if you're smelling that, then you're going to appear more alert. And
they've been around forever. They've been around for.
Again, I am not the league.
I know. I'm just saying.
Anyway, that's that. Hey, finally today for my viral video of the day. I love when babies and pets are like best friends. Like I just think it's really cute when like your baby and your dog or cat like
dog rolls the ball to the baby.
Grow up together. Yes. But what happens when your toddler and your dog play fetch, but they're both kind of clueless? Watch this. It's so cute.
Oh no.
So it's stuck in the hood of his little coat. And the dog is like, where's the ball? The kid's like, where's the ball?
Oh, that's good.
Do you see it? It's in the hood.
Yeah, that's good. Oh, he pulled a fast one on. Thomas might come in the studios right now to hear the music.
Oh, it's just so cute. Oh, that's funny.
That was
Anyway,
very cute.
hey, that's my time. Right on the dot there. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send next. Back in 90 seconds. It's Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is up around 12 handles, son, about where they were for most of the night. NASDAQ up 41, Russell down $1.50, and the Dow up 132. Let's call the market a little bit unchanged here, Sadnov, after the last couple of days of sell-offs on the E-mini S&Ps. We're going sideways. Yesterday a little bit lower, today a little bit higher so far. I mean, volatility.
Friday down big, Monday up big, yesterday down kind of 30 handles, today up 11.
It's an okay move to the downside. I mean, that's a
choppy markets right here. Choppy
market. Volatility being choppy too at 1835, basically unchanged down in nickel. You can see here mid to lower range over the last couple of days. Bonds down 17. They look like the strongest of the group last couple of days, taking a little bit of a breather right now. Bitcoin catching a very small bid. The futures are up $270 to 114.4, significantly off of its highs, closer to its recent lows. Oil up $1.07, catching a little bit of a bid over the last 4 days, going lower. IV rank of 27. Gold down $12 after catching a little bit of a bid also last couple of days, going a little bit south this morning. Net gas catching a small bid from flirting with $3. Now I'll go right to the euro if I can real quick. /6E catching a little bit of a bid, which means the dollar is a little bit lower. Earnings, AMD was down around $10. It's still down around $9-ish. Uber was basically unchanged. It's still unchanged, maybe up 50 cents to $1. I know you didn't do anything in Disney. Lucid down 20 cents, Snap down $1.50, and SMCI down around $10. That's all I got, Thomas.
Yeah, there might be something to do in SMCI this morning. We'll see. Uber and AMD were just going to take profits Lucid,
Yep.
we're just going to hold on to, and Snapchat, we'll just wait 17 years and get back to even. It's 7:54 in the morning. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. It's Wednesday, August 6th. We've got a packed day. It's Tony and I from now until 10 a.m. this morning Central Time. We're based in Chicago. From 10 to 11, it's Liz and Jenny. They're on the floor of the SIBO today, and they'll be broadcasting from down there. And then at 1 o'clock to Nikki and Mike from 11 to 12, and then from 1 to 2, I'll be on with Dylan Radigan doing Truth or Skepticism today. So we should have some fun. At 2:30, Tony and I come back on at Do Last Call. So it's going to be a packed day. And don't forget, this Friday, a week from this Friday is our live event in Chicago. So if you're coming out to Chicago, just get your helmet on, come on out. It's going to be awesome. If you're on the West Coast, Mike, Nick, and Katie are in Seattle this Sunday at a place called the Crocodile. Show doors open at 5. Show starts at 6. You can sign up for it at tastylive.com/events. And you can sign up to see me and Tony at tastylive.com/events. And if you are coming to Chicago earlier and you want to stop by Tasty offices, kick the tires, say hi to everybody, we are going to have a little bit of an open house. It's a small one, but the day before from noon to 1 o'clock, we're in the West Loop. So depending on where you're staying in Chicago, if you are staying in Chicago, you're more than welcome to come on by. Just drop a quick email to support@tastylive.com. Everything else you can just get from tastylive.com/events. All right, we're going to go do a little confirm and send. This is the good stuff. Let's see the first one. These are emails that came into us from viewers all over. Oh, this one's a tough one. Okay, so you got to pay attention here. I have a strangle on in /ZN, the 10-year notes. These are futures options. If I open up the option chain, it shows that I'm short a 30 delta put and a 39 delta call. If I go to my position tab, it shows I have on negative 6.86 beta weighted deltas in this ZN position. But my ETF delta says that it's a negative 219 deltas. So is the 9 short ZN deltas, which is the 30 minus 39, right? Is the negative 6.86 right? Or is the negative 219 deltas right? Which one of these three is correct? And why don't either of these positions or any of these position tabs align with the option chain deltas?
They're all correct.
Bingo, bing, 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 bingo.
The 219 ETF deltas is to TLT. That's just giving you kind of a look at what your TLT position was. Just showing you how big ZN is, even though it's a smaller product than ZB. But they're all correct. It just depends on what you're looking at for its primary.
Yeah, the key answer here is that they are all correct. So when you subtract 30, which is the short put delta, from 39, which is the call delta, that's going to make you short 9 deltas in ZN. Those are ZN deltas. But those don't really mean anything if you look at it in the context of your overall position. So what Tasty does is we beta weight your positions to the SPY. And that means on the top of the platform, it will give you 7 short beta weighted SPY deltas. That helps in your overall position. But if you want to know what it equals in TLT deltas, which is the way we do everything, which is we give it to you in ETF delta, so it makes more sense. We're comparing apples to apples. Then it's the equivalent of short 219 shares of TLT. So that's all this is. Okay, we're just giving it to you 3 different ways. They're all right. Let's go to the next slide. We're the only platform that does this, by the way. That's why maybe it's a little confusing if you're coming over from somewhere else. But this is the best way to do it, and it really gives you the most depth what your position really looks like and how it fits into your overall positions. Tasty is light years ahead of any other platform in that regard. Let's go to the next slide. So I've been looking online for a proper implied volatility indicator on the Tasty platform, but couldn't get the right one. Basically, I want to see what an implied volatility crush looks like visually. Which indicator do you use? And how do you look at implied volatility on the platform?
Well, I look at implied volatility just on I look at the monthly implied volatility, but you can go to each individual strike too by setting one of your columns to implied volatility if that's you want to geek out on that. You can also go on the Tasty Trade platform and on the platform itself move volatility up and down on the platform itself, so you can see what volatility is going to do, what a volatility crush would happen to the options without any movement, or move the stock if you want to. So you can do all this.
Yeah, I mean, honestly, we want to see what an IV crush looks like. We really look at you can graph your IVR, and you can graph it for an individual option. You can do it for the stock, whatever. Tony likes to keep it on his, charting tab. You can see the IV crush in there. There's multiple places to do it. I look at IVR, what it's done, and you can see the IVR. You can see IVR obviously go down. We kind of just watch IVR, but you can do whatever you use. We use IVR as the primary.
Yep.
We look at it on the platform, and it's in.
But you can go to the analyze page and change your Greeks if you want to, and get your theoretical price of the options if you want to get even a deep dive in there. A lot of stuff you can do.
Yeah, but the simplest way back of the envelope, just watch the IVR, and you can look at it multiple ways. When it gets cheap, you can watch it go from high to low in multiple places on the platform. Let's go to the next slide. I'm 32 years old and funding my IRA. Since I won't need my money for another 30 years, I'm looking at investing about 90% of my assets in SPY or QQQ, and then using options for the remaining 10%. The question I have is this: if I want to simulate being long SPY or QQQ, how can I best do that using leaps?
If I want to simulate being long SPY or QQ, I could do this using leaps. Delta's king here. I mean, that's all you have to look at. I don't think you have to complicate this at all. So if you want to trade the Qs, the SPYs, and putting your assets into leap options, just look at the delta. And that delta, don't forget, will change over time. But on entry, that's what you want to look at, delta. I think that's easy. I mean, I would buy back month, sell front month, create it like a synthetic covered call, poor man's covered call, but that's a discussion for another day.
I mean, for me, if you really want to just use options, because it's an IRA account, it's got to be cash secured anyway, so it doesn't really matter. But sure, you could sell any put. If you want a higher probability of profit, just sell an out of the money put. It's very close to the same thing. I mean, I would sell the 35 delta put or the 30 delta put. If you want to do the same thing, that's what I would do. I'd go out, around, somewhere between 45 and 65 days, and just keep rolling over that 30 delta put into perpetuity. That's just that's the way I would do that. And if you want to do leaps, you can go out between 90 and 150 days. Totally fine. Sure. You'll go out you'll be able to get out probably, 90 to 150 days. Probably be able to go out like 5 or 6 strikes lower, so leave me a higher probability of profit. Let's go next slide. You had a question on Confirm and Send yesterday about skew and VVIX. I'm not familiar with those terms or those indicators. Can you please give a brief overview of them and why they might be worth monitoring?
I mean, they are worth monitoring, meaning they're good to know. It's not something that I look at every day, and I don't know if it's something that Tom looks at every day, but they're good to know. They're telling you what volatility is doing right now and what skew looks like, whether it's rich or on the cheaper end. How does that help you with your trading? Well, maybe it leans you towards one strategy or another. Like if skew was relatively high, you might be saying, okay, these out of the money options are bid up. Maybe I'm going to do a strategy that takes advantage of that. VVIX, on the other hand, would be volatility on volatility. What's volatility doing? Is it relatively low or relatively high? Again, leading you to a strategy. But All of these are wonderful to know. I think IVR is the easiest thing to go to and not complicate it because it pigeonholes itself into that one stock that you're looking at. This is more of a broader kind of telescopic view of volatility.
VVIX is an indicator which shows what the volatility of volatility is. So right now, if I just look at, hold on, let me give it to you.
It closed at around 97.65.
So VVIX right now, 97.65 is telling you that the volatility of volatility is 96. Now,
it's gotten as high as almost 200, and it's gotten as low as almost 80 to give you some parameters.
Yeah, I mean, we're kind of mid-range right now. It usually stays between like 80 and 120 volatility of volatility. So when it gets towards 80, you know the volatility is really cheap. When it gets towards 120, 125, you know volatility is really high. And that's how you use that, but there's nothing else to gain from it. It's not, you can't trade that index. And skew, which is SKEW, is currently, hold on a second.
SKEW is trading at 149 and change. So enough. It too is kind of mid to lower range.
Well, actually, 140, 150 area is kind of like a little on the high side. 135 would be mid-range. 120 is low. 160 is high. We've seen it as high as 170, 174. Skew basically tells you how the market is perceiving the risk of an outlier move. So when the skew is really high, it's saying, hey, what happens in the worst 1 or 2% of all cases? You know, how much nervousness is there out there? When the skew's up over 150, there's a lot of nervousness for outlier moves. And when the skew's down under 120 or so, there's not much nervousness for an outlier move. It just gives you an idea of kind of market sentiment. That's all it is.
Well, in the last month,
it's not tradable.
What's that?
It's not a tradable index.
No. But in the last month, and by last month, I mean the month of July going into August, it's been as low as, let's just call it, 135 or so. And it's been as high as 160 something. And it's sitting at 149. So that's why I say it's more mid-range. But yeah, okay, maybe the higher end of the range.
Let's go to the next slide. Thinkorswim brought option trading to the self-directed retail world. Since then, you've also seen futures trading catch on. If you look at your crystal ball, what's next? Do you think it's a new product category? Do you think it's possibly just a new margining system for equities that makes equities competitive from a capital efficiency perspective?
You're the great guru. Give it to me, Saznov.
I mean, I wish I knew the answer to this question. I feel like it's going to be a combination of different digital ecosystems and an expansion of products into those. So in other words, I think that the retail world is going to move in direction to broaden what you can do, like, for example, political betting, events-based, that kind of stuff. But the other side to it is I think we're going into an era where a lot of stuff that we do will be tokenized so that everything's going to be more global in the future. I think that's the next frontier. It's going to be very global. And I think that's going to be good for everything. Is there going to be a new margining system for equities? I sure hope so, but I don't think we're anywhere close to that yet. I think more than likely we're closer to globalization than we are to digitizing a new margining system.
What do you mean by globalization, Sadler? I mean,
meaning that Tony Battista might decide that if you want to trade a stock that only trades in London, or you might want to do something that's in a cash market somewhere else, you're going to be able to use a single currency like a stable coin, and you're going to be able to do something anywhere you want in the world, and you don't have to worry about clearing, quotes, or any of that kind of crap. Because it's so hard right now. You're right now, Tony and Tom we are trapped to trade a very small amount of U.S. equities, U.S. products only. And if we want to do something anywhere else, it is a royal pain in the butt. Trust me, we know, because we own shares of a stock that's traded on the London Stock Exchange. It's not easy.
Exclusively there, yeah.
Yeah, you can't trade back and forth. It's not none of that's easy. And if that's what I mean by globalization, so that you can use a different form of currency and you'll be able to trade this stuff. I think that's what happens.
Gotcha.
Let's go next slide. And the last one. What is the drawback, Tony, to using wide iron condors versus strangle?
I guess capital requirement would be the biggest positive. The biggest drawback would be that wide iron condors move slower than strangles, because you have that two wings, one on each side, that you bought to reduce your buying power or define your risk, depending on how you want to look at it. I would say they're a little less sensitive to volatility contraction than a strangle. I think that's the biggest drawback. You collect less premium, obviously, on entry too, but that's a function of the strategy.
I mean, the drawback to using a wide iron condor is just, I mean, your probability of you're going to give away a little bit of your profit potential by buying those wings, but you're going to be a little bit more capital efficient. First thing I was going to say was that it might be there's more markets involved, so that you might not get as good a price. But I think it really depends on the underlying, because sometimes a wide iron condor will get you a better price than the naked strangle. So I'm not so sure that's it. The other advantage,
wide iron condor is not going to get you a better price. You mean you might be able to get filled easier?
Yeah, filled easier. Okay. Okay. The other drawback of a wide iron condor is it's just a little bit more difficult to manage the trade. So like adjusting the trade if something goes wrong, it's a little more difficult, but that's the real drawback. It's just a little more difficult to manage the trade.
Very good, sir. Let's take a quick 90-second break and come back with an option jive. I'm back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious backtest on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically, instantaneously, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring. And then it was all of a sudden, I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It's Option
Jive.
Tomas, Option Jive is right. Something's jiving with the S&Ps. They're up 17.
Yeah, they're up
17. Off about $10 off of their highs, 30 handles off of their lows.
Yeah, it seems like we're in a churn and burn move right now.
Yes, it does.
Uber's literally unchanged, and AMD is down $8. These are nothing moves. Nothing at all. Kind of crazy. Anyway, it's 9:16. Sorry, 8:16. Let's get moving here. We're gonna run out of time. So the research team put together a piece talking about how often do large gaps get filled. Large gaps. In order to qualify as large, you got to have a move of, I think, let's just say, I'm guessing between 1% and 2%. Let's say 2%. So if you had a 2% move, how often do you think they would get filled?
In what time frame? Like, what are we looking at here?
I don't know. I guess like within
the last 2% moves have gotten filled pretty quickly. Like, I mean, we're looking over the last year or two.
When we say get filled, that means like if you gap up 2%, which would be 120 points in the S&Ps, then how often does it go back and touch all the way back at the bottom? Or if you open down, 120 handles, how fast does it get back up to that level? I would agree with you. The last couple of times, the moves have been pretty quick.
The down moves have been met with movement with pushbacks almost immediately.
Yeah, I mean, we've been in a bull market, so the down gaps get filled quickly. The up, not so much. But let's see.
Sure.
So risk and volatility become the main themes of the stock market. What's really catching traders off guard is how quickly everything can flip and completely reverse. Friday, we were down 100. Monday, we were up 100. Just like that. So we're seeing this play out through all these gap ups and gaps downs that have been happening recently. Put a bunch of them on the board for you. Let's go to the next slide. Some traders use large gaps as trading signals. But here's what we really want to know. When stocks make these big moves and create gaps, how often do they actually come back and fill them? And how long should we expect to wait? Good question. And you know what? I know this answer is going to be freaking random. I know it is. Let's go to the next slide. It's going to work out to what's exactly what it should be mathematically. So we analyzed 20 of the most liquid S&P 500 stocks over the past 10 years. We looked for days when the prices moved 2 standard deviations from where they closed the day before. These are the significant moves that stand out. Then we tracked whether the stock eventually filled the gap by returning to its original price. Okay?
Okay.
Next, please. Here's what the theory tells us. In a completely random market, about 5% of all moves should be about 2 standard deviations. So logically, there should be around a 5% chance that any gap gets filled the next day. So we're talking about next day, Bat.
Okay.
But does the real market actually work that way? Yes or no?
Does the real market work that way? I have to think it. Yes, sir. Yeah, it's got. I mean, the numbers are going to work out.
About 5% of all the moves should be 2 standard deviations. So logically, there should be a 5% chance that any gap gets filled the next day.
Probably a little. It's probably a little less.
Does
probably
the real market actually work this way? I'm going to agree with the bat. I'm going to say, yes, it does. Let's go next slide. Turns out that the historical performance matched theory pretty well. About 5% of the large gaps filled within one day, just like we'd expect. We also noticed that gap downs had a slightly better chance of filling than gap ups. This is consistent with what we'd expect in a strong bull market, where stock returns follow a log normal distribution. There you go. Spot on.
But
Law of large
numbers. Anticlimactic, I'm not going to lie.
Law of large numbers always plays out that way. Let's go next slide. So the follow-up question is this. What happens if we give it more time? So we checked what happened over 5 days and over 45 days.
Okay.
Next slide, please.
Now you might get something here.
The results became more significant when we extend the time period. With more time, the odds change dramatically. Over 45 days, 3 out of every 5 large gaps eventually reverse back to where they started. So this is pretty good. So days to fill, the fill rate, 1 day, 5%, 5 days, 20%, 45 days, 60%. Call that cyclicality. So much for your trends, trend boy. Let's go next slide.
Now you're just being mean.
This matters a lot to option traders. Strategies like strangles and iron condors need underlyings to calm down work much better when you give them 45 days instead of just a few days. Same goes for the contrarian trades when you're betting against the initial move. Next slide, please. So on the takeaway slide here, gap downs show a slightly higher fill rate than gap ups, indicating an asymmetric market recovery pattern. Large gap reversals occur independently and aligned with theoretical statistical models, appearing unaffected by external market factors. And duration significantly impacts success rates. Gap fills increase from 5% at 1 day to 60% at 45 days, supporting longer dated strategies. Tasty's all about.
And really, that's the kind of takeaway right there, right? So enough longer dated strategies when you're looking at these. If you're looking for any type of gap fill, and that 60% number, I never knew about it. So that's a pretty good number to have there too. So
I could not agree with you more. I could not agree with you more. It's a piece that does a lot of validation.
Yeah. We went through it quickly, but there's a lot in there. You should go over it again. We're gonna take a quick 90-second break and come back. We got the opening bell coming at you next. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious backtest on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right. With the opening bell, set to open here in about a minute and a half. Even the S&Ps up 11, more to where they were all night, at least when I was watching them. And when we came on the show, sitting up around 11. NASDAQ up 39, Russell up 2 and change, and the Dow up 115. Volatility in by 15 cents to 18.25, mid-range for the day, as are the E-mini S&Ps. Bonds down 17, 115.19, and Bitcoin hanging out up $175 after selling off yesterday. Sadnov, opening bell set to happen here any second. AMD was down around 10. Uber was up about 2. I can't remember. Yeah, it's up around 1 right now, maybe even less than that, up around 50 cents. Disney down 2, Lucid down 20 cents, Snap down $1.50, SMCI, your biggest mover on a percentage basis, down around $10 to 47 and change as we await the opening bell, Sosnoff.
I'm going to do something in there.
In SMCI.
Yeah.
Yeah, I can see that. IB rank of 30, stock going lower. I don't think you're gonna like the markets in there on the opening, especially. But you're gonna have to wait until things calm down in there a little bit. They're gonna be dollar wide. Let's take a look at them now. They are about $1 wide, so you got to take it easy there, my friend.
Me no like them.
Don't like the markets.
I just got filled on something.
Yeah, you got filled on putties and Uber. You got filled at a nickel.
A nickel.
A nickel. Uber unchanged, up 3 cents, down 6 cents.
Just taking a quick little look here at some
Uber, a little monster home run for you.
Uber?
Yeah.
Yeah. I'm gonna just put some orders in SMCI. Let's see what we do. Uber. Yeah, Uber's a good one. Definitely, I don't think anybody was thinking unchanged.
Unched.
Ooh, AMD down 1170. Pretty big move.
Yeah, for sure. Let's see what else is moving this market to the downside. You just mentioned AMD. It is down 11 and change. SMCI down just about $10, 9.5. Lilly, which has earnings coming out tomorrow morning, down $8. Upstart down around $5. Toast down around $4. CRCL and Disney both down around $3 and change. On the upside, you've got ALAB, never heard of it. Astera Labs, up $30. Shop up $23.
Shopify is up $23.
Shopify up $24. That is correct. It had earnings this morning. I missed it, Sadnuf. I'm sorry.
Thank God you missed it. Your incompetence saved me a lot of money.
Saved you again, Sadnuf. Saved you again. Yeah, look at Shop. Unbelievable.
Wow, that is not a good number.
No, Lovin up $10. Netflix, I said, up $7. McDonald's up around $5. Apple up $5. Sound enough. Reddit up $4. Market, at least for the Nasdaq, taking back what it lost yesterday. Looks a little bit stronger today than yesterday.
Why is Apple up $5? That's crazy.
The news that Vanetta told you of possibly having a new phone someday, maybe in the future.
Well, Shopify didn't work out good for me either. 152. What the hell do I have in here?
Shop. Let's take a look here. I probably told you about it yesterday. I'm sure
you did not. Thank you very much, but you did not, sir.
Well, you have an iron condor on. I mean, for crying out loud.
I just was looking to see what we had on. I have no idea.
I mean, listen, you got an
you didn't tell me I had a position. You didn't tell me I had earnings.
What were you going to do with the $5 wide iron condor? What were you going to do? What were you going to do with it? What were you going to do with it? You already had a Sissy Mary position. What were you going to do with it? Make it more of a Sissy Mary? You couldn't go $2.50 wide. There was only $5 strikes.
I probably would have taken it off and taken my profits. Knowing what I know now. Thank you very much.
Now you're going to roll up puts and make more money.
No, the markets in there suck.
That's why we didn't trade it.
All right. The good news is Uber, we're out. Uber was good, down $1, but all the earnings trades came in. And what was the other one? AMD. AMD. Ooh, AMD was better than Uber. We're out of that.
AMD, you are out of it. You got filled at $1.24.
Snap is a pig, just so you know.
Mm-hmm.
Nobody should ever have to trade Snap ever.
My Taiwanese sources are telling me that Apple has news about a deal to be built in the USA. Sounds enough to be announced later today. They build it in the USA.
And that's Snap. And then the other one was, Lucid. Let's take a look at that. Lucid. Okay.
Volatility in by 15 cents.
Yeah. Nasdaq's up big. That's just Apple. So I looked at this SMCI, trying to get something done in there.
Let me guess. Not tradable at the moment.
No, I think you can trade it. I'm going to change. I'm going to cancel my order and see what we can do. I think now they got the markets a little better. IV rank really dropped down.
Yeah, of course, after earnings. I mean, that's not unusual. I mean, it was in the 30s. It's in the 9s now.
I know. I wanted to do a post earnings trade in there just for a day, but honestly, I don't think I'm going to get filled. Oh, I did. Okay. I sold the 4060.
Yep, strangle.
Yep. Remind me again never to trade Snapchat, just so in case I forget.
You ask me to do this all the time with you, and it never comes to fruition. The only thing you know about Snap is you just got to have short delta in there. That's all.
Yeah, Snap
short delta wins.
What? Yeah,
short delta wins. Snap.
Yeah, Snap. You just have to be literally short delta every day for forever and ever.
Mm-hmm.
And Reddit is a freaking stallion.
Our DDT up again today, up $8 and change. Look at the last couple of days Reddit's had, going from pre-earnings around 140 some odd dollars to 207.
Yeah, the earnings, since their earnings announcement, it's been crazy.
Mm-hmm. Learning with its eyes back at 220 something.
Yeah. Anything else you see?
I mean, no. I mean, the usual suspects on the upside. It's kind of a mixed bag of tricks here. Russell and the Dow just turned south to unchanged. Even the S&Ps are only up 5.
Doesn't that seem a little weird to you?
Yeah. It certainly does a little bit. I mean, you got Nvidia down around $1. AVGO basically unchanged. Microsoft basically unchanged. Palantir basically unchanged. So you got some big stocks unchanged. You got Netflix up 8 and Meta up 5. So a little bit of tug of war. Tesla up 2.
Yeah, we're gonna have to roll some calls up in Apple Schmapple. But what else do you see? What else is there to do other than Reddit, Apple? Anything else that's crazy this morning?
No. I mean, Disney was down 2. It's down around 5 and change right now. I'm not looking at Scoopy Disney at 112 though.
No, me neither. Okay. All right. I made my adjustments. I'm good.
You ready to take a quick 90-second break?
What's funny is the earnings cycle has not been. I was worried that it was going to be bad, but it's been okay. I wouldn't call it good. It was not nearly as good as last quarter. But
but it probably exceeded your expectations with volatility being so low.
It exceeded my low, because we've just been going really wide and staying small. It's been okay. Nothing great, but kept us busy. It's okay.
Awesome. You know what, Sosnoff? Let's take a quick 90-second break. You want to?
Sure.
We'll come back. You know what we got next? What's your assumption? We're going to find some trades for you, Sosnoff. We'll be back in 90 seconds. Let's Tasty Live. Even the S&P's up 4.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with, what's your assumption?
I'm ready.
Now we can do it.
Yeah, I'm ready. Let's do it. Let's see what we got.
Now we can do it.
Let's see what we got here, John. These are emails that came in from viewers all over, and we have not even seen these yet today. So Adam from Jersey City, Affirm, bearish 45 days. Stock is nearing its yearly high in February. I'm bearish on this one. Earnings on August 28th. Sell a call vertical spread, AFRM. Don't trade this one very often.
Mm-hmm.
Wow, the stock is $75. Haven't looked at this stock in a long time.
Evidently.
Evidently. Which one are you doing here?
IV rank of 41 sounding off is pretty good. That would tell me that earnings are coming, and they are August 28th.
We'll do a little, what does Adam want to do? He wants to sell a call vertical spread. We'll actually do a
bearish, that's correct.
We'll actually do a strangle here, but we'll sell a bigger call. What's the expected move? $14, stock 75? Fine. We'll sell
in 45 days, yes. It's $15. Just under 1467 in September.
Yeah, we'll sell the 90 call and the 60 put. We're gonna do something. We're gonna sell a skewed strangle here, and just to see what's going on, and so we can start watching it. I like that better than the vertical spread. 511. It's a big call, small put. It's a short position. All right, Adam. Thanks. It's a good one. We hadn't looked at a firm in a long time. Let's go to Ajit from Chicago, Illinois. UNH. We got a bunch of UNH positions on. UNH down $1.35 today.
Been trading it more from the bullish side, right?
Yeah. We've been leaning a little long, just like you are, Ajit. Looking at the same thing. He's looking at a 220, 290 risk reversal for a net credit of 60 cents. Unlimited upside to what your democratic heart desires. What does he want to do? 220, 290. We actually have the 220, 290. We have the 220, 290 strangle on. 220, 290 strangle. He wants to do the 220, 290 risk reversal. So he wants to sell the 220 put, buy the 290 call, right?
That's what it says. Yeah.
I hate that trade, but I do like the 220, 290.
You'll find something else.
I do like the 220, 290 strangle in there. And we have it on already. And I will add to the position at 624. And me like that. Let's go to the... Say, I got a little long, Ajit. Not as long as you wanted to, but long.
Yeah, I mean, you sold more premium with a little bit of long delta.
Yeah. APP. So... Austin from Pueblo, Colorado. This is a tough stock to trade. I'm bearish on it too. I got out of a position the other day in there because it's got some ugly ass markets. Let's see. APP. He wants an earnings play. Winter earnings, August 6th. And your bearish feels way overvalued to you. Okay. Kind of going sideways for quite some time. Let's see what the markets are like at set.
I mean, APP caught a bid today, right? Up $10, 387.
Yeah. We have no position in there. We had a position. We closed.
It has earnings enough coming out after the market closes today. You might want to wait.
Today? Yeah. APP. Oh, today's August 6th. Yeah. Well, he wants to do an earnings play.
It's okay. Usually you wait till the end of the day, especially with the stock moving $10, but you do you.
You do you. What's the expected move here?
Expected move is $59.
$59. The stock's trading for $380. So let's go. Let's sell the 500 calls, 2 times the expected move. And let's say the 265. Let's see where the puts are. Ooh, not a lot of juice. Oof, not good markets. Oh, this is a tough one.
Yeah, that's a tough one. I mean, we've gotten stuck in here with $2 wide markets before.
Yeah, you can get stuck in this sucker.
If you want to do anything, you're going to probably do something. I know you want to be naked in here, but it's almost a $400 stock. It uses a lot of buying power. I think defined risk is probably the way to go. if you're going to do anything?
I think you reduce your size and you have a little fun. But I'm trying something. I'm trying, Austin. Let me just see something. I'm going to see where I can fill something in here. I don't trust this stock, so I'm going to be very careful about how aggressive I want to get.
Okay.
I'm working some strangles. They're a little bearish because I'm with you on this, but nothing at the moment. Nothing done. We're working it.
I'm working it, boss.
We're working it. Let's see what we got next. I'll come back to this. From Lithuania, Audris. I think that's how you pronounce it, Audris. JD. Got a bunch of JD positions on. I like JD. Right now, we're short some puts in there. What does he want to do? He's bullish. SEP. Buy the NOV 30 call, sell the SEP 35 call. All right. He wants to buy the NOV 30 call. Okay. He wants to sell the SEP 34 call. Well, if you're going to buy the NOV 30, let's sell the SEP 33. I'll do that trade. Mid price is about 238. Let's see. 239. Take a fill.
Penny off a mid price. That's good.
Take a fill, Phil. Yeah, I like that trade actually. Where we're already long it stock, we have not made any money in there. And this APP, I can't get filled.
Yeah,
I don't love this for
stuck in there. Remember when we traded it once before? You were like, "Remind me never to trade this again unless you got a directional bias." Blah blah blah.
I told you I took off my trade there yesterday. Couldn't get filled on barely. Took forever to get filled on like an iron condor or something. Let's go next slide. Taylor from Missoula, Montana. He's looking at HIMS, which had earnings yesterday. We were in it yesterday. We are not in it today. We're flat HIMS.
No.
Ivy rank is still 32. Super
32,
great.
yeah, it's not bad after the move down
Not
another
bad.
$3.
Down another $3. Yeah, they whacked this thing. This thing was in the high 60s. Now it's down to the low 50s. Neutral 47.5. 47. Sorry. 47. Well, he did this before he saw the stock down $3. So let's go 45. And what do you say? 75? No, you can't do that. Let's do 70. If you want neutral, go delta, let's see, 21, 22. I think he goes 70, 43. And it's going to trade around 388 is my guess. No, maybe lower. I think that, filled 388. We'll take it. All right, Trevor, we did. Yeah, I mean, I'm fine with that position. Let's go to the next slide. That was a different trade. So there's still nothing done in APP. I don't think we're gonna get filled in there. Max from Houston, looking at Caterpillar. Caterpillar reported earnings. Forward guidance is weak. Hit all-time highs and created a double top. Sell the SEP call spread above the all-time highs. Caterpillar. Caterpillar's down $2 today.
Yeah. What do you think of Caterpillar here, Sosnoff? Ivy rank of 6. Stock down $2, but near its highs.
Yeah, I wouldn't do a $50 wide spread in there.
Yeah, that's what I'm saying.
These are tough markets too. Where does he want to sell? 450, 500 now. Let's do. I mean, I would sell the. $450, $460. for if it gets to $3. It's currently trading, looks like around 280 something, 282, 283. Let's put it in a little above the market, $3. Let's see if we get filled on a little bounce here. As the spoos bounce up, Max, I want to see if they come for it. We'll offer the call spread at $3 and see what happens. Let's go to the next slide. Drew from Reno. Thinking about a bearish earnings play since it's been trading around 200. Maybe a risk-defined strategy works better for a Johnny trader. I don't know what VST is.
VST.
Vistra Corp.
Yeah, I think we've traded it before, Sadlov. I'm not 100% sure.
Earnings tomorrow.
Yeah, down $4. Earnings tomorrow before the market opens.
God, you guys are killing me. Stocks
August
trading.
option with 30 cents wide. Not a huge amount of volume here.
This is a tough earnings play. I generally don't. These are the ones that make me nervous because I don't. Let me try September. Maybe we go out and the markets are actually better. Go out a little bit further. I would do a September trade for earnings here. I think the markets are a little better. They're actually a little tighter. The expected move is 30. Stocks trading 205. So you can go 2 times the expected move. 30, 60, 365, 155-ish. Yeah, I could do that. It's kind of like I tried a wide strangle in here, Drew, in September, just because I wanted to see, what the fill rate would be like, and I didn't like the August markets at all. The time frame, August 2nd. I mean, I didn't like the weekly options.
So you went into September.
Went into September. The markets were tighter. Got filled right at mid price. I like that better. Let's go next slide. Roberto, bullish in Intel. No stopping this beast. Yeah, there is. Selling the 18 puts for 33-cent credit. Unfortunately, and this is a PIG pig that we're already long. Stock's down 23 cents today. Intel trade SEP 8 stocks trade. You got to do the 19 puts. They have at least a little more juice. 66 cents. I mean, the 18 puts in SEP are trading for 35 cents today. Markets are a penny wide. I'm already long Intel. I just added to the position, Roberto. Hopefully we're right. Hopefully.
For once in your life.
Hopefully, for once. Let's go to the next slide. Garrett, from the state of Washington, DKNG. Haven't traded DraftKings in a while.
Not since Mickey got you in this.
Yeah, not since that little son of yours cost me some money in there. What do you guys think about
$45 side have been going sideways forever. 31 IV rank and earnings tomorrow today after the close.
Today after the close, huh? What do you think here? Good, bad, ugly? Why does DraftKings feel like Snapchat to me and they always miss?
I don't know.
What's the expected move?
About $4, just under for the next 2 days.
About $4.
That's correct.
About $4. All right.
About $4.
I'm just going to sell naked puts in there.
Oh, even though you think it's going to go lower, or you feel like it feels like a...
Yeah, I don't want to sell any calls.
53 cents, you got it.
I'm just going to sell some 53-cent puts. I think that I don't need to sell the calls. I just sell more puts. Kind of like that play better. Sell some puts in there. Doesn't always work, but what the hell? Let's go next slide. I don't want to be short any calls in there. Caesars is cheap relative to Las Vegas Sands. Aaron, Aaron. I have not traded Caesar's Palace. CZR.
That's correct.
$25 stock, and it has not had an uptick. And what's the other one? LVS. LVS.
Las Vegas Sands. You're familiar with that? Trading $52 and change, up 16
Has
cents.
not had a downtick. So what we're going to do,
rank of 2.
we're going to sell Las Vegas Sands, CZR, and we're going to buy Hail Caesar. All right. I bought Caesar's Palace twice, sold Las Vegas Sands once. I think that's the ratio, right? They're $25 stock to a $50 stock.
Yeah, and
they got to have
Ivy rank,
similar volatilities.
I mean, the monthly implied volatility in each one, Caesar is a little bit more volatile at 48.
Hail Caesar. So we bought, we did the ratio of 200 shares to 100 shares. 200 shares of Caesar's long, short 100 shares of Las Vegas Sands. You know, I mean,
it's how you roll.
It's how we roll. Love a little Caesar's Palace. Every time I can't think of Caesar's Palace without thinking of, you know, the movie when he walks in and he says, you know, did Caesar really live here? You know, Hangover. In Hangover. Yeah, you know, Caesar really live here? Hail Caesar. We have spent many a night in Caesar's Palace. Let's just leave it that way.
We have.
Let's
and
leave
I've
it that
spent
way.
many a day trying to make up for many of those nights in the Caesar's Palace Galleria there. Yes.
Well, I had a good night of Pai Gow the last time I was in Caesar's Palace for the whatever concert that was that I had to see. Whatever that country guy.
You had to see. You went wearing cowboy boots. Who you kidding?
Whatever that country guy was.
You had to.
Who did I see again? Oh, Blake Shelton.
Who do I know?
Whatever torture that was. I did make my way out to play a little Pai Gow and blackjack, so I was happy about that. Anyway, yeah. So let's see what we got here, John. I think we did 8 out of 10.
Survey says 8 out of 10. So I don't know if you are correct.
So, for fun, we did a skewed strangle in a firm. That means we sold a bigger call than put. Give us a little downside delta. UNH, we sold a strangle. APP, we passed. We didn't get filled. It's a crappy, markets are wide. JD, we got long. Forgot exactly what we did. Let's see.
In which one?
Oh, JD. I think we just sold puts, didn't we? Can't remember.
In JD, you.
Oh no, I'm sorry. We did a bullish diagonal. We bought the 30 calls in November and sold the 33 calls in September. In HIMS, we sold a strangle. No delta, just completely post earnings, delta neutral. Caterpillar, we never got filled. VST, we sold a strangle for earnings. Intel, we sold a naked put. DNK, we sold a naked put. And Caesar's Las Vegas Sands pairs trade from Aaron. We bought Caesar's, sold Las Vegas Sands. We bought 200 shares of Caesar's to shorting 100 shares of LVS. That's the ratio we used.
Very good, sir. What are we going to do now?
We're going to cry because the NASDAQ's up a lot. Apple's up, $7. That doesn't help the good kids.
No. We're going to take a quick 90-second break and come back. We got the scan options, man. My man Jacob's going to make you feel better. Sound good to you?
Sure.
Sound good to me, too. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend. You know what that means? We got my man Jacob in the house, the skinny on options. Matt, how are you, Jacob?
Good morning, Tony. I am well. I'm excited. I think it feels like a good week so far.
You see, Sadnov, that's the way I want you to come in the room. Seems like it's going to be a good week so far. Everything's going good. You know, like I need a little bit of that from you.
I got that. I give you that every day.
Give it to you every day.
And I need a little bit of that mustache action too. I need a little bit of that too. Can you give me that too?
I can't do that.
It'll take them a few weeks.
I can't do that. That mustache stuff, that's special stuff. I mean, you got to have. That's a different skill set. I'm not there.
I'm sure you'll figure it out someday.
Yeah, I'm sure you will too.
Tony, how about you? Are you gonna grow one?
Someday I'll grow up. Yeah.
When do you grow a mustache? You give Tom a hard time.
In my neighborhood, mustaches were not they're not the thing. You know, I grew up with no facial.
You can live your truth, Tony.
I know. Some things are go all the way to the bone. You know what I mean? You can't take the spots off a leopard.
Truly, you are the leopard.
But I can grow one, unlike Sosnoff. You know.
No, for sure. I can see it. It's coming in already.
If you see my son, I mean, he gets it from somewhere. He'll get it from his mom, but I don't think so. Sosnoff, don't say anything.
Yeah. We're gonna appreciate his mother's lovely mustache.
His mom's mustache. His mom's mustache was beautiful.
Don't say a word. Don't say a word. Don't say a word.
It's already done. All right. Let's.
Hey, thanks, Saz. I owe you.
Speaking of your son, he may come on at some point. Let's get into the segment before that happens. Yeah, so we're going to unpack some backtest statistics. Last week we did a nice job, I thought, of we went over sort of a bunch of the statistics that you look at before you place a trade, the sort of things that the platform will show to you and that are worth considering, when you're evaluating, am I going to put this trade on? But the other thing that we do a lot around here is we look at historical data, right? Either in the platform via the look back tool or in market measures pretty much every day. We do a lot of back testing around here. And so I thought that partially because we had a number of emails in the research inbox that were people being a little bit confused by some of the summary statistics we present, I thought it'd be good to just sort of go over the various ways we look at back tests to sort of break down what it is we're saying about them. And I think my main takeaway for the day is going to be that it's less important what statistics you look at, and more important to make sure that you're choosing a range of them, like at least one positive statistic, one negative statistic, and then making sure to understand what those ones are telling you, rather than trying to incorporate all of them at once into your trading decisions. So let's look. Backtesting is a very powerful tool. It allows you to develop trading strategies and to become more experienced as a trader without going through all of the actual painful experiencing. But this shortcut to experience means that you've got all these like comprehensive results, really large scale things coming out of the backtesters, right? If you go to the platform and pull up look back and run any sort of study, you can go to the logs on the far right, which is this like fully auditable, downloadable set of your data. But it also means that it's sort of overwhelming and impossible to directly make a decision about what you're actually going to do. So today we're going to examine how we examine backtests. To try to pull apart what are the most important features. So let's look. I think sort of the top line number that we typically use on everything is the average profits and losses. Let's go forward one, John. The average profits and losses, which is a very simple metric. It's just the total profits and losses. So right from the beginning of the study till the end, how much have you made or lost, divided by the number of trades to get you sort of a per trade thing. And this has a really nice relationship to the probability of profit, or like the win percentage, same thing. And the size of average winners and average losers. This is a mathematical fact based on conditional probabilities that if you split up the winners and multiply them by the rate of the frequency of winners, the probability of profit, and then the losers and the rate of losers, which is just going to be 1 minus the probability of profit, you get the exact same thing as the total average. So this is sort of an alternative way we sometimes look at things, especially when we're trying to pull apart, is it that you get very frequent small winners and occasional big losers, or is it, sort of 50-50 of equal size? Where did this total profits and losses come from? And then these are oftentimes normalized in one form or another. Either you can change profits and losses into returns if you divide them by the initial capital. Right, that just normalizes everything to percentages. The other way that things get normalized is by time rather than by initial capital. Annualized is almost always done as returns. It's very rare to do an annualized per dollar. That's just a little strange as a thing, but annualizing a percent return means that you're, instead of looking at the percent return over this month and this one's over 7 days and this one's over 6 months, you just make everything to the year rate. And this gives you sort of a much more apples to apples way to compare something. And this one gets called the compound annual growth rate, is sort of the fancy term for taking returns and normalizing them to an annual sum. And then the other thing that we consider, especially around here when we're thinking about things like really quick trade management, right? If we're taking profits quickly or getting out of losers rapidly or closing trades at 21 DTE or something like that, then sometimes we want to think about not just profits and loss per trade, but profits and loss per day, right? Because if you get out of the trade, you can then redeploy somewhere else. So it really doesn't matter, what the total profits were. If it took you twice as long, it may be, and on the scale of, day-to-day trading, active investment, profits and loss per day, which is oftentimes just in strict dollars, can be more relevant than, an annualized number, just because, if you're in there trading every day, then that's the number that you're going to feel and see more directly. The annual one isn't really going to come up if you're very active. So those are our averages and normalized. And then the other thing that we want to look at sort of is Typically, when we present a market measure, and I think I want to say that this is a good advice for when you are looking over your look-back results, you want to like focus on one average normalized result, right? Your average P&L, your return, something that gives you just a net look at the profitability of this strategy. And right, and if something wasn't profitable in the past, it's maybe not that appealing to do in the future, though that's not a guarantee either way. But the other thing you want to pay attention to is the risk. And then there's a lot of ways to try to measure risk. And we've done a whole segment on a variety of risk metrics. And this one is going to be sort of a more narrowed down, the things that come spitting out to you at the end of a back test. So let's look for the next slide and see them. So actually, the BPR is before the back test. BPR is before you get into a trade. BPR is very oddly, it's like the least grounded in some sense, right? Because it's just a regulatory or brokerage decision of how many dollars they want to make sure you have in order to place this trade. But it's also like one of the most relevant risk metrics because it has the most direct application to what trades you can and cannot place. And then sort of by virtue of the fact that there's smart people working hard, it does a pretty good job, but it's like the least trustworthy measure or the least theoretically grounded because you can't compute it yourself. You have to ask the brokerage firm what they want to charge for it. You can compute the minimum yourself, but in actual practice, you just have to check with the platform what the BPR for any particular trade is going to be, right? For a defined risk trade, it's going to be capped at the maximum loss, but for an undefined risk trade, it's going to be something else, right? The regulatory minimum is you consider a 20% move in the stock or passing the strike by 10%, and you see which of those two has the larger loss. But in general, it's very relevant to your trading decisions, but it's not actually like a theoretically grounded piece of information. Right? A 20% move in the stock is very unlikely over a 1 day or 1 week time span, and is quite likely over a 5-year time span, and yet the BPR doesn't distinguish between the two. Next thing that we do is risk metrics, sort of the first thing. If you're just, if you downloaded the look back logs, you put them into your favorite software like Excel or Python or anything, and then you just ran some normal statistics on it, you get a bunch of dispersion metrics. These are very popular because they're more broadly applicable than just to trading, right? These apply to all sorts of studies, any sort of science that gets done or statistics. These dispersion metrics come up. The most common of them is standard deviation, which is the square root of the average of the square of the difference to the mean. But these are all just measures for how wide, right? We started with the average, and then it's how wide is the distribution around the average. And these are lots of different ways to measure that because you say how wide, but it's not like it's a square or a circle. It's got a shape to it as well. So when you ask how wide is it, there's sort of a lot of ways you can try to answer that. Standard deviation is one of the most popular. Volatility of P&L is the standard deviation of returns or of log returns. That's just like a formal thing. And then quantiles are also a very frequent thing. Some of them have special names, but quantile percent number is the value that it is with that frequency less than that number. So for example, the median is the special name for the 50th quantile. Half of the time results are below the median, half of the time the results are above the median. The value at risk is also a common quantile considered. That's just the 5% quantile, right? It's the bottom 5% number. 5% of the time it's that much or worse. That sets us up to one of our more common market measure statistics, and also one that the platform likes to show you, which is conditional value at risk, which is a combination of value at risk and means where you look only at results that are the value at risk or worse, and then you average those, which this really gives you a better appreciation for if there's a heavy tail to the downside, right? If the value at risk is underselling your real, what risks are like. And then especially for back tests over long periods of time, the maximum drawdown can be a really important thing to consider, right? This is sort of the final say if whether or not the trader got to stay alive, because it's the highest peak it's the highest fall you had from a peak to a valley thereafter, right? It's the biggest loss. If you were taking money out of it, right? You're investing to live on it, so you're taking money out of the account regularly. This is how much that you needed to make sure to have in, or else you might have got busted at some point. And then the last thing I want to say is that I'm sort of the opinion that you should try to pay attention to 2 metrics at a time. Like consider one profitability metric, like your average P&L, and one risk metric, like your initial risk or your maximum drawdown. But there's a lot of metrics that are thrown around in the financial space that are just ratios of 2 of these. And this does a nice thing where it gives you one number to pay attention to, and it gives you a unit list, right? So it's usually like dollars divided by dollars or something. So it will translate between different scenarios. But I think it's sort of perhaps too reductive. And I think as viewers of Tasty Live, you probably can try to hold 2 numbers in your mind at once when comparing things. But, for example, and these ratios are very powerful, but it's sort of hard for me to argue that one of them is better than another. For example, the lookbacks present the MAR ratio, which is that compound annual growth rate, right? Your annualized rate of returns and as a percentage divided by the maximum drawdown. I think it's because Dr. Data happens to like that one. And I think that ratios can be very powerful, but thinking that one of them is a lot more relevant than another one is sort of misleading, right? It's very powerful to have this unit list measure of a good thing divided by, profitability divided by risk. But since there's so many different ways you can measure risk, you get a lot of different ratios, right? The Sharpe ratio is a very similar ratio, but it's slightly different. And so if you're going to use them for your decision making, it's probably best to pick one and become expert in understanding it rather than trying to be bombarded with a whole pile of different ratios. And I think those are my main points. Tom, how are you feeling?
I mean, this one I actually pretty much understood.
Yeah, we were doing a pair of these.
Yeah, I mean, this is good for me.
Yeah, it's nice. That's all he's doing right here.
Restores my confidence in all
your own abilities.
Yes.
Yeah.
Listen, I'll be back. I'll be back. In a bit to make you feel dumb again. But for now, I want everyone to feel smart while I'm gone.
I don't need a lot of help feeling dumb. Okay.
Let's go to takeaways. Access to the backtest data provides modern traders with a wealth of experiential insights in a way that, even a decade ago, people were really in the dark in comparison to now, where now you can ask yourself almost any question you want. How did this do? And find out how it did. But interpreting the results is going to require focusing on distilled statistics. To start with, I think it's important to try to consider at least one profitability metric, your average P&L or your return on investments, and one risk metric, either your CVAR or your maximum drawdown or your average loser, right? There's a lot of different ways you can try to judge your risk metrics, but to try to make sure to pay attention to at least one of each. And then over time, you can sort of start incorporating a wider range of statistics to get you more nuance and understanding, be more mindful of risks, and also identify more things that look good to you. And I think that sort of if you wrap those all together, you'll wind up with a way both to look forward and look back at your trading.
Yeah, I mean, the only thing I'll say here is that, clearly, Tony and I both, the profitability metric is it's ingrained in us. So we look at P&L, it's the main thing, but on the risk metric, I would say we don't look at CVAR or max drawdown that much. We probably do look at kind of our delta and our theta risk. Like we look at risk a little differently. So
those are from last week. Those are your starting risks, right? Those are your instantaneous initial risks.
I got
this
that.
is like after the fact in an autopsy.
Yeah, no, I understand that. I understand that. But we don't really look at max drawdown. We just kind of look at the reason that delta is important to us is because that gives us some range of our drawdowns. P&L can give you, it's a profitability metric, but it could also give you risk. Like you can tell really quickly from looking at your P&L where your risk is.
But I can cook up some maybe when I come back I'll cook up some hypothetical studies that will be that will be bait and switches. Like they'll look really nice, but they in fact have some sort of horrible thing in the middle, right? You have you make $5 every day for a year, but you've got one day in the middle where you lose 10,000, and your net profitability might be high, but that one day in the middle will wipe you out.
I understand.
Sadnaf, I'm still getting over it. So are the people watching at home. I'll be back in a little bit to make you feel dumb again. Jacob is cold-blooded, they're saying, Sadnaf.
He is. But that's okay.
Right.
It's fair.
Liz,
It's a
Liz
fair
in person reporting in.
It's a fair comment.
Seemed like such a nice guy, Jacob, too.
No,
I guess.
misleading.
Yeah, misleading.
Very misleading, yes.
Yeah. All right, listen, let's take a quick 90-second break. I'm not going to mislead you here. We're going to take a quick 90-second break. When we come back, we got Mr. Scott Sheridan coming up next. Be back in 90 seconds.
Good spoo sell-off. Good spoo sell-off, Jacob. Good job.
The S&P's up and down.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You just mentioned AI a moment ago. Would you like to see some of the evils of AI? All you gotta do is look at this picture. You got the evil of AI.
This was very disturbing. So this is you and me as a mashup? I don't know who did that, but whoever did that should be fired.
Well, maybe you can get to it.
Please make that go away.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live and enough out of you.
Enough out of me. I didn't say anything.
You've been yapping all day. Tasty Trade, world headquarters. That's right. Your friend of mine, the very popular Mr. Scott Sheridan, Scott Sheridan Studios. Take it away.
I didn't get the gun show t-shirt memo. Both of you. You're high and tight on those sleeves. You're a little out of screen right now, but the wide shot showed you the guns were popping out.
Oh, well.
Yeah, well, I mean you know, you're talking about Sosnoff right now, right? His guns are popping out?
You
mean these bad boys? Yeah, I'm going to make Dr. Jim a little bit,
So the arm, there you go, look at that. So the arms are looking good. Here's the question.
The pecker, not so good.
That's not the question. The question.
It's just.
So we're going to the Bears game with somebody that lives.
He doesn't want to know about this.
I'm telling you, I have a question for you guys.
Okay.
I'm going with you. You'll see.
I understand. You're going to be on the field. You're going to be waiting for us on the field. That's a for sure. That's not the question. The question is it's 0.7 miles.
We already got the whole thing worked out. We're driving.
Just listen to this. That's still not the question. So we're going to park at Pete's and then drive to the game?
Yeah, I'm going to buy the pass.
Okay, I'm coming with you then. That's still not the question.
Then we get easy out.
I don't think I can carry you.
By the time you walk back to his house,
it'll
be
at 4 hours.
3 o'clock in the morning.
Totally agree with you.
If we drive out of there, we're home in 15 minutes.
That's still not the question. Tom claims, so it's 0.7 miles across the bridge to get to Soldier Field.
Yeah.
I say you couldn't do it, okay? But they
couldn't do what?
You couldn't walk 0.7 miles.
What do you mean I couldn't walk 0.7 miles? I walked to Wrigley Field.
This is what they're telling me. They say you walk 1.4 miles to Wrigley Field for a game, and I get sold. You did back in the day.
I do it right now. My last game, I walked home.
No, there's a rickshaw somewhere involved. Oh. You're pulling the woman. Who was the woman in the New York Marathon that said she won, but she started the race, got on the subway, took the subway for a while, got out.
Yeah, and then
Yeah, that's Tom.
I don't. Oh my God.
That's Tom. Okay. No, seriously. How long does it take you to walk 1.7 miles, and how many times do you have to stop?
1.7 miles.
1.4, whatever. 1.4 miles. How long does it take you to do it?
You mean for me to go around Wrigley Field and home?
Is that 1.4 miles?
No, it's
more.
It's a little over 2 miles.
Yeah. How long okay, hold on. I say, assuming you don't stop.
I usually stop.
How long do you stop for? Well, I don't know how long you stop for. If you don't stop, I'm going to say I'll be generous. I'll say you can do it in 40 minutes.
40 minutes.
Okay, there we go.
45 minutes.
Yeah, I was being generous.
From my house around Wrigley Field.
And how long does it stop? 20 minutes? So it takes you an hour?
Where do you stop?
Anywhere.
Usually for iced tea at Raising Cane's. I like it.
Oh, what are they opening?
yeah, a little sweet tea.
Wait, what are they opening?
Hetty B's.
Yeah, Hetty B's.
Ooh.
Where's that originally from?
Nashville.
How is it?
Great.
Sandwiches or just straight up chicken?
We used to get that in Vegas. Well, they have the
is
one
it straight up chicken?
Pop up in Vegas. Yeah.
in
the Cosmopolitan. But no, Hattie B's in Nashville sells you the whole. You get a whole chicken.
You can't do a chicken sandwich.
No, you can do a chicken sandwich.
Oh, you can do fried
tenders, chicken sandwich, the whole thing. But
is it all fried or do you barbecue also?
I think
it's fried. It's all fried.
I think it's all fried, but they may have something else. I'm not sure. But in Nashville, you can get like half chicken. And you get a whole chicken, half chicken with sides. Good. I don't know if that's what they're going to have here. It might just be chicken sandwich.
No, they'll have that. Why wouldn't they?
It's right by Wrigley, so I would think chicken because it's a pie, like a store.
It's not like I don't.
You're not going in to eat.
No, it's not small.
Yeah, but
it's
it's
the
not-
whole giant Starbucks on the corner.
Was that what that was? A Starbucks Reserve or Starbucks?
Oh, Starbucks.
Yeah. So what's the connection to Chicago and Nashville? It's so many Chicago restaurants are going down there, and some are coming up here.
Well, Hattie B's.
No, but a lot of
Vegas.
But a lot of Chicago restaurants, like Lettuce, is now going down there.
But now you got
Nashville's hot.
You got Chick-fil-A,
next big,
and Raising Cane's.
I'm not a Raising Cane's fan.
Raising Cane's sucks.
Thank you.
But their iced tea is easily the best.
Sweet or unsweet?
They have both. I like unsweet. They have both. They have
It's the best tea?
It's the best of all the fast food iced teas.
Okay. So we got, and then you got...
Small shop.
Yeah, small shop right there.
Which is really good.
Okay. Have you been to a little bag?
Tom's not happy with you. Tom's not happy with your lunch today, Scott. I'm just letting you know right now.
What do we got today?
The one he doesn't like, JP Graziano's. He's like, it's not even edible. Why don't they go to Bari?
This is like a new thing.
It's not my favorite.
It's not your favorite. You say it's not even edible because the bread's too hard.
Because they make it like a day in advance. All the sub places, this is the worst. I know it has a great reputation, but of all the sub places, this is the worst.
It's great when you go in there. It's a scene. If anybody comes to Chicago, it's a scene when you go in and you watch how they do
when
it.
you go in there and they make it for you.
Yeah.
It's great. But
it's the window where you pay.
Yeah, when you pay, it's the best.
You got the old window.
Because they yell over, "Look, what do you got?" And if you lie, Tony's people
you
come.
can't lie.
No, they come after you, and then
that would be a big mistake to lie there.
The lady behind the counter.
The grandma who makes the cannolis.
Yeah, you're gonna take the 50 cents from her.
I agree when you go there.
Yeah,
great. But when they deliver, I just don't. It's not my.
I'm afraid to ask, but could somebody send an anonymous message to Tori and just see where Fontano's is?
Or Bari.
Well, I don't care about Bari, but I like Fontano's. Like a nice big, like the you know.
Or Bari.
But I'm afraid of her. So do we have a box you could just drop
I'm not
off?
afraid of her.
Yeah, you are. Okay. Tony, next time you're walking by, can you just throw a note on the desk?
Petrified of her.
Oh, you're
I don't think she's very fond of me as it is. So sure. Still mad at me.
I'll put a good word in.
Ever since I walked by about 6 months ago and went, let me guess, Taco Tuesday?
That was the last time she talked to you?
That was about the last time she talked to me. Yeah.
Good tacos, though. Yes, I do like Soberosa.
Yeah, I like them.
Yeah, I think it's good. Yeah. And Nikki, there's got to be plenty of food now, so you get to eat.
Why do you say that? Because nobody comes in anymore.
Right. Because we still order for a full office, and about.
Yeah.
Right.
Yeah.
That was pretty crowded
Get
here.
to eat.
Yeah, so it's not bad.
Yeah.
Not bad. All right.
Wow, you ruined everything, Scott.
Should we get to some? Oh, by the way, were you able to switch your schedule so that we're going out, or are you too busy both days?
Yeah. Are you able to meet us Saturday?
Are you able to meet?
I think Saturday I can, but Sunday I told you I'm going to Cubs game.
Well, you said Cubs
No,
game on barbecue.
Saturday you said you had a barbecue.
No, Saturday you said you had a babysit.
Oh, babysitting. Yeah, let me check on that.
I can't believe they let you do that.
That's a lie.
They don't let me do it by myself.
No.
Yeah, do you have to be supervised?
Yeah.
Corinne has to be there.
Yeah, for sure.
There's no way you're solo babysitting.
Babysat?
What? I can't
Do
babysit.
what?
You're being babysat?
No, Tom's babysitting, but
I thought Tom was being babysat.
no, but he's not. He's not on the approved list
I'm not certified to
for being an alone.
Solo.
Like trying to give the little one. What'd you try to give him? Like some of the cinnamon roll, at Ian Sathers, right? And then
Did you really?
I'm not naming names, but the missus, not his missus, but the mom.
Why don't you throw some whole grapes in his mouth too? Why don't you do that?
So I gotta say, if you're gonna start him off, a cinnamon roll from Ian Sailors is a strong move.
Yeah.
He likes the cinnamon roll.
I'm sure he did. Going, wait a minute, I'm not used to this. I'm used to like applesauce.
Yeah,
and,
you get just like pure sugar. You know?
With a nice little cinnamon kick to it.
These kids know. You try to give them something like, give them like ground beef or something like, You give them like ice cream, they're like,
You give a baby ground beef?
Tony, you are now getting the picture as to why he's not allowed.
This is why he has to be supervised.
Yeah.
How do you deal with the crying? I feel like you're not.
There's no crying. There hasn't been much crying at all.
Yeah.
I have to say, I stopped by.
I can see him being like this, like, make it stop.
No, I stopped by.
I've been seeing he doesn't really cry much.
Yeah, he was good.
Yeah.
Yeah.
So.
Yeah, he's still untainted by you. You haven't ruined his life yet.
Wait till I can take him to Dairy Queen.
Yeah, Dairy Queen. Wait till he takes him to La Pasadena.
Dairy Queen's only a couple blocks away from where she lives. I'll be at Dairy Queen all the time.
All the time. What do you want?
Yeah, what do you want?
What do you want? Whatever.
You name
sure,
it.
You want
Are you going to get him a sad enough? Are you going to get him the breast flavored milk?
Probably not.
There's no milk in Dairy Queen, so we'll leave that out.
5% buttermilk.
Okay.
And you know what? So I don't know if you play your cards right, you come out to the suburbs, I might let the little youngin come around the back there and make his own cone.
Ooh. I thought he's not working there anymore.
Fired, okay?
He's still got ends.
He's got ends. He still knows people.
Yank.
He knows people. He knows people who know people.
Yeah, we got Yank.
All right, that's pretty good.
Oh my God.
Yeah. All right. Well, knowing that you have real talent waiting.
Thank you.
We do.
You do. Why don't we get to my list, and then I will exit stage left, and then the real talent can take over. So, top 20 symbols going through the system. First, 40 minutes of the day, no broad-based indices or futures. Tom, for you, in case you are listening, number 20, Coin at a 15. For everybody else, AMD at a 14, Apple at a 20. Tesla at an 8, Shop at a 14, SMCI at a 5, Uber at a 10, PLTR at a 14, Disney at a 13, NVIDIA at a 21, HIMS at a 29, Snap at a 9, UNH at a 32, ANET at a 15, TQQQ at a 21, Amazon at a 6, McDonald's at an 18, Meta at a 6, UPST at a 13, XLU at a 22, and number 20 for Tom Coin at a 52.
Bless you.
Bless you.
Pardon me. Thank you, son. You other heartless bastards just talk amongst yourselves.
No,
All
Scott
right,
gave you one. Tom didn't.
I wasn't listening.
Yeah.
What'd I do?
No, you gave him a bless you.
Oh, I did?
Yeah.
Yeah.
That was...
I'm a gesundheit person. Anyway, I never say bless you.
I thought he was talking to Tom.
That's true. You are more of a gesundheit.
I'm a gesundheit.
Yeah, but you don't even say that. You just look at people and you go, are you dying? Okay, then just move on.
I don't. I'm very nice.
When was the last time you said gesundheit to somebody?
To a stranger?
To anybody. Friend, stranger. Are you more likely to say it to a stranger than a friend? I think the answer is yes. Continue. Are you bringing the Blackstone out on Saturday to bag coffee? I think it's the power move. I really do.
The pop-up burger.
Right.
I think that's a...
I think it would go viral.
I think it would be good on the bread, too.
I do.
I'm not.
Why not?
What do you mean? Why am I going to be there? What am I doing?
Whatever day. I'll do it with you some Saturday.
No, I'm not cooking.
What do you mean, why would you be there? Like,
Oh my God,
got
it could be
anything
like
else to do?
Celebrity Chef Day.
See? Tony, you're thinking you could come down. We could have Jimmy show up, make an appearance. Guy that makes the bread shows up, makes a burger.
Yeah, Jimmy had a $1,600 water bill. He's got some dinging to do, Saznoff. Next week, you're gonna get a little dinged on your bread because prices are gonna go up.
$1,600 water bill for what?
Well, he didn't pay it for a couple of months because Saznoff was late on his payments.
So we got the TV, we got the HVAC, and we
We
got
don't make any money, so we got to get him. We got to get him to lower his bread prices.
and we got the bread
Evidently,
guy.
neither is he.
All right, on that.
Nobody in this whole process, in the whole circle, make any money.
That's exactly right. All right, on that note, why don't you play some music and take it away?
Thank you, Scott.
Play some funky music, white boy.
Great song. That's right, Saznoff. Johnny Fraser, my son, Nick Batista. Now we can get the applause.
Ah, come on. There we go. Beautiful, beautiful. How we doing this morning?
All pretty good.
Yeah. AMD must have been decent. Right?
AMD was
Nice
AMD
little
was
vol
a
crush.
nice winner.
Yeah.
Uber was a nice winner.
Uber was good too. Uber basically unchanged on the open.
Yeah, Uber was unchanged.
Yeah.
AMD was a nice winner. Let's see what they are right now. I haven't looked.
You know what, Saznoff, hold on one second. I know Scott left, but I didn't want to say this in front of him because your face, got real sad when, Scott said, well, I can, be a celebrity chef for you too, because he was one of Chicago's most eligible bachelors back in the day, right? So,
John, can you shut off his mic? AMD is down 15, and Uber's down 2. Those both worked out. Lucky thing we didn't trade Shopify.
Yeah, that was
that would have been bad.
Yeah.
And
I saved you on that one.
That's it. We really,
probably made a nickel on Lucid too.
We lost a nickel.
Oh,
maybe. You know what? Maybe we're even. I don't know. The expected move was 20 cents.
Yeah,
It's 20 cents.
Yeah. How do you even know if you make any money on a $2 stock? It's like
It's pretty hard.
It's hard to look at.
It's pretty hard. All right, what do you got?
All right, I got 3 trade ideas. You ready?
Yeah,
Want
ready.
some?
Yeah.
All right. Hoping I'm bringing some good stuff to
Can't
the
trade
table.
the.
I did.
Try all you want. want. You can't trade Lily.
I did like a little Johnny put spread. You know,
I have a bunch of positions on Lily. I have positions on Lily now.
Yeah, they're not.
It's crappy.
Yeah, I know. Well,
what do you can tell me what you want to do in Lily, but I'm not.
I did a little put spread.
You sold a put spread?
Yeah, you've already poo-pooed it. I can't even get to my slide yet. You saw the title and you said GFY. I mean, it's like, you know, it's.
Are you outside the expected move?
I'm right at the expected move. The 700, 690, little Johnny put spread. Sorry, that's both the September 19th expiration, but trades it right around 1/3 the width of strikes. I mean, the stock has chopped around 700 to 900 for basically the last year, so I figure I'd play a little upside move here.
I don't hate the play, a little bit of upside here. I'm just telling you, it's crappy.
Yeah, you got to get filled a nickel or two before.
Yeah, you got to give up a little.
Yeah.
I have a strangle on in Lily. I have a wide strangle. I'm just going to keep what I have on in there. I already widened the strikes out this morning, and I had to give up like 40 cents to do it.
Yeah.
We're in the 600, 940.
All right.
We're in the ballpark.
Pretty far out there.
Yeah, 600, 940. It's about $5 or so.
All right.
So,
a little something.
Yes.
One of the higher vols on the board, Ivy rank 43. Target, you got a position.
I do not.
Target's got earnings, I think, on the 20th or something like that.
Of August? Okay.
I believe so. Something like that. The weekly expiration.
2 weeks.
Yeah, so the weekly expiration for August 22nd incorporates the earnings. So I'm doing a little bit of a upside call diagonal here. So I'm buying September, the monthly, the 105. I'm selling the 110 in the August 22nd weekly expiration going into earnings. It's a cheapy little upside play at a $3 and change debit, $5 wide call diagonal, not a huge position. Maybe you're looking at naked puts. You know, you could sell like the 100 strike puts or the 95 strike puts in September. I imagine those.
I mean, Target has been like the classic PIG pig.
Oh, yeah. I mean, it's chopped around 95 to 105 for a couple months now.
Yeah. I'm short some 85 puts. I haven't sold anything against them.
Yeah. Hey, you roll those up.
I don't know. Might sell some crappy calls in here as well.
61 IV rank.
I'm not arguing
there.
you. It might be might be decent.
Yeah.
Yeah, I think I'm gonna stay just short of strangle in there, and we'll see what happens.
Okay. 1 for 2. I'll take it.
Yeah, it's a tough one for me.
Yeah.
Don't worry, you can get the majority.
Bless you.
Thank you.
Gesundheit.
Gesundheit.
What else we got?
Amazon. Buying the dip in Amazon.
No position in there.
Did a call diagonal spread as well. October SEP, a little further out in time. You got volatility super low. Ivy rank at 6.
The stock's up $3 today, though.
I did this when the stock was at 214. So I've
216 and a half.
Wow. The Johnnies. You know, you got to be quick sometimes, Tom. You got to just kind of jump on opportunities.
You can't just sit there and look pretty.
I would have also got long Amazon.
Oh, you woulda? You
would have.
You would.
I liked it yesterday.
You didn't have hands to do it, or what? What happened?
I was just busy doing other stuff. I'm doing a show here, live show.
Okay.
But actually, I liked it yesterday.
Never heard a woulda out of you. It's usually you're like, I'm gonna do this. I'm gonna do that. A woulda.
I did like
woulda,
it
like
yesterday.
you got a crystal ball. Woulda.
But I did like yesterday. I saw it trading 211. I didn't touch it. I thought we were going to close a lot lower on the day that we did. So yeah, $2.50 today. I kind of missed it.
Still on the. I mean, it's down
Ivy rank
20.
was 5.
Yeah,
I know. Ivy rank was 5. It's down 18 from where it was. I'm watching it.
All right.
I mean, I don't really feel. I would rather buy it than sell it. Let's put it that way. But I don't think this market's going anywhere. I think you're gonna have plenty of opportunity to get whatever you want.
Okay, fair enough. 1 for 3. That wasn't a good performance.
No, not your best performance, but I mean, I really think it was more a product of who you were trading with there.
Yes, I agree.
It was more me than him.
Yeah,
it's
no
not,
doubt.
It's not me. It's you.
Yeah.
He's got a good personality, son. That's what we like to say in his world. Side note, we ran a little Johnny poll there. Which Johnny trade would you put on? Lily short put, Amazon call diagonal spread, or Target call diagonal spread? Well, which one do you think won, Side? No, it's kind of a trick question because it was a tie.
What? I don't know. I mean,
which one of the three trades that the Johnny trades that you just did 90 seconds ago? What are you stroking out over there?
I Target maybe.
You got it exactly wrong, Sal. No, if that was the last one with only 14%. Lily and Amazon diagonal, the put spread in Lily and the diagonal in Amazon got 42% vote for each one, Saznoff. See that? A little bit more because of probably the defined risk nature, using less buying power, the high probability of success.
Lily's not really tradable. So I disagree with that.
It does have wider markets.
I disagree with that. Findings of your little poll there, John Boy.
GFY to all the people in the poll.
Yeah, GFY, your little pollsters.
Ooh, wow. Don't you go after my peeps. You go after my peeps, you're going to hear from them. Be careful.
Not good at you, Saznoff. Even the S&P's taking a little bit of well, after being almost unchanged a moment ago, they caught a little bit of a bid. They're up around 20 handles right now. NASDAQ up 100. Russell, the weakest of the group. Dow up 64. Volatility in by 35 cents, just off of its lows by a nickel. Saznoff, this market's not going to be able to go down with Apple up $9. Wouldn't you agree?
I would think that this market is not going to be able to go down with Apple up $9.
No.
But you know what? I will say one thing: the S&Ps, they're acting weird. I mean, we've seen two moves today from up 20 to unchanged, and that's a little bit strange given how strong Apple is.
Yeah, okay. I'll give you that too. I'll give you that. I mean, but you got Netflix also up 10. I mean, you got
Nvidia,
Tesla up,
red degrees. Tesla's strong.
Nvidia's actually down, but Palantir, Amazon, Tesla's up. Yeah.
When are you gonna step in front of Palantir?
You want to what?
When are you gonna step in front of it?
We had a good earnings in there, and I don't want to kind of ruin anything. What? Yesterday, right?
Yeah, it was.
Yeah, it was
no,
really
it was
good.
like inside. I think it was like a $15 or $20 expected move, and it opened like $8 or something.
Yeah, it was good.
Good.
It was the biggest winner we've had in 2 days.
Yeah.
Yeah, I'm just looking around all the different stocks. We're going to chop today. I don't think we're going anywhere. I think we're going to chop.
Very good, sir. And I think I'm going to chop myself right out of here. We're going to take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Sound good to you?
Chop, chop, chop.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
We're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
Oh, that's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. So we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Tasty Trade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious backtest on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you.
we are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
And welcome.
It's a Wednesday.
It's Wednesday. What day is it? Take it away, Liz. Take it away.
Everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Dierking. The beautiful brunette left of me who brings us in on Tuesdays is Miss Jenny Andrews.
Here's what I know. I don't know what day of the week it is. I just know every other. And yesterday I didn't bring us in.
Oh, you're right.
Yes. In my mind, I was like, did I bring us in yesterday? No, I didn't. Hello, everybody. It's the Wednesday edition of the Liz and Jenny Show.
Yes. And you know what? There's been a reversal. Spoos are now up almost 30.
Oh, up almost 30. When I walked into the floor, spoos were up 2. Now they're up 30 in 20 minutes.
Yeah. In 20 minutes. It's been a real turnaround here.
a real turnaround. And I wish my account would turn around. I've been taking the biggest hit between HIMS and SMCI.
Okay, let me run your list of losers. HIMS, SMCI, Snap.
Yeah.
And you had one more. There's one more. You gave me 4.
I don't know, but I called Liz yesterday. It was like 2:55. 2:55, I think, right before the bell. And I said, "Oh, Liz, I'm going to sell 10 puts in Snap. Make a quick $600. Make a quick $600 here." Not really.
Snap's down 20%. 20%.
Oh, yeah. Well, hey, my account is not looking good these last 2 days. Yesterday was fine because I had a few things saved in me. Pfizer, Intel, Archer. There were a handful of things. I wish Archer could catch a bid like Joby. I mean, is Joby the winner in this? And Archer...
I don't know. We'll take a look at all of them later. But yeah, Archer seems to be... But Archer fluctuates. You've seen it so much where it'll go up to 13 and then back down to 10. Up to 13 and back down to 10. It's not having the skyrocketing trajectory that Joby has.
I know. Joby's really been taken over.
You notice I did there?
It's really taken off.
Technology.
It's really taken off.
Vertical lift technology is both Joby and Archer Aviation.
I know we're all over the place. We'll just go into the platform and look at all these products we're talking about.
Here's Archer Aviation, and this is what we were talking about. It is vertical lift technology. That's it. You know what's funny is we wouldn't have known that if my husband didn't tell us it was Joby and Archer.
No, it was a viewer who brought up Joby. Dan pointed us to Archer, and then a viewer pointed us to Joby, and then they talked about how Joby had some kind of like partnership with Toyota, and then they got a deal with Dubai Airport or something like that.
Something to that effect, yeah.
And so if you look at Archer Aviation...
it did go from 3 to 9 or 3 to 13 at some point. So
I'm not complaining. I'm just saying if this could take off like Joby has.
And Joby went from 5 to 20, but this does have a vertical lift chart.
So we'll see. Hopefully Archer could get its wings up.
Get its wings underneath it. We can't do any more aviation puns. I think we've run our course in aviation puns.
You think we've used them all? Okay, so
let's take a look at Snap because you did the same. You did the same thing just in multiple.
Whoa, 760 now.
You didn't know that?
No. Last time I looked, it didn't look so bad.
Oh yeah, it's down a lot. So, do you want to know what? I mean, not that it matters. It doesn't matter. Do you know why they're down so much?
No.
They made like a massive error.
In their accounting?
No. So they did something with I might butcher this, but something to the effect of they do all their advertising is done obviously, electronic because it's an electronic. It's all electronic. Whatever they pushed out, all the advertisers got all their advertising for a fraction of the cost.
No.
Yes. So that's why they said we rectified the situation. We do have lots of advertisers, but whatever was sent out was a massive error, and it was like very, very, very low. So that's why.
Okay. Well, anyway, now I'm long. Now I've got.
Now you got 1,000
shares of Snap.
And it can only go up.
It says that's not true. That's
nothing. No, it's not true.
Okay. That's fine.
Here's what we have. So Jenny, we have it. You have it. I have it. And now I don't have as I just have a couple shares, but
yeah.
We basically have a synthetic 9 covered call. I'm going to take this and I'm going to roll it out to September. You can go to the 9, which is going to give you only 15 cents extrinsic value, or you can take it down to the 8. You're paying for it.
So what I'm going to do with my Snap is just take the shares, because the shares, I'm just going to take the shares. I'm going to get a sign to take the shares because the shares use the same amount of buying power as that put, pretty much.
They do?
Yeah. Well, look at buy 100 shares of Snap.
Here, hold on. Let me close the put and see what we're getting back.
You're going to get back $300, $400.
I'm just going to go with the whole process. Oh, hold on. It keeps.
I think you've got your roll. Just buy back that put.
Close. I just want to see. Not that I don't believe you. You're getting back $300.
Now buy 100 shares of stock.
$300.
I'm just taking the stock and I'm putting it into the black tape column, and I'll take a look at it in 20 years.
So.
And I mean, I say 20 years. That's a joke, but that's all I'm going to do with my Snap.
I'm going to be 60 years old.
We'll be in the retirement home, and I'll say, Liz,
in 20 years, I said we'll be 60. We won't be. We'll be 70.
70, yeah, 20 years.
Almost 70.
20 years, I'm going to say, Liz, did Snap rectify their mistake yet?
How old is Pam Anderson? We'll be the same age as her.
I don't know. Liz didn't know that Pam Anderson and Liam Neeson were together. I had
did
to
not
let her
know that. She broke the news to me today.
What other celebrity? Oh, the other celebrity gossip. Let's take this to full screen.
Oh, really?
Because if we can take this to full screen, because Liz has an amazing story.
No, this isn't that good of a story.
It's not?
No, Jenny today comes in, she's like, do you know that our friend made out with Joe McIntyre from New Kids on the Block?
Okay, number one, that I didn't say that because I don't say made out, so that's 100% a lie. I said hooked up.
Oh. Oh, she thought they did it.
No. What were we talking about? One of the New Kids on the Block. And
Matthew has been to someone's house. Marky Mark's house.
Oh, yeah, Marky Mark's
mom's house.
Oh, yeah, yes. And that's a secret, too. But someone said good vibrations. And so then I started singing the Marky Mark song. And I said to Liz, did you know that one of our friends hooked up with Joe McIntyre?
Yes, I did. I mean, she was my roommate at the time when she hooked up.
I didn't hear the story.
When she made out with Joe McIntyre. She did not hook up with.
Well, whatever. How did she meet him?
They met at a bar, and he literally, you know how you have facial recognition? She looks at him, and he looks at her, and she just kind of did a double take, and he goes, it's me.
Really?
Oh, he was such a douche. Excuse my language. Yeah. So then she went.
What bar?
I don't remember, to be honest with you.
I believe I heard. I believe I heard it.
She's
Excalibur.
And she said in her mind, she's like, as he tried to kiss her, she might have kissed him back. She's like, I'm not doing this. Like, this is reducing myself to this level with this guy who's like, yeah, it's me. So she's like, no, thank you, I have to leave. And then he chased her out of the bar.
Okay, well, the story I heard that was they met at Excalibur. He invited her back to his hotel. She went to the hotel, and there were like 30 girls at the hotel.
Yeah. And then she's like, this is ridiculous, and I'm leaving. And she did. And then he chased her out.
He chased her out?
Yeah, because she was like, this is dumb, I'm leaving.
And he was like, wait, come back.
Yes.
Come back. I have 29 other girls in my hotel room, but I want you.
And she goes, bye, bye, bye. That's the wrong people. Wrong people, but you know what I mean.
That's funny.
Yes.
Oh, well, anyway, had to go to full screen for that story.
Yeah.
I just heard it. and I can't remember why it was brought up.
Literally 25 years ago.
Yeah, this isn't recent.
No.
So, but somehow it came up. Maybe because I was driving past Excalibur, and I was sitting in the cab talking to someone. I said, "Oh, I'm driving past Excalibur," and they said, "You're not going to believe this." Anyway, I know how it started. Because we were at the Cubs game, and my daughter was saying how cool it was to go to the Cubs game, and I said, our friend, different said friend, dated a Cubs pitcher, Kyle Farnsworth. Yeah. And then that's how we got in the story of like dating.
Once again, someone who lived with me.
Someone who lived with Liz, dated Kyle Farnsworth, Cubs pitcher, also had a brief stint on Girls Gone Wild in New Orleans.
This is all true.
I don't know how we meet these people.
My roommates were a little on the wild side, apparently.
Anyway, back to the markets. I just needed something to cheer us up because everything in my account is losing today.
I know. Okay, so Snap now. Let's go back into Snap because if we're taking the stock, why pay the exercise assignment fees? I could just sell this out and buy the stock. It's free.
Yeah, it depends on how many shares you have. I'm just going to take assignment and take my shares of Snap.
And I'm going to buy the stock.
But you see my point? It's the same amount of buying power to sell that put or the same amount of buying power to just take the stock. But we could just...
I'm rolling it because we roll stuff, and I'm doing it. I'm just going to roll it. I'm going to get the 14 cents.
You know what, Liz? I've got an idea.
I'm getting 13 cents.
I've got an idea. Why don't you roll to the 8 and sell 2 8s?
I'm literally Band-Aid over a bullet hole. I'm rolling to the 9. It's a covered call. I'm getting 11 cents.
All right. Well, if you roll 2 8s, you can get 75 cents
and you're
twice.
adding an additional $300 to it. We don't need to. I mean, Snap could go bankrupt. We're trying to roll.
What do you mean? Did you just make that up?
Anything could go bankrupt. Look at these.
I don't
want to
put fear into people.
SDCs. What was that?
Smile Direct Club.
Smile Direct Club.
Smile Direct Club.
Zeroed out. We had 300 shares.
I was a big believer in Smile Direct Club. After paying $8,000 for braces, you can pay $1,500 for Smile Direct Club, or maybe less, and went to zero.
Literally zero.
Yeah, SDCCQ. Smile
now
Direct
we can't
Club.
get through that. Now we can't get away from that. The other thing, our other problem child is this, which we're just going to leave because it's worthless.
SMCI. So let's talk about this. The expected move was not $11. So whether we sold puts in there or bought that, we'd be out quite a bit because I think the expected move maybe was like $6. So either way, it would have been ugly.
Well, you can kind of tell what the expected move is because we paid $3 for it and we have a $11 wide, right? I mean, is it $11 or am I going backwards with it?
58.67. I moved the call as far as I could to get us the most profit potential.
So
I moved it a couple dollars.
That was the expected move.
No, I think I moved it $2 above the expected move.
Okay.
But anyway, SMCI is no bueno. No bueno. Down 20%.
Yeah, that's
20%.
That's a big move.
I know.
Especially with SPUs up 24.
What I would say with SMCI, the rank, just what you talked about before, we're getting these huge moves. SMCI is down 20%, and the rank is a 6.
Yeah.
So it's not like, it's down 20%. Let's get in and sell more puts. There's no rank there.
No, there isn't.
Do you feel like there's almost
that's what I was talking about with TP. If you were to cover that up and you cover the rank up, I would have never have guessed that. Never.
Do you think that...
No, SMCI was up 90% recently. I mean, they said it was up so much from the low of 20 from right here. Because it went from 30 to 60.
Yeah.
Which isn't 90%. It's 100%. Yeah.
Yeah, it doubled.
Yeah.
It went from 30 to 60, but with the 20% down move, I just can't believe it's only a 6 rank. If you go to September and look at those puts...
Wait, but hold on though, Jenny. Take a look at this. It also went from, in full disclosure, it went from 100 to 15 in the span of 6 months. Just look at the chart that I have up right now. It went from 100 to 15 in the chart that we have up right now. That's not...
Yeah, no, I know.
So that's probably why the rank is only 6, is it can fall faster.
And so I've got a
20-year one-day chart up.
All right, because I thought it was, sometimes how you run into something where you switch your symbol and it stays on the last chart, then I have to kind of
look at something else.
It was still the snap chart.
Oh, that makes a lot of sense. But then when you look at this, it kind of makes sense why the rank is so low, because it did fall faster and within this last year cycle.
So I would not get back in with puts here, because if you go to September and look at the puts, $40 product using a ton of buying power, $1,800.
No, we're not going to jump in with puts there.
No.
I did want to take a look at our bull is going in the right direction. We have a GTC in to close it. It's about 20 cents away, so that's good. Webull is going in the right direction. I also want to take a look at our IBIT. This is we know it's got 2 days left. We put it in with only 7 days, so this is going in the right direction.
We've been doing weeklies in IBIT. We just need we got a little boost in crypto. We need a little bit more of a boost in crypto.
A little bit more of a boost, right?
Who's up 25?
But
so nothing crazy.
Do you find whenever our show starts, we almost stay right here?
The whole show, we
stay at the price. Or have been.
So do you want to sell an SPX string at the start of our show and buy it back at the end of our show?
But we can't. It's already 15 minutes into our show.
We can
do that
tomorrow. We do have a really good SPX study today from Jacob, another one. And this is the final study in his series on these iron flies.
Does it say part 3?
In the Teams chat, I'm pretty sure he said this is the final study in this iron fly.
So he's not going to do any more iron fly stuff for us?
I may have misread it, but I think I read final study in the series.
I heard he's going on vacation for 2 weeks. You're not going to get it for 2 weeks.
Is it Burning Man?
I don't know. He's going to be gone, so there's going to be nothing for 2 weeks here.
I don't know where he's going, because for some reason when he was on with us, didn't he say he might not go to Burning Man this year? Well, Jacob he's taking a hiatus, so there won't be a study for 2 weeks?
Yeah.
Whoa.
Yeah. That's okay.
Maybe I'll do some back testing.
Yeah, Jenny's my resident back tester. They did back testing today live on the show with Tom and Tony.
Oh, nice.
They did. They did a whole thing about back testing. Do you want to jump into that study then first before we address anything else?
Sure. Well, sure. Let's do it.
HIMS is down again, Jenny.
That's what I told you. I said between SMCI and HIMS.
Did you quadruple down in HIMS?
Yeah. It's my old MO, like whatever I'm short after a big move, double down. And I'm kidding. That's not a good way to trade. And I talked about that. On the road.
What's it called? It's called something like the Mockingbird or Mockingjay or something.
Wait. The martingale.
Martingale.
The martingale theory.
Theory.
If you keep doubling down, eventually you'll break even or make your money back.
Eventually, but the caveat is you have to have unlimited funds.
Yes, if you have unlimited money, it will work eventually. If you don't have unlimited money, it might take you down.
Yes, if you have unlimited funds, just keep doubling down.
Anyway, I do a big talk on the road on the Bad Trader Tour about not doubling down. It could get you in trouble.
But because she said not, that's what she did.
I did it yesterday in HIMS. Now it's down $3. See, it's a lesson.
And we're already up to 44, so we'll keep an eye on that one. Okay.
It's only because I'm not getting sleep. I can't think straight because I'm not sleeping at night because my hotel is next to that 24-hour rock and roll McDonald's.
Did you go at 3 in the morning and go get a Big Mac?
At 2 in the morning, I opened my window and yelled out the window and said, "Settle down out there."
Which I'm sure they all did.
Nobody did.
All right, let's pop into...
what's going on?
It's just a low rumble. That's why I wanted to look and see if anything's
going on. A low rumble and a lot of movement. People were moving from this side to that side.
Yeah. Movement. Okay, I'm going to pop into Jacob's study. Okay, this is 0 DTE winners and losers, iron flies.
Okay. Yeah, can't wait.
Now, Jenny and I were talking this morning. I found it a little bit jarring when I read the study, and then when I got to the finale, it all made sense.
Jarring, not in a bad way, in a good way. So maybe not jarring, but
I sort of feel like we should read I'm going to read the
surprising.
takeaways. I'm going to read the takeaways first. Is that okay? So we can kind of get so the first slide makes sense.
Do you read the last chapter of a book before you start it?
No, but when I was confused here, I read through all of it, and then I almost called Jacob. I almost speed dialed Jacob, being like, "I don't think this is right." Thank God you read to the end, or it didn't make any sense.
All right, slides 7 slides. Go to slide 7, please.
Well, we can talk. I can actually tell what the conclusion is and why.
Okay.
So, historical backtesting gives us an unprecedented ability to evaluate potential trades.
Wait, didn't you say you were starting in the end?
No, I'm going to tell you when we get to that, I'm going to tell you what the thing is.
Okay, slide 1. Okay.
Historical backtesting gives us an unprecedented ability to evaluate potential trades, but interpreting these results can be complex.
Okay, we almost always need to turn to summary statistics to help make sense of them. Often we rely on average P&L, the net P&L divided by the number of trades, to help us find appealing strategies.
Yes. And so, but especially in smaller accounts, there could be major differences between a strategy that loses $10 for 4 days in a row and then makes $45 on Friday, and a strategy that made $1 each day for a week, even though they both finished out at plus $5. Keep that in mind.
All right, keep that in mind. Today, let's break down the upsides and downsides of our recent favorite trade. I love how that he calls it our recent favorite trade, the 0DT iron fly.
So I've been in constant communication with one Thomas Preston since we've done our show, and every day he fills me in on how he's doing in his iron flies.
Oh, does he keep doing them every day?
Yes, he has been.
And what's his net?
He's batting 1,000.
Whoa!
I mean, he's only been doing them for since
I was gone.
Yeah, he's batting 1,000.
Nice. Nice. Okay, slide 2. The study. Using over 2 years of data in 0DT SPX options collected every 10 minutes.
And then considered selling 0DTE iron flies at 9 a.m. This is very standard. Give or take 5 minutes every day with a variety of wing widths and profit targets. Losers were left through expiration.
Okay, examine the winners and losers separately with emphasis on the range of losers as measured by their standard deviation.
Okay, and then all trades were assumed to exercise at mid-price, okay? Now
Got
this is where I almost speed dialed Jacob. And I was like, Jenny!
Okay, so iron flies, winners and losers, $10 wings. So that's, you've seen us look at those on the show.
These are all $10 wings. Here's your profit targets and your average losers. So the $10 wings, 10% profit target, 15% profit target, 20% profit target, 30%, and 75%, all with a $10 wing. So I'm going to show you this real quick. So let's go. I'm going to go to SPX just so we're clear on this, and I'll do it for all of them.
Now, in the morning, I've seen it as like 850.
I've gotten some super fills before, like 860.
860.
It's a super. That's the best fill I've ever gotten.
Yeah, I've seen them. Usually 810, 820.
I've seen 735. I've seen 750. So here, it's 8 o'clock right now, and you've got
it's $8.
You've got the at the money, and you're $10 wide. It's $8, and so I've never seen a lot more than that, and this is why I was very.
So let's talk about this. $8. If you're making 10% of $8, it's
$80.
And again, the $8 is $800. If you make 10% of $800, it's $80. If her super fill is $860, 10% of $860 is $86.
$86 was my super fill.
Super fill. So then back to the.
And so this is where I had my problem, child. Was take a look at this. The profit target, your first column, profit target 10%. 70% win rate. We've seen this 100 times, but the average winner was $92. That's why I said 10%. That would mean I would be selling this for $920
and winning every time,
and winning 70% of them. So
no, but to make the 92, to make your like full profit on average.
On average,
I don't know.
It's 70. No, these are just the win. If you look at this, it's your average winner, then your average loser.
Oh,
then
I see. Average. Okay.
And so I just want to go. I want to clarify this too because I had to read this 3 times. So then, what he's really comparing, and what the real comparison here is, the average losers and the standard deviation between them. So, meaning your average loser is $15, but the standard deviation of that first column is up or down $56. Okay.
Okay.
So that's where I had an issue with the average winner at $92. When I went all the way to the end, Jacob actually explains it, saying the problem is that this data is collected every 10 minutes. So because of that, it can gap up to a bigger winner.
It could be a bigger winner than 10% because it's like, let's say it hit 10%, and 9 minutes later the trade is closed, and maybe it's a bigger winner than 10%, which is why Liz had a problem with like $92. I don't know if I believe that, but again, that's not average P&L. That's just the average winner.
Average winner, right? So, and that's what I loved is that Jacob actually kind of clarified it at the end, being like, hey, don't let this confuse you. That's why it can gap up more than that.
But this isn't average P&L. You've got the average winners, you've got the average losers.
So we know when you net these out that way, where it's a 70% winner and you get $92 in the average, and then you get the average loser, that's how you get to about $51. Remember, it's $51 if you take it at 10%.
And I'm glad he put in here the average loser, because so many people think, okay, if you lose 30% of the time, you're losing $200 30% of the time. It doesn't mean it's max loss. And the average loser is not max loss. On any of these, you're not near max loss.
And so the standard deviation in the loser, so if the average is 15, it could be plus or minus $56. Meaning that your loser could be, $70, $30.
Right.
So we just want to, that's what he's trying to clarify here. And we don't have to focus on that one, but that was where my conundrum went this morning.
And so we have received questions from our previous studies on these iron flies, and we've sent that to Jacob. And so this is, Jacob put this together, keeping all of your questions in mind.
Yes.
So I think this is good that he shows that, and you can see the average loser isn't max loss.
The average loser isn't max
No,
loss.
what's
correct.
going on?
No, I also have a question about iron flies, but I just texted it to myself. Yes.
Lots of questions. Lots of questions on these studies. Okay.
So, and then kind of taking a look at this is what I think is interesting. 75% profit target on that would be a lot, right? So if you're collecting $8, 75% profit target on that is a lot.
I know. But then...
That means it's not moving.
But I still like the 70% win rate.
I like the 70% win rate too.
Otherwise, I don't want it to lose 80% of the time.
No. But a lot of, so if you take a look at the average losers, you'll notice the standard deviation for all of them was always give or take $55. The standard deviation of the losers. So the losers were not that bad.
No, they're not. They're not. No, but if you look at the one, if your average loser is 142 and you're losing 80% of the time.
True. Okay. So then I'm going to go to, but keep in mind, all of these, I believe most of these were profitable. I actually don't know that he's ever done a 75% profit target before.
I don't know.
I think he's done they were all at least in the green if you average P&L them out.
It's interesting because if you go to the next slide, you see the same thing. Average loser is similar. The average loser is similar no matter the profit target, but the difference is the win rate.
And this is not your Jack Tuckers. This is, I'm going to go back into here. This is an iron fly with $20 wings. So this would be this. I'm going to move it again.
Yeah.
I'm just going to keep moving it with the fly. So that's 20, right?
Screws up 35.
Really?
Yeah. It's rally in the alley. Hope it carries over. Hope it carries over to Hims and SMCI. And Snap.
If we can just get Snap up, that'd be great. Okay, so
Disney was down today too.
Disney was up $5, 5% this morning, and then it plummeted.
Oh.
Isn't that crazy?
Yeah.
They have some deal with the NFL, so that was huge.
Oh, really?
Yeah, and then there were some other things that took it down.
Okay.
Okay, but this is what we're talking about here. Here's $20 wide wings. $20 wide wings. So still the iron fly, still the at the monies with $20 wide wings.
And we saw on the one you just pulled up, risk was about $650.
Yeah, in this one.
$750. Yeah, $750.
So your average winner at 10% is 165, which is still above. Like if I'm getting, now granted it's a different time, if I'm getting $12 and I want 20% or 10%, that's 120. Right.
But you look at the 75% profit target, your average winner there, or your average winner 825. But again, here it's a higher percent. You're getting that 34% of the time. You're winning 34% of the time. You're not getting, but I still think you got to go with a strategy with a high percent of wins.
I'm telling you, every time I look at this, I think take your profits at 10% in the 0 DTs.
I think so.
Because I think it's just easier to take your profit at 10% with an iron fly. I don't necessarily know your Jack Tucker with your iron condors. Like that might be a little bit higher because I know Blue Wackadoo Air.
Well, because you're not collecting that much.
Right.
Yeah.
Okay, so let's keep going. So $30 wide wings, you'll notice it's kind of the same thing. $30 wide wings, which I'm just going to show you real quick, just so we can kind of keep this all.
And $30 wide wings, I think 10%, 15%, even 15%.
Yeah, you can.
Yeah.
So here you're because your collection is so high. But I'm not going to lie to you. Anytime I'm starting with a straddle, which the iron fly is, I want 10%.
I like the smaller drawdown. I like the $10 wide wings and the smaller drawdown.
No, I mean all of them are starting with a straddle because they're all straddles.
No, I mean the $10 wide wings, the lower risk, lower risk, where it's like it doesn't take many wins to cover a loss.
It does not. Okay, so hold on. I'm gonna go back here.
Which is kind of opposite of our typical Tasty Trade trades. Like typical trades, you're like risking more to make less. That gives you the high probability.
But you have time on your side.
Right, you have time on your side. And with these 0 DTs, you don't have time on your side.
You don't have any time on your side with these 0 DTEs. It's almost like it expedites everything. But it's very similar, Jenny, to kind of closing at 21 days because it's the same concept. You want to be out before the 21-day mark.
Out.
Yeah. And then here, this is crazy. Here's your synthetic straddle.
Okay, $60 wide wings, synthetic straddle. High win rates, honestly, high win rates across the board. 20%, 15%, 10%, and 30%. Everywhere except at 75%.
Yeah.
So, but if you were selling naked options, I know this says like synthetic straddle. If you're selling naked options in the 0 DTs and SPX, I'm never starting with a straddle.
No.
No. So if I was going to make a synthetic straddle, I would just widen that out, widen the wings. Widen the shorts.
I would do the same thing. I wouldn't start with the straddle. But I'm just going to show, I just want to show to be, because people like when we do this in here. So if you have a synthetic straddle, I'm selling at the monies, and $60 down would be you're getting 55 cents, right? And $60 up, that's a synthetic straddle. And
right.
It gets, if you'll notice that green bar, that's why I did like that he put this in here, because that gets the green bar to exactly where the expected move is for the day.
Right, it does. Mm-hmm. And I ranked today 15.
Yeah.
And I'm just curious. So today we have a VIX of only 1676.
What's the IVR on there? It's still 31.
Yeah.
Yeah, so that's different too. Okay, now I want to go to here. These are the takeaways. And this is where I was glad that I love that Jacob actually did this. So evaluating winners and losers separately clarifies trade-offs in management strategies. It does.
Okay. Lower profit targets boost win rates without increasing downside risk, but cap upside potential.
It's true.
Yeah.
Because you are capping your upside potential. Due to exit, this is where I was like, thank you for clarifying this. Due to exit conditions, only checking every 10 minutes, low target winners averaged larger than you might have guessed. Sometimes profits jumped right past the target. With limit orders, winners should be smaller and more frequent.
And I'm glad he put this in there. Because at first Liz saw it and she was like, this has got to be wrong.
I was like, where is he getting these numbers from? You can't get $92 on average on these.
And then I said, let's call Jacob. Well, we realized he's in California and he might not be awake. So luckily we got to the takeaways.
Read to the end, and he clarified it. So Jacob for the win here.
All right, wider trades require being comfortable with occasional large losses, but the larger standard deviation of losers showed that these max losers were not the norm.
Yes.
So you could see that with the average losers, they were similar across the board.
They were similar across the board, which I thought was crazy. And then there has been no wrong way to sell zero DTE premium as long as profits were captured early. But understanding advantages and disadvantages can help you with the trade-offs involved in your choice of strategy and mechanics.
Now, please go to the last slide. With my daughter in law school, she's had a class yesterday on people who, lawyers who work with on-air, like shows, like live shows that are not scripted, but a lot of them are reality shows, reality TV shows, and these terms, disclaimers. So the lawyers make sure that what we say is not a trade recommendation.
Nothing we say is a trade recommendation.
Nothing we say is a trade recommendation.
Now, I want to, on the heels of this, Jenny, this was Lisa, and I've been going back and forth with her.
Okay.
And I've got a question for you. So let's go to the VIX, okay?
Okay.
I'm going to go to the VIX, and I'm going to read this. So she said, I have been paying attention to the initial credit on these trades. She's talking about the $10 wide iron condors.
Okay.
I've been paying attention to the initial credit on these trades and where the VIX IVR is. On higher IVR days, the credit seems to be more. Today's rank before the market open is 31.2. If you can look, it's right there.
It's still, yeah.
But is that actually the rank yesterday? So she doesn't know where it is. So my question is, if you see that the credit has come back to close to $8 per contract, would you consider placing the trade? Why or why not? And I loved this. She said, love the show, and Liz and Jenny. So thank you. But I love that she did this because I said I'd rather talk through it because you and I will sometimes pull up. So we're looking at the IVR, which he did the study. And then if you go back to SPX, you'll see Jenny and I, and it's kind of like which came first, the chicken or the egg. If you're going to put this trade in, I'm going to go with at the monies, and it's $10 wide, at the right time, say, right? And you're getting, here's $8.15.
It's like we're still getting $8.
But if you're getting $7, a lot of times we're like, yeah, no, I don't want to do it.
Yeah, we don't want to do it. We're not getting enough.
It is more credit-based than it was, and we hadn't been looking at the VIX IVR at that point.
And so if you're putting it on and getting 8 to 850, 8 to 850, 8 to 850, and then it's in the 7 handle, we might just wait. We might say, you know what, we're not going to do it for a while. But then if we have a long stretch of time where that's what it is every day, then like TP says, lower VIX means lower movement in the market. It means that lower movement's expected. Although today, now SPUs are up 43. So we're getting, so think about these days that we've had where we were down 100, up 100, now we're up 43. We are getting bigger movement today. So these zero DTEs have been tested, if not, struggling this last week.
They have been, but I think a lot of people have been getting out of them. I know. So even that's what TP said. So yesterday was kind of a crazy day too. But TP is like, I closed mine at, I forget what time he said he closed his, at 12 something, and I was like, what? I think with those $10 wides, with the lower ones, you're not going to get out of it before 12.
Oh, because we bounced back up. So yesterday, I know during our show, some of the people, we were through their puts, but at one point in time, we bounced back up.
At one point, if you've got your order in at one point, and that's just it, is if all you need is one touch in order to get out of it.
Later in the day.
Yeah.
Later in the day. But that was a good question, and if I'm not getting enough, or if I'm used to getting 820 and now I'm getting 780, I might not do it.
So, and that's why I just kind of said the analysis paralysis I don't want to set in. If you're usually getting 8, like I don't mind 8, you know what I mean? I don't mind 815, I don't mind 820, but when it does sink into the 7s, you and I will sometimes be like, Now,
well, and I think what
if you're separating it, you're always in the 7s.
I think what Jacob's going to dive into, which we sent him this question from a viewer, this tweet from a viewer about rank. If it ranks over this most of the time. Remember, we were like, well, maybe if ranks over this, we shouldn't do it. And then we said to Jacob, well, ranks over that level most of the time. So he was going to dive into that. I think he was going to dive into that in the future after his tweet.
Yeah, because the VIX rank is still 31.
It's still, it seems like it's. Remember that one viewer showed us. It's over that most of the time.
Most of the time, yeah, right. So those were really good questions. Jenny, let's take a look at our account now that
we don't have anything really moving like crazy today. We don't have like. The market's up 40 points, but what do we have?
I'm going to ask you one question, and I would not touch this with a 10-foot pole in my own account, but I just want to ask you this here. IWM, if you take a look at it, this was the spike lizard we put in. If you take a look at just the strangle, which would release all of our capital, the strangle is a scratch to a $5 winner.
So it'd basically be putting that butterfly. It's putting that butterfly on and paying for it. Putting that butterfly on.
Well, here's what I was going to say: I don't necessarily know that I want to take it off, but if somebody needed capital, this would be the first thing I would do. Is that fair enough? Like, we are okay in capital. We cleaned it up a little bit yesterday, but if I needed capital, that would be my go-to move.
Oh, I will say we did do that. We did clean up our account yesterday. Yes. There were some positions after the show. We sat down and either a lot of. And I don't want to say a lot of garbage, but there was a lot of like random one share of this or one share of that or 5 shares of this or whatever. We just got rid of like single shares and a lot of just tried to like clean this account up a little bit and looking through our positions, seeing if we needed to roll anything or move anything. If we needed buying power back,
we don't need it. We don't need it right now.
But would we leave that on for just $2? Sure, $10, whatever. Yeah, we can. We can.
Yeah, that's what I'm saying. No, we don't need to. We don't need to yet. I was just going to show. I didn't like taking it off when it was a loss, meaning that, and it was yesterday. But right now it's a scratch to a small win. We have a GTC in for that. We just need some time to pass.
A couple things.
So I want to show you this. Target is going in the right direction.
I know.
Target is up $3 today. So we've got 9 days left in this trade. Now, granted, we put it on 9 days ago.
But honestly, it's a big lizard, and it's almost right at our center strike.
Let's take it off.
Which
we wanted it to go. We were neutral to bullish. We thought when we put it on at 106, we thought it would meander
up, and it hasn't. And
today we're being saved.
I know.
Yesterday was a $60 loss.
Maybe just take it off with only 9 days to go because it's been on 9 days and this is the first time it's actually profitable. And we are trying to get buying power back.
So there, Target's filled.
So how much buying power did that give us?
They give us back like $300 or $400.
Nothing too much.
So that's the first trade that we have today. So I'm gonna hit.
So I don't mind the IWM strangle, buying back the strangle.
We don't need it yet. That's what I'm saying. I just wanted to address it. When we were looking at buying power yesterday, that's the one thing I would do because it's holding up $3,000.
I know.
And ironically, the puts have always been a winner, and it's the calls that have always been a loser.
I know.
And Spike Lizard is 2 puts. We just tried to use less capital.
You're right. If we would have done 2 puts, we would be taking those puts off. Because yesterday I talked about taking the puts off in there. If we would have done 2 puts, we'd take those puts off. But it was using double the capital. Just selling the strangle didn't use
as much.
I know.
As much. So.
Well, maybe do it. Maybe just take that off. And so we have a $10 white butterfly on an IWM that we paid for.
And we could put it on. We could put a very tight
Again,
stop
if we had, like in a bigger account, we would leave the whole trade. But because our account is smaller and the strangle is using quite a bit of buying power.
We get back $2,700. We're out.
Yeah, we got back $3,000. I think we had to do it.
Yeah.
I think we had to do it, and
Okay.
it's fine. So we have a butterfly. And honestly, put in a 10% GTC to take that butterfly off. Right?
Position. Yeah, I think so.
Or what? So what did we pay for? Not 10%, I
20%.
guess. 20%. If we paid $2, take 20% out of that
I have
butterfly.
20% in there. Okay. So we've got a 20% GTC in there for that. That's fine. That can't hurt us too much. We've got all of our buying power back.
So
Ivy
wait,
is moving in the right direction right now, which I like. We've talked about that already. Do you want to pop into Twitter? There's already 38.
20%. Do you see you're trying to... I just want to go back to the IWM for a second.
Okay.
So if we paid $1.95 for that butterfly, to take it off for...
Yeah, if you buy it, you have to sell it because we paid for it.
Oh, because it didn't go... So here's... 20% is too much. Like, we didn't put it on like a butterfly.
Because it was... Yes, we did. Yeah, we did.
So if we paid $1.95, 20% would just be $40. We'd be selling it for $2.40. And when you put it in, it went to like $3 something.
Oh, okay.
Do you see what I'm saying?
So don't go to the percentage.
Well, I don't know. If you go to 20, if you take it down to 20%, I would think that'd be if we paid $1.95, selling it for $2.40 would be 20%.
Yeah,
and
you're
that puts it at $3.36. But we put it in with other.
It was 2 separate trades. So I really don't
Well,
know.
I don't
but
know.
There, I'll put it in for $2.40.
You see what I mean? If we paid $2, selling it for $2.40 would be 20%.
Yeah. So that's in. So we're.
I was just thrown off with the $3.35.
Yeah, it does throw me off.
Yeah.
Weird. Okay, but that's in.
Okay.
No, I'm gonna pop into Twitter, and we're gonna go top down. And thank you very much, Bob. We know there's lots of earnings coming in. We appreciate
okay.
it. So Florida 7, IVR is low due to recent 200% IV. IV is still 88% for September monthly expiration. Still lots of juice in that orange.
Okay, Florida 7. So I'm glad that you said that. So all these products that were like, ooh, the IVR is low, ooh, the IVR is low, maybe we can just crumple that up and throw it out the window.
Well, do you remember when we used to have the IV chart on the bottom?
Yes.
And if you see one spike, you could throw it out.
You could throw it off if IVR's looking back at 6 months or 12 months. One big move could throw that
Let's
off.
talk about SMCI, and that's what I said. You had a massive drop in SMCI, and I bet the IVR was really high.
Right.
So
But
let's kind of take a look at that. So here, this is what I was saying. And I think
But the problem with SMCI is still the buying power. The buying power
I
in
know,
there.
but you were looking at a different chart. Take a look at this chart with us, Jenny, because it went from 100 and whatever, like 105 down to 15. That's when your IVR was high. So this is a blip in the radar.
Right.
Just a blip in the radar. Ooh,
Oh.
Jeff is on.
Oh, Frank, your nephew looks very serious. It looks like there's something serious going on the
Very
floor.
serious.
He's a floor official. Jeff, what's happening on the floor that you're coming down to check on? Oh man!
He has to call anybody out when
Someone
they
doesn't
do
have
the walk of shame.
Someone doesn't have their jacket on. Uh-oh. Uh-oh. What is the fine if you don't have a jacket on? $250. $250 if you don't have your jacket on.
You heard it here first. Floor official.
Do you think some of these traders would rather pay the $250 than wear their jacket?
Yes.
Yes.
100%. Okay, thank you very much, Florida 7. I appreciate that. Ajit comes in with short put credit opportunities, names with less than 10, DTE, low IVR, deltas under 25. Deltas under 25, with a high probability of finishing out of the money.
Okay, I have a question for you, Liz.
Yes.
Is there anywhere else in the area, in the Chicagoland area, where people are wearing jackets right now?
What do you mean?
Like, is the CME still going on over there? Are people still in jackets over there?
The CME has a trading floor, but there's one guy. Do you remember? That's what they told me. I mean, maybe he's going to find himself if he takes his jacket off.
I'm only asking because I'm living in the city this week, and I was nowhere near the trading floor, and I saw a woman in a jacket yesterday evening, and I thought, it was a mesh bag, looked like these jackets. Didn't recognize her, never seen her before in my life. I don't think she's from here. So my question is, where else could she have been coming from?
1990. 1994.
So is there anywhere else where people are wearing these jackets?
I still have a mesh jacket, and I could be wearing it around at any time.
Those are it's a little chilly. She grabbed her old jacket from 1990.
That's where she's coming from. Not exactly sure.
Yeah. So are people wearing jackets over at the CME?
No, I don't think so.
I don't know.
I don't think so. I really don't. But you should chase her down and ask. Steve Jones, I really want to get to this because
she didn't look that friendly.
This makes me super happy, Jenny. This will give you hope. Judith Light, who's the Boss TV show.
Yeah.
25 years older than you two. Still working on new projects and still looks fantastic.
Oh,
Energetic.
thanks, Steve. I feel like Steve must have been listening to us before the cameras were on.
No. I said I wanted the moonlighting specialty from Matthew, where they grease the lens.
She wants the grease lens from moonlighting. We were also talking about people getting older and just letting themselves go. And I said, as soon as the lights turn out on the Liz and Jenny show.
You must have. Maybe our breaks were being broadcast. But look at this. Maria, good morning from Italy. How to manage the Joby trade. Do we have a Joby trade?
Okay, we have a bearish Joby trade. It's one of our only bearish trades. And Joby shot up, right? But it's kind of coming back. This is a long put spread, and it expires on Friday.
Yeah, we had 2 days.
So we have 2 days. It's worth 40 cents. We paid for this. It's worth 40 cents right now. I would
we need
say,
it down.
I think maybe we take our 40 cents and put something new out in time. But
it's got 2 days left. Now, with a debit spread, you needed to move. We didn't have time on our side. When did we put this on?
You know what? They have earnings. So earnings are going to make us or break us, right? Earnings are going to make us or break us.
I think we put it on for that.
It was a viewer. I remember this was a viewer who wanted a bearish Joby trade.
Earnings today?
They have earnings on, yes, today.
Okay.
They have earnings today. So that's, because when I looked at it, I was like, geez, 2 days left and there's still 40 cents in that out of the money 18 put, which I don't, we could close it out and save ourselves the 40 cents, or we could leave it and ride it through earnings.
I honestly think we thought it was going to go down before earnings. I don't know that
This was like a what's your assumption viewer.
I don't know that I want a bearish trade through Joby, so let's save ourselves $40, right?
Yeah, I don't. So how would we manage it? If you want,
a debit spread doesn't get managed.
A debit spread is if you're bearish Joby and you put this on and you paid for it, you could roll it out in time to give yourself more time. You could see, Liz, like, if we're going to get 40 cents back from this, we could go out to September and buy the 1918 for 40. Well, that's 55 cents.
No, you can't. You're still
you could buy the 1817 for 48 cents
You're
and
still
move it out.
Paying, so this is.
You would have to move it down to like the 1817.
You're still paying 8 cents for it.
Either leave it or take it off.
I'm taking it off. Only because.
But if we didn't get that, so it's kind of like leave it on and risk another 40 cents.
If we get filled, great. If not, we're not going to close it. Then that is our earnings trade.
Yeah.
Okay. Then let's go back to Twitter. Thank you very much, Maria. I appreciate that. Take a look at this, Jenny. Did you know this?
That Mikey is with time difference is screening with me. Hello from South Africa.
Yeah, he's on a safari. Isn't that awesome?
That looks amazing.
They're living the dream. I love it.
Oh my gosh, they are. That looks amazing. I was wondering where you've been, Mikey. We haven't heard from him.
Well, he's got an excuse.
Have a wonderful time.
He's knocking off some lists off his bucket list, is what he said.
Yeah.
Did you know the bucket list? What does bucket list mean?
It's like the things you want to do before you kick the bucket.
Correct. Do you know that it wasn't a thing until the bucket list movie came out? It wasn't a saying.
Really?
Yes, I didn't know that.
I think it's always been a.
I mean, it's on the internet, so it's going to be true what I heard. The bucket list movie is the reason that created the bucket list instead of vice versa.
I don't think so.
Google it.
Because I remember, so how old was I? I was maybe 23, and now I'm almost 50, so 25 years ago.
That's when the movie came out.
Oh, it did?
Yes.
Okay. So I just remember, like, saying to my grandfather, I mean, now, God, I don't know how old he'd be now. He's been gone for a while, and he died when he was like 93, and he's probably been gone for 10 years. So I remember like 25 years ago saying to my grandfather,
what's on your
bucket list? Probably 75. He was probably 75. And I said, what's on your bucket list? And he said, I want to go in a hot air balloon.
And you took him.
And I took him in the hot air balloon.
But just take it to the tape. Go to the internet and see. Or
I'll
the
look it up.
chat. Somebody in Twitter tell us. Because I heard it the other day. I heard that that's one of the only things where the movie created a saying. And I don't know if it's true or not, but I heard it.
I will look it up.
Okay, so then these are potential earnings. AppLovin, IONQ, ET, Elf, DraftKings, Joby, QBTS, Celgene, Lily, Coop, Hut, and Sony. Gained popularity due to the movie.
Hold on.
I can see it.
The term was actually coined by screenwriter Justin Zackham in 1999.
With the movie.
Yes.
Yes.
So 1999.
That's when the movie. So this is the first saying.
The movie came out in 2007, but the term was created in 1999
by the writer of the movie. So it's the first time that the movie they didn't take the title. They took the title because of it.
Okay. Yeah. Well, I mean, I guess that makes sense because it was probably the early 2000s when I went on my hot air balloon ride.
Yeah. Just because I heard it doesn't mean it's factually accurate. That's why she has to fact check me. But I thought it was fascinating.
I thought it was always around.
Right. And that's what everybody said when they were... I heard it from Smartlist, and they were talking about how, no, that's the first time that they came from there, and everybody was, like, shocked, being like, are you kidding me?
Who they have on Smartlist? Who was on? Is there...
I don't remember who it was.
Oh, okay.
I don't remember who the guest
I didn't know it was one of...
It was a screenwriter they had on.
Oh, okay.
It wasn't an actor.
Okay.
Okay, so then we've got all these earnings plays today. We just took off our Joby. Do we have DraftKings?
And have you been pushing things out to the follow page?
I have been.
I've got so far just Target and IWM.
That's correct.
All right. Busy day. I'm
So
kidding.
then I want to look. We don't have anything in DraftKings. So take a look at this, Jenny. I know you were furiously Googling. AppLovin, IONQ, DraftKings. Joby we just took off. I don't think we have anything else.
Okay. What do we want to do?
Do we have IONQ? No.
No.
So DraftKings I know we were waiting for.
I know, but what do we...
It's got a 30 rank.
You know what I will say? So DraftKings back to 45.
It's only, if I sell a put, it's only $588 to sell it.
Let's see the chart. I'm waiting.
Waiting for what?
After earnings.
An after earnings play?
Yeah.
So I have, DraftKings is one of my larger positions, so I've got quite a bit, bigger than a breadbasket of stock. I'm going to sell a strangle around it. It's got a 39 rank.
Yeah, 39 rank.
I'm not going to collar it. I'm strangling it. So I will probably take the 50. I'll go like this. I'm going to get $1 and $1. Or I'm going to get $1.
50, yeah, that's good.
Yeah. That's what I'm going to do. We don't have the stock, so we're not going to do it. Snap or filled. Okay.
All we did was roll.
Yeah.
That was just a rollout to September.
And I'm not advocating doing this, and we're not going to do it in this account.
we
but
could...
all that I'm doing is basically this, even if somebody didn't have the stock. If I'm collaring it, synthetic covered call.
Synthetic covered call. It's synthetic covered strangle, right?
Yeah.
So that deep in the money short 50 put acts like your covered call, and that short 42 put is an additional short put.
Yeah.
And we could sell puts in here.
I'm not going to lie to you, Jenny. I'm a little bit gun-shy
I know.
with all the moves. So this is what happens if you've got things that are moving outside their expected move. And
Snap.
We did 2 directional plays yesterday. 2.
Both beyond its expected move.
Both beyond its expected move.
Yeah. Snap's
down
SMCI.
20%.
Yeah. I
so
know.
Maybe we do wait. We pull
So
a
I
Batista.
might wait until after earnings for DraftKings.
But I want to make sure we look at it after earnings.
And AppLovin.
Okay, there's a Jeet with the highest names, which is wonderful.
So APP on AppLovin.
That one is crazy.
Well, that's one of those where...
it's a $300 product. You're not touching that with a 10-foot pole.
No. This is my friend who's a money manager. This was his favorite product this year for...
And it should be.
But
this year it should be. It went from...
If you look at this year, so I think I talked to him in February. I think I saw them right around Valentine's Day. Yes, this is when I saw him, because we were out. It was Valentine's Day, or right around Valentine's Day. We were out to dinner, and him and his wife and his son were out to dinner, and he was like, how about that AppLovin?
Well,
how about that AppLovin?
Because it gapped up right there.
And
That's
then
why he was saying it.
And then right after that, fell back down.
So he, on Valentine's Day, said, look at how smart I am, because it went from 325 to 500, and then it went straight back down.
Yeah, that was right. Right. Because I remember them having their little boy, and they're like, oh, yeah, he's out with us for Valentine's Day.
Yeah, okay. Well, we're not touching this thing. I do love the name of this, though, AppLovin.
I do like the name.
I do love the name. And then Ajit comes in with the highest IVR and IVP, and we say thank you very much, Ajit.
Thank you very much.
And then Blue Wackadoo, happy Wednesday. IV rank up to 18.3. So I just want to see where their shorts are. So where's that? Look at SPX for me.
63.48 right now.
So, and their short is 63.35 on the top.
I know that we've had we've had some big moves. We've had some big moves during the day.
And Jack Tucker's in here as well, and he went a little bit earlier at 8:40 and 8:41. He said he's watching it today instead of putting in a GTC, and his shorts are the 63.25. So he needs a little bit of a pullback too.
We're at 63.48.
Yeah.
So it's been tough. We've had some big moves. The zero DTs have, although yesterday we had a bounce back. We bounced back up.
We did. Okay, and then, oh, look, here's Mikey. He's got, look at this. There's a video.
That's so cool, Mikey.
This is on my bucket list. I've always wanted to go on a safari.
Yes, and I hear they're amazing. Maybe Mikey can give you some tips.
Mikey's living my life. He's a scuba diver, and he's going on a
One day,
safari.
Liz, one day. I will say, if you haven't watched The Reluctant Traveler, I love The Reluctant Traveler.
Who is it?
It's Eugene Levy.
Oh, that I knew. I did know
Yeah,
that.
Eugene Levy, and he goes to all these places, and you get some, like, so our friends right now are in Utah, and after I watched The Reluctant Traveler Utah edition, I said, kids, I want to go to Utah.
Oh, it looks beautiful there.
And it
I've
looks
always wanted to
amazing,
go.
and the place he stays looks amazing.
Yeah.
And I bet that our friends are probably at the same resort The Reluctant Traveler went to.
Right.
It looked amazing.
Yeah, she was telling me about her itinerary. It sounded fun.
Yeah.
They're doing a lot of whitewater rafting and a lot of adventurous stuff out there. Yep.
Okay. So anyway, you should watch the Reluctant Traveler when he goes on his African safari. It looked, the place he stays in this like old train.
I would not be reluctant. I would be like the happy traveler.
He's more like me. Snakes, scorpions, desert.
I would love to. It'd be so fun. Okay, so then here, Frank the Great comes in with our economic calendar for today. So thank you very much. We didn't have much today, I don't think. And then I'm trying to get to, oh yeah, there we go. We got to everybody.
Yeah, we got to everyone, but did we get to every?
Oh, Jack Tucker comes in. Look at this. I love that. I really appreciate this, Jack. Many put spread rolls with the SPX moving up. One more Iron Condor tranche added. Total premium after fees now is $14,000. So he's actually
Jack.
actively managing.
Yeah, he's adding and rolling up put spreads. Good luck, Jack. Good luck. We wish nothing but the best for all of our zero DTE.
I know,
sellers.
and it's been, I think the hard part is, and Jack knows this, and everybody knows this too, but there will be lost days. There will be.
Right.
So, and you have to expect to see that. So if you have a million wins, there are going to be losses.
There are going to be. And Jackie came in with his SPX 63.55 sold call spread in and out in 1 minute.
Whoa. So they sold a call spread and out in 1 minute. So that's bearish. Done for the day. $233 in profit, $40 wide. Sold $230 per spread and bought it back at $180.
So when you're doing one direction, when you're doing when you're one direction, selling a call spread or selling a put spread, you can get out quickly if you get a quick move in your direction.
What's did one direction saying?
That, you know what? We're too old for those people. Like One Direction's after us.
They were after
That's
us.
like
we're NKOTB.
Right. We're not. When we were in New York, everyone was going. All the slightly younger moms were going to see Aunt Juliet, which uses all the music from I think One Direction or like Backstreet Boys or I don't know. Again, we're
Backstreet Boys was ours.
Sure. Yeah. Maybe.
But One Direction wasn't. Neither was the Jonas Brothers. They were after us.
Right. They were.
That's why Nikki, Mike, and Katie are Jonas Brothers. So they're One Direction too.
Okay.
Yeah.
So I didn't want to go to that because that wasn't my era of music.
But that is true. If you are one directional, that you just get a pop in that direction, and if you have a low profit target in, you can get out.
And I do like Ajit's, if we go back to Ajit's, short put opportunities, Hood, CRWV, MSTR, Palantir, Circle. He's listed names with less than 10 DT, low IVR.
So that's what I'm saying. I don't know if low IVR makes sense for short put credit opportunities. Because PLTR is at the top of its range. This is what I'm saying. You would have a heart attack with half these if I opened them. PLTR is at the top of its range. Hood is at the top of its range. CoreWeave is at the top of its range. That's why when it said short put, I was a little bit confused.
Names with less than 10 days to expiration, low IVR, Delta, less than 25 with a high probability of finishing out. I mean, high probability of finishing out
here,
the money.
let me show you. Let me look at PLTR, just because I know this. I have these in my PLTR.
Oh, I know they're all at the top of the range.
Yeah, so that's what I'm saying. It's very challenging to do a short put here. Let's take a look at Hood. It's that same thing. Hood, top of its range. Now, granted, it came down a little bit, but it's not.
Right.
And so when, and ABGO, hold on. These were the ones on his list.
I take a look at Circle.
So look at
I'm curious to see. They all look like this. Take a look at Circle and CRWB. We've got 1 minute to go.
Circle. Not bad.
Okay, I might get back into Circle.
Is this the expensive one or was it CoreWeave?
Well, I liked Circle and CoreWeave because they were giving you.
I know one of them is expensive and one of them's not. It's Circle that's expensive. It's CRWB that's not.
So earnings are coming in Circle next week, but you can get, if you look at that 44-day.
It's $4,000 to put it on. $5,000 to put it
then
on.
we'd have to do a spread, but there's still a lot of premium in there.
So that's why if you look at CoreWeave, you want to look at Circle and CoreWeave. I just went to the 100. That's a little bit more manageable.
So you're getting, so if you look at, you're only in the 2-day.
I just want to see how expensive it was.
But Circle is something that even a spread, it's had a little bit of a fall. Okay, and we're out of our Joby. You can push that out.
So they're not bad. So if you take a look at CoreWeave with the 80 put, you're using. So this is what we did like about CoreWeave.
Yes.
If you go to a durational trade, now granted, I think he wanted it in under 10 days. That's why I was going shorter term. That's what his tweet was saying, and I appreciated it, Ajit. But this is a good return on capital in the fact that you're getting $435,
putting up $800.
Yeah.
I don't mind the CoreWeave and Circle.
What was it? The 70 put.
This CoreWeave trade looks just like the Circle. The CoreWeave chart looks just like the Circle chart, doesn't it?
They do look, and they're new at the same time.
All right, make sure everything got pushed out, Liz.
Done and dusted.
Excellent. Everybody, thank you so much for watching. Tune in tomorrow. We'll be at our Tasty Studios in Red.
Oh, yeah, we will be at our Tasty Studios tomorrow. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
Everybody.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, our favorite, Glenn Freiberger, in the house with us today for Tasty FX. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Glenn. Glenn, good morning. How was the Cubs game yesterday?
Cubs game, very good. Got a last-minute invitation on the intern trip.
I was going to say, am I wrong in your employment status or something?
No,
Or
no. I just asked.
You're a young man, but
on the way out, they said, "Oh, we got an extra ticket."
Nice.
Me. My girlfriend was actually also going to the game, so would have been up anyway.
Nice.
But yeah,
Do it to go spy on her or something?
Exactly.
Just kind of keep some
team
tabs.
outing.
Yeah. Team outing. Just keep.
I did.
keeping tabs.
I met her boss.
Ooh, nice.
Hello, sir.
Nice.
But I think I did.
Was it just the two of them?
No, there were a lot more dudes than just the two of
Okay,
them.
I was just gonna say,
A lot of dudes, but
Yeah.
all nice dudes.
All right.
Interns, they accepted me as their own. I don't know if that's a good thing or not.
Yes, we've got a.
But your boy Thomas, he was.
Got him on the Glizzy cam.
Got him on the Glizzy cam. He was.
He was-
It was a bad day to be a Polish sausage. I'll tell you that much.
Yeah, he was getting after that thing. I don't know.
But no, Cubs not so good.
Yeah, they lost.
Pretty badly. Yeah, busted it open in the 7th inning. But it was a great night. 75 degrees. Chicago, Wrigley Field. Does it get much better than that? I don't know. It's
perfect.
Saw Chris Grace walking his dog on the field.
Wow.
Just the whole thing.
Yeah. What did you guys get up to midweek here, Tuesday night? It's like trivia. You guys do trivia or something?
There are.
What was that? What was that? Like
What was that? Excuse me.
Get to bed early last night?
Oh yeah, just a couple Jeopardy episodes.
Yeah, a couple Jeopardy and just.
I watch Jeopardy, so no shame there.
Oh, okay.
Love it.
I meal prepped chicken. I did 2 loads of laundry. I watched Hard Knocks.
Yeah, Hard Knocks was nice. That was fun.
Is that good? Josh Allen throwing up everywhere? Is that?
Yeah.
That's
that. We didn't get to
line?
that part yet.
Oh,
Yeah.
okay.
But yeah, it was good. It was a nice hype train.
Yeah.
Deion Dawkins drifts cars. So
Okay.
like a good chunk of it was just watching him drift cars in
that was pretty
circles.
fun.
It was pretty sick.
That's really funny. Is he allowed to do that? I feel like most
Yeah.
professional athletes aren't allowed to like ski or do other dangerous activities, but they give him the Bills parking lot and they say go nuts.
Yeah.
Be safe.
Yep. But yes, it was not as an eventful day as you had, but
yes,
this weekend we're going to Seattle.
Yes.
Oh, big time.
Yeah, you want to come?
Big events.
You got an extra ticket or something? I'm all for last minute
They're
tickets.
free on tastylive.com/events. They're free. You can grab one.
All right. I've never been to Seattle. You guys went last year.
We did.
Okay.
We did.
Now you're running it back.
Running it back, Seattle.
Seattle's
This
fun.
is a Saturday event?
Sunday.
Sunday.
Sunday fun day.
Yes.
What do you guys, what's the curriculum? You're teaching? Preaching?
We're talking
edutainment, baby.
Edutainment. Yeah.
You know, it's
You guys
fun.
are the edutainment pros.
Yeah, it's a little fun.
And you're in the edutainment capital of the world.
Really? Why?
I don't know.
Just, yeah, I don't know
right.
that one.
Let's say you say one sentence and everything just plummets.
Damn.
Yeah.
It was a good run.
Yeah, it was great. Okay. But yes, join us.
Yes. Come hang out.
Sunday in Seattle at the Crocodile.
Yeah.
It'd be great.
And this is what number stop? You guys going through the fall?
This is just 2. We only have 4 total.
2 of 4.
So if you're not in Seattle, got a lot more coming up.
Yep.
You guys are going.
Dallas, San Diego. Those are our 2 other ones.
Oh, okay, nice.
Yeah, yeah. Come for the Dallas one. We go to the little rodeo. Get
Yeehaw.
We will be going right back to that rodeo.
Yeah.
It was
Good
great.
time last time?
Yeah.
Yeah.
It was it was a true Texas handshake.
Yeah.
Yeah.
We should look at staying in that area
Staying at the rodeo?
for one of the nights.
Yeah. Could do it. We might.
Yeah.
Is there like a rodeo district or?
Fort Worth.
Yeah, in Fort Worth.
Okay.
It's a grand old time. You would love
Yeah,
it.
cool. Lots
Based
of
on
bars, lots
based
of
on the
walking.
partying pictures I've seen of you, you would love Fort Worth.
Yeah.
Yeah.
Uh-oh.
But yeah, got a couple more 2 tree stops, and then all of a sudden it'll be 2026. So
Yeah, we're flying here now.
Crazy. Crazy.
Steadily in it, August.
it's quite nuts. But we are less than a month away from football, so it just really just gets me.
Get those best balls going. Get those fantasy drafts, you know?
Yep.
Yes.
Yep.
Very nice.
I just saw Ryan's message from the production team about the Tasty Live.
Ooh.
So that's coming back up.
Yeah. I might have to bow out. I win it basically every year. So
Oh, really?
I feel bad.
Thank you, because for me it's just money.
Yeah.
Down the Dwayne.
Yeah. Well, you do it for the vibes.
This
you
is
know,
true.
For the team.
Because you guys, I don't think, would talk to me if we weren't in like a league or something.
No, Glenn.
It's kind of like a friendship ticket.
You're one of my favorites. One of my favorites.
Friendship ticket.
Oh, $25 to have 10 friends
cheap.
for 12 weeks?
Pretty
I'm
cheap.
in.
It's pretty cheap for my friendship. You know, worth a lot.
What are we looking at today?
Everything up.
Yes, everything's up. It's a face ripper. E-minis up 46 and change, 63.71. We go down, we bounce right back up. We go down, we bounce right back up.
USA.
America. That's been the MO here. NASDAQ up 250. It's the strongest of the group, up over 1%. Biggest mover of the day. Apple up $12 and change here. Amazon had a nice little bounce back, up $5. Nvidia kind of flat, but it was down earlier this morning. You got Tesla catching a little bit of a bid, up $9. Meta continues to move higher. Microsoft as well has kind of been chopping around here, but it's certainly been a strong start to the session today for the NASDAQ stocks. Dow up 130, the Russell actually down 2. It's been the biggest mover over the last 2 days with the way rates have been moving. The bonds are down a full point today, but they've had a huge move to the upside over the last 2 weeks or so. A lot of rate cuts. The projection for rate cuts really moving and increasing through the end of the year. That was a total flip of the cards. They're coming in a little bit today with rates moving a little higher, bonds coming down. Oil selling off a bit, Ford/CL down 32 cents. We're at 64.84. We've been chopping around the 65 to 70-ish handle for the last month or so. Volatility futures down 50 ticks. It's been a swift vol smash after the little bit of a pop we had in the middle of last week. The VIX itself below 17. Gold basically unchanged here, but it's had a nice rally up 2 points. You got silver up 13 cents. It's a stronger move of the two. Bitcoin also having a little bit of its risk-on moment with the rest of the market, up 1,800 on the futures. Spot up 1,500. We did get into the 113 handle yesterday, so a little bit of strength there in Ethereum as well, following suit to the upside. Risk-on, baby.
Man, the oil move most surprising to me. I mean,
yes.
Pre-market, we were sitting up, almost 1%?
Yeah, we've had about a $2 range today in oil futures. Pretty crazy.
What happened?
I don't know. I know there was like some India tariff something. They're selling Russian oil behind the backs. I can't keep track of it.
It's a lot
more. I just look at the markets. I trade. That's it.
So what's most interesting to you? We got everything, a lot of things up. Still looking at, single name
Yes, trying to find the diamonds in the rough. Volatility very low. You got to kind of be more selective with your trades. Closed out of a number of trades today. We had some earnings after the close yesterday. AMD down 11 and change, bouncing off the lows here. It was down about 15 or so just a moment ago. Uber as well opened basically unchanged, got down a couple dollars. Those were the two that we really traded. I also had a Butterfly and Shopify, a free Butterfly on the upside. Blew through that. It's up, $25. NVO was another one that people were looking at. Down another $1.78. That thing is down like 70-80% from the 52-week highs of 139. So a huge move there. But yeah, trying to find some diamonds in the rough. I had good timing on Apple. Close out of that diagonal spread. We put that on after earnings on August 1st. So it's been just a couple of days there. I got into a target position and a Eli Lilly position, bought in some risk on Caterpillar, put on a gold position yesterday, just trying to find things that are, getting long some things that aren't moving to the upside and trying to, get out of some of the stuff that's working. It's tough, though. It's tough when vols is slow.
Yeah, Apple just announced a $100 billion investment in the U.S.
Yes.
So there you go.
Is that a lot?
Nah.
No. Not for us.
When, where, it's just everything's a headline now. 100 billion here, 50 billion there, half a trillion. Yeah, it's just.
Numbers are flying.
Numbers are flying.
Pretty big numbers.
Yes.
Nice to see, though. Apple, the laggard of late.
Yes, it's been a pig. Apple has been an absolute dog.
Until now.
Till today.
Yep.
See if it lasts.
You got
Speaking of numbers, what kind of Forex numbers you got for us today?
Forex overview.
I won't give you any credit, but you deserve some credit for the shekel trade that we closed the other day.
Fine.
Some of the other ones have been a pain in the arse.
What?
But you get some credit for the shekel trade, so thank you. Even though it was my doing, compliance, it was my doing.
All you're doing.
Yes.
But yeah, nice that turned around for you. You were in that one perhaps a little longer than you would have thought, but you sized it appropriately where you weren't capitally constrained.
That's how we do.
In the meantime. So, good job out of you. Thank you. U.S. dollar, softer on the day, softer on the week. Across all major currencies, we've got a pretty big move of about a little over 0.5% higher in this euro dollar. Now spot market's back above 116. Similar price action in British pound. We've got U.S. dollar, Japanese yen. U.S. dollar tried to rally early this morning, nearing 148. Now that's back down near 147. Not seeing as much, when you gave your market overview, risk on sentiment coming back. What does surprise me is a little bit of a lag here in this Australian dollar, US dollar. Usually that is one of the currencies that is on the risk scale. Risk on sentiment favors that Australian dollar combined with widespread US dollar weakness. I would have expected perhaps a little stronger run up there, hovering around 65 cents. Canadian dollar, not doing too much. Dollar Swiss franc also down, moving with those other European currencies, but hanging in there. Not as much of a, flight to quality bid going on. So that Swiss franc not getting as much demand. But yeah, it looked like last week we were on the full dollar comeback train.
It's finally going to play out.
Now here we are back with rate cuts back on the table. No more trustworthy employment numbers. Who knows how that'll shake out? We've got Fed chair selection.
Is that today? Is that going to happen today?
He can announce it whenever.
Yeah.
I don't know. Most recent news was both Kevins are good options. So apparently Trump has two different Kevins.
Nice.
Little coin toss action there.
Why not?
May the best Kevin win.
Yeah.
That's your U.S. dollar update here. You're getting some unique charts. If you're wanting to play the U.S. dollar, you can look throughout those popular U.S. dollar pairs to see kind of if you're more of a technician or just want to respect some of the tape action. You can.
I'm a gunslinger.
You get. You get
shorted some euro while you were yapping.
All right, so
no, we're not up $1.
You're
Take
fading
that,
the move. Now we're
that you pipe and smoke it.
So yeah, we've broken.
I think I'm losing
weird
it.
Day. It's a weird day.
It's a weird day.
What's up with you guys?
It's just
hungry boys.
That might be it. I think that's it.
Yeah, it's hunger. It's just.
I've got some slides if you want to.
Please, yes.
Through that real fast.
Yes.
Looking at FX power hours.
Ooh.
What time of day is most volatile?
Can I take a guess?
You can.
And what?
No, please go ahead. Take a guess.
I'm going to guess at about 1 p.m. Central Time because that's a lot of the economic news.
That's a good guess. Mike, any guesses?
I'm going to say 12:59 p.m. Central Time.
And above? And earlier?
Yeah,
you're trying to undercut him?
Yeah.
How was that?
Or it could be as simple as
could be early morning
8:30
too, because
in the
that's
morning
like
when the market's open, things are flying.
Well, let's look into it. I've got some nice data visualizations. I think this is a nice, nothing too surprising here, but maybe a little surprising for you guys. Let's go to the next slide. Just what we looked at the past 3 years of price action using hourly data and just trying to identify some of these trading windows. If your strategy is for works better under low volatility, you get your answers here. If you want high volatility, you want some of that movement, also analyze that as well. Looking at Central Standard Time and looking at some trading sessions. We've got some overlap here, but this kind of gets your gears turning as to how I think about FX markets that trade 24 hours a day. You can kind of break them up into the Asian session, London, the New York-London overlap, which will be very important to see. You might get some big answers there.
Okay.
The New York session, which I've kind of shifted to the morning a little bit, and specifically calling out our U.S. afternoon, and just measured in pips the high-low range for each hour. So let's go over to our first visualization here, looking at trading sessions. You've got your 7 major U.S. dollar pairs. Right away, you're seeing U.S. dollar, Japanese yen, the most volatile across the board. But you also factor in this is per pip, and that exchange rate, dollar yen, you tend to see more pip movement, whereas in something like the Australian dollar, US dollar, the exchange rate is so low there at 65 cents that looking at pips alone doesn't give you the full context for what a percentage move would be. And then you also, to get your gears turning, have to factor in, what the margin requirements are if you're looking at both ends of that spectrum, comparing Australian dollar and Japanese yen. With the same amount of capital, you're able to put on more leverage with that Australian dollar than that Japanese yen. So I've done some breakdowns on other Forex Focus episodes on how that kind of compares. But here, just looking at pips alone, pip ranges, what you're seeing is that New York-London overlap, the most volatile. So that 7 a.m. to 10 a.m. window here, Central Time. The answer there for your high volatility range.
Reports and stuff that comes out like 7 to 7:30.
Exactly. So that is the majority of U.S. Economic data points come at 8:30 Eastern, 7:30 Central Time. So you're seeing a lot of this, and you're also seeing when U.S. participants come in around 6, 7, they're reacting to the European moves pre-market, and then you also get some either big continuations or reversals right on U.S. market open as well. So some intricacies there, but that 7 to 10 a.m. window coming out ahead. And looking at the least volatile, you're looking at that afternoon session, which is why we kind of, I called that out specifically, not tied to a specific region perhaps, but you're getting U.S. only participants. You're kind of, everybody's reacting to, everybody's day. And so it's really the laggard.
Lunchtime.
Exactly.
Damn, so I was wrong. We were both wrong.
But if you're thinking just he was right because he undercut you, going to 12:59 and earlier. But you're right. We have some recency bias with the Fed announcement last week. That's one of the only major things that is in the afternoon.
Yeah.
And now with the current administration, we've gotten some pops in volatility, in the afternoon, kind of sporadically, less scheduled. And then kicking it over to a heat map I made that breaks this down more granularly. We're looking by hour, a lot of numbers here, but if you're just looking at colors, oh man, it got cut off. We've got, sorry that the pairs look a little weird there on the side.
It'll be okay.
All right.
Yeah, here looking, you can tell which hours, the darkest shades hovering in that 7 a.m. to 10 a.m. And what is surprising is that kind of fall off even at 11 a.m. after, European participants pack it up for the day. That was surprising to me that we don't have as gradual volatility for, these are all U.S. dollar pairs. And the fact that doesn't continue as smoothly throughout the U.S. session, a bit surprising to me. But you're getting that dollar yen, you're getting some volatility
throughout,
around the clock. And then, looking at that afternoon, 4 p.m., some pretty abysmal small numbers there. So if you have a low volatility strategy you like to employ, that's the time that maybe you look to it. But there's also the fact that there's low volatility because there is low liquidity, and so you can tend to see spreads widen there as well, with the lack of participants. So kicking it over to the key takeaways, do you guys have anything stick out to you? I've talked through a lot of these that, the big answer is that early morning U.S. session where you have both European and U.S. participants. Afternoons, the least volatile and least liquid, and dollar yen on a per pip basis alone, the most volatile.
That was what stuck out to me.
Yeah.
Was that the dollar Japanese yen was the most volatile of the group.
Yeah, so if you're looking for pip movement, that's where you look. But again, it is an interesting exercise. Maybe I can hop back on here when we look at kind of product comparisons alone, of how you get more leverage. Even going back to, I used the Australian dollar, US dollar as an example, but maybe even the euro dollar, the best example, because there you have higher per pip volatility than the Australian dollar and only 2% margin. So a lot of factors at play. That's what I got for our study today.
Very good.
Hop back into the platform.
Yeah. What are a couple currencies popping out at you today? Nice extremes, anything fun?
Yeah.
Looking at here.
You're getting, like I said, it's a little bit surprising to me that this Australian dollar hasn't, broken out of its range. It's trading near the top of its range for the past, week or so, but really lacking a lot of momentum that I would have expected.
Yeah.
You're getting
you'd expect with a risk-on sentiment that it would be moving higher.
Yeah. You're getting, if you thought, I know, Mike, you were in this long U.S. dollar Japanese yen. You're hovering near the bottom of that recent range. So that I mean, it's been a lot lower in recent months, but for anything long dollar, you're looking at a lot cheaper price point, a lot better entry than you were on Thursday. So, I mean, Swiss franc holding in there.
This is a positive carry as well. The long USD.
Yeah. So right now, long dollar will be a positive carry against a lot of these currencies. You also have on the economic calendar, we have overnight Thursday morning at I actually think it's around 7 a.m. Afternoon for the UK, but we've got a Bank of England rate decision. They're expected to cut rates tomorrow. Down to 4%. So some carry opening up there, perhaps, in this pound dollar. That one also now coming off of.
So if you're short that.
Correct.
Yeah, which would be a long U.S. dollar position as well.
Right. And so barely positive there.
Yep.
But still that
and
dynamic.
we've talked about this too. The carry for us is negligible. Because it's so small,
right?
For our positions, but we just talking,
But if your time horizon's a lot longer, then that does add up. British pound.
You got a goofy one for me too, because we got like a shekel realm. That was fun. I like to use this as my intro into the space. So like,
which is interesting.
What?
The shekel being an intro, I think not a lot of people have that experience.
No, I know. That's why I want
shekel.
that.
He wants the spicy combos.
Yeah, you gotta kind of get in there and get into the weirder ones. Like that's how you broaden your horizon. You can't always can't sit and trade Apple all day long. You gotta do some other stuff.
Well, if you are looking at some kind of trade news, you can look at dollar peso. I think that's still there's still some talks in development. That one nearing the bottom of its range. Peso posting back-to-back days of gains, so now nearing back in. Let's see.
What about this Aussie dollar, Euro dollar? Because you're kind of saying Aussie dollar, you would expect to be kind of a risk-on appetite. As a long position. Euro obviously has had a big move against the dollar. Being long Aussie, short Euro is kind of a double down on long dollar, is it not?
I wouldn't say
some ways. Or long risk on and dollar.
Yeah, I would say if you're trying to put the kind of model the risk curve across currencies, I'd say Euro is even a little more, tends to be risk on than US dollar. Traditionally without all of this, these big US dollar swings, beforehand you would have said, a flight to quality is US dollar.
Yes.
Before all this US specific risk. So maybe you look to something like Australian dollar, Swiss franc, where you're talking, something that is historically a flight to quality, a safe haven currency in that Swiss franc on one end of the risk curve, and then Australian dollar on the other end. That one's been more muted recently, but still a tradable product if that's your assumption. The other thing there would be Australian dollar, Japanese yen. That's kind of a similar dynamic. But then you get kind of some of that geographic risk, perhaps, where those are pretty similar geographically, a lot of dependencies economically. So perhaps more noise there. If you want to just focus on risk, then maybe you could look to that Australian dollar, Swiss franc.
Okay. I like the story. We're going to dabble a little bit.
So we're getting long the Aussie dollar franc.
Yes.
Good, because we're getting paid to be long, which I'm obsessed with it.
Even though it is literally pennies.
But over time, like the amount of positions I held, I got an extra $30 out of the positions I was holding.
Exactly. Like if you're long dollar Swiss franc with like $500 a margin. That's like $2 a night. And on Wednesdays, holding it overnight, 3 days a roll, you're boosting that 3x.
Wow. Hell yeah. You get your free cup of coffee on Monday.
That's what I'm talking about.
I'll be waiting.
Mr. Glenn, thank you so much for joining us. That was
Thanks for having me.
fantastic. As always, we love having you on. We're going to let you go and have lunch. I hope you enjoy it.
That's the plan.
And
Thank
we're
you,
going to
guys.
stick around.
All right.
Yeah.
All right.
Yeah,
Thanks
yeah.
for coming in.
I'm long the Aussie. I'm long the dollar Japanese yen, and I'm long the Aussie franc.
Yes.
Both paying me to hold the positions.
Best
It's
of luck.
it's my thing.
It's a nice little kicker.
Yeah. Yeah. Well, enjoy lunch.
Thank you, sirs.
We'll see you on the other side.
Yeah, we'll see you later.
Always a pleasure.
E-mini S&P 500 futures up 42 right now. We've got the NASDAQ up 230 and the Russell and the Dow up 100. The Russell really the only one moving to the downside here. If you've got some stuff to trade, please throw them our way here in the chat, and we'll get to it.
I closed some positions right when the show opened.
Ooh.
I closed that Apple call diagonal spread.
Yes.
That was from earnings, and then just got bailed out because Apple go moon.
Yeah. Big
Yeah,
move
that was
today.
it was a small winner, but I got back like almost $500 today. So that was a 60-cent winner, and then I closed an 80-cent winner in the Target call diagonal spread at the 110, 105.
Nice.
And then I bought the micro crude contract that I was trying to get filled in yesterday. I bought that at 64.67.
There you go. Even lower than your 65 because you were waiting for 65 yesterday. And now you got it today. That's a nice one.
So yeah, a couple new positions here.
Yeah.
And then took some risk off. I'll be back for Target earnings, but anytime you can take profit off before earnings, I think it makes sense, especially if you're going to just restructure a new trade for earnings. We got a couple weeks until they announce.
I also, while we were talking with Glenn, I put on, and I did a number of FX trades, but I also put on a 6E position, which is the Euro futures. I did a slightly short skewed iron condor here. IV rank at 44, so you're getting a little bit of a pop and vol here. And it's been a pretty good trade between 115 and 118. That's kind of been the range that the Euro has stayed in here for the last couple months. So playing for more of the same.
Sweet. Got some nicknames for Glenn. G Money. I like that. G Money. Sovereign of Swag.
Okay.
I like G Money.
G Money.
It's going to stick,
Yeah.
I think. Andrew, yes, Thomas is on Tuesdays, but you could always tweet at him at FX Westwater.
Yes.
If you have specific questions. Or
Give
you
him
can
a
hop in the
follow,
YouTube
too.
chat. Yeah. On higher VIX IV rank days, the credits on SPX 0-day flies seem higher than what we have been seeking, around $8. If the IV is above 25, but the credit is around $8, would you place the trade? Yeah, I mean, if you're doing 0-day flies or iron condors, I think you're doing them agnostic of the VIX. But if you're picking your spots and waiting for a VIX pop and then placing them, that works too. But yeah, you're going to be able to collect more or get wider spreads if the VIX is popping on the day that you place it. So it can be a nice entry point for sure. Speaking of entry, how do you handle trade entry paralysis? I feel like I find a trade and talk myself out of it. Second is, how do you overcome the fear of uncapped risk with naked calls?
Ooh.
I don't really sell naked calls anymore, but
you do strangles.
I do strangles.
Yeah.
Yeah, strangles.
Yeah.
You just have to have it. You have to do it in a product where you can absorb any and all volatility.
But that's size.
That's size.
So it's
same with your trade entry paralysis. I think
Yes.
if you size down, you have less of that.
Yes.
Because you're not emotionally attached to the trade.
Yes.
Where if you're trading a big trade, you're overanalyzing everything, and then you click the button, and then you overthink it, and you close it.
Yes.
So I would say size down. It'll help you out. But for short calls, if you're uncomfortable with the upside risk, just do a call spread.
Yeah.
Do a Jade Lizard, sell a put, and then sell a call spread. If your credit is close to or exceeds the width of the call spread, you have no upside risk.
Yes.
But yeah, another thing is like for earnings strangles, for example, if people ask, can I sell the strangle in the earnings cycle? I like to say just get rid of the call and move your put up. If you're trying to collect some sort of premium, you can get the same premium if you get rid of your call side and just move the put up. So maybe that's your trade. Maybe you just do short puts a little closer, and then you alleviate all risk to the upside. Reddit still holding a 170, 180 call spread, way in the money. Max risk is 834. Close the put side.
Yeah, you're stuck. Do we know the expiration?
August 15th.
I would just hold it because it's a free shot. I mean, you got
same trade on.
You got pennies left to lose on it.
Yeah.
The markets are a little junky on the 170 strike, but you got nothing. The loss is already there. Who knows? If something happens in the market. I mean, this stock is having $10, $20 ranges, so it's not out of the realm of possibility that you can make some money back here. I mean, the expected move for the next 9 days, $17, puts you right back at the money.
And if you get that move to the downside, if it goes down to 190 or 195, this spread will all of a sudden be trading for $5 instead of $9.80. So, if we get an expected move to the downside in short order, this spread will come in a lot. So, yeah, unfortunately, it's a loser, but fortunately, it is defined risk, and still got some time left for it to work out. Is it a good idea to sell calls against SPX? Kind of the same thing. I would prefer to do a strangle versus just short calls. I think there's more efficient ways to place a bearish trade to the downside in SPX with the volatility in the 15% handle. So like diagonal spreads, butterflies. There's just more efficient ways to not take all the risk and not use all the buying power.
Yes.
I like to do defined risk diagonal spreads to the downside in something like SPX or SPY, but you could also do broken wing butterflies on the upside. Like, just for an example, in the September cycle, 6,400, 6,420, 6,460. That's trading for $800 with $1,100 in risk. So there's ways to play for downside moves without nearly as much risk.
Yeah, agree.
Let's see. I hate end phase. Yes.
Yeah, that stock stinks.
Same. I don't know why I got back in after all the pain I
know, we got bailed out on that one.
Yeah.
I'm only out a couple bucks, but
yeah.
I sold this put at 270. I'm out like $250. 277 is what I sold this at. So continue to roll it, see what happens. I mean, this thing, it's death by paper cuts to the downside. I feel like it's just $1 a day every day.
Yeah. I have the 40 strike short put. I guess I could sell the 35 against it and go inverted, collect $1, but $1 for 44 days feels a little light for the stock that's just moves.
Can only go to zero.
Correct.
It's a pig. Yes.
Gonna start putting on diagonals and counters with this low vol.
Yeah.
Yeah, it's a way to play direction. Like I've got this calendar in live cattle that we put on yesterday. It's working out nicely. But yeah, calendars and diagonals, you're still taking advantage of near-term IV by selling the near-term short option. You're buying lower IV in the longer-term cycle. It's a very efficient use of capital, diagonals and calendars.
You know what I had as the earnings after the close today?
What?
DraftKings.
Ah. Interesting.
You have interest there.
I would play it to the downside.
Whoa.
Yeah.
Why?
Because
you?
they have so many of these like tax stories that come up, and now they have this big in the beautiful bill thing with the
big beautiful
with the inability to write off losses.
Oh yeah.
So if you're playing on different sites, you can only write off 90% of your losses on one site. Let's say you've made money on DraftKings, you lost money on whatever. You can only write off 90%. And if someone's doing it small, that's not really going to matter. If you're siloed to DraftKings, it's not going to matter.
Mm-hmm.
But if you're doing size, like let's say you make $100,000 a year doing this stuff, but your revenue is $2 million, that's a big problem because now you can only write off 1.8 million on your revenue if it was like let's say you made 100K, but the revenues were huge. So that's going to be a big problem. So I would say I don't see much of an upside in this stock right now. Other than
football season.
That's obviously going to be a big revenue boost for them. But I think there's a lot of issues in the space right now. So you know what? I'm going to do it.
Sell stock, sell put.
I think I'm just going to go
What about
diagonal.
Okay.
Oh my God. Yeah. The November 45 is $3, $4.
Okay.
November 45.40.
See if I can get filled on this little Johnny.
There you go.
Okay. I'm gonna
Call
support you by not having risk to the downside, but I'm gonna do a little call ratio in the 2-day. So end of this week, 67.68. That's my call spread, long call spread, and then just going to the 49, doing this basically for zero. I did it for a 2-cent credit. Gives me a break even at 51 because I have that $2 wide call spread here. So gives me a little bit of a buffer to the downside. And if we open basically unchanged or maybe a little bit lower, I might be able to close this out for 20, 30, 40 cents, whatever the case may be. But no risk to the downside. So if Mikey is very, very right on his thinking here, he will profit and I will be fine. No loss.
Love it.
Beautiful.
Yeah, I'm gonna buy the November 45.
Okay.
Because you get 107 days for $1 more.
Okay.
And then I'm gonna sell the 42.
What expiration?
In
One
the
day?
weekly.
The 42. Okay.
Just a small little $3 diagonal.
Okay. I like it.
Yeah. So let's let that thing simmer. Let's see. The GM. I just lost my spot.
No.
CELH. Celsius.
Oh yeah,
This thing
Celsius
still trades.
Yeah, it's back. I think they have earnings before the open tomorrow. Yes, before the open.
Wow.
They just had that little kerfuffle where there were Celsius that was like really White Claw or High Noons or something.
Oops.
Oopsie.
It's amazing.
Yeah. This one's still like.
This one scares me.
Yeah. I mean, I remember when it got down here and this was painful. Yeah, I'm going to pass on this, but I appreciate it.
With a stock that makes a big move and you're profitable on the position, do you wait for the 50% or do you lock in the gains? If it happens in a couple days and you're at like 30% or 20%, we usually just take it off.
I mean, Apple was a perfect example. We both had that position. Mike was holding on to his for a little while from earnings. I had a new position that I put on, a handful of days ago, 5 days ago, and it was a couple $100 profit. I like to just take the money and run, pat yourself on the back, free up that capital, take off that risk. You can always, get back in. do something new, take that risk off and sell it out of the money put spread, or, always trying to take a little bit of, massage my risk a little bit. E-mini's up 39. They're crashing. Down 10 from the highs.
Wow.
Shocking development.
Wow.
How will we survive?
Is there a USD Indian rupee pair? I'm searching.
That is a good question. I'm
not sure.
Don't believe so.
INR.
I don't know.
I don't see it.
You can email support at TastyFX, though.
Yeah.
And have them look into adding it.
For sure.
Yes.
Let's see. Palantir.
And the stock. Up only mode. I did a little trade for the cherry picks. You might like it. I did a call ratio. I widened it out. I'm in September. So you can actually do this further out of the money if you'd like to, with the stock up $4 or $5 today. I'm long the 75.80 call spread, $5 wide, and then I did the 185 200 short call spread. So it's, $5 wide long call spread. My short call spread is 15 points wide, so I have $1,000 in risk. I did this at $1.70. It's currently marked at $2, but it plays into the call skew. No risk to the downside. It's a pretty juicy premium. If I was setting one up now, you could do 180, 185, 190, 210, or do the 195, 210, and that trades at 90 cents. That gives you a break even at 200. Scares you.
Does a little bit.
Okay.
Stock is just mooning.
Yeah, I know. Well, I figure maybe someday it'll dip.
Maybe one day.
Maybe.
Hims strangle, but using a call ratio on the upside. 40 put, 60-65 in September.
40 put, 60-65. Yeah, this one's been a fun one to trade. If you look at this chart, it's a wild ride in this stock. Where's 40 at? I could probably be interested in something like this. You could do the 55-65 and basically do that at a scratch, give it a same sort of break even. I would probably actually rather get the bigger credit. But this thing moves. I mean, this is a mover. $4 today. Do I step in front of this? A 60-65, $2.60. Yeah, why not? It gives you a little extra to the upside here. Let's see if I get 265. This.
There you go.
The break even on the upside is 72 and change. On the downside is 39 and change.
Pretty wide range.
Yeah.
Positive carry for the Swiss franc. So that was for the Aussie dollar. So long the Aussie dollar, short the Swiss franc. There is a positive carry with that pair if you are long that pair. If you're on the TastyFX platform on the trade or on the watch list tab, you can see the swap bid and swap ask. So the swap ask, if it's a positive number, it means if you are long that pair, it's a positive payment. If you are clicking the negative, whether it's a bid or ask, you are paying to hold that pair. What's your plan for Snap?
Me?
Me. So I have 100 shares and a call ratio, the 10, 11.5. So it's down $1.60. There is not much to do with the stock other than hold the shares. My basis on this is at 980.
This stock stinks, by the way.
Yeah.
It never goes up.
No. No, it does not. Yeah, so right now there's no premium to sell.
No.
We need this thing to get back up to 9, and then maybe you can sell premium, but I would just get out of it.
No.
But yeah, I'm going to be in this for the long haul now.
Yeah. I made a nickel.
There you go.
On my 1x3, I think this was a fast market trade that we did. I just bought back the 11s this morning. I got a nine strike long call that's penny bid that I'm leaving on for the rest of the week, see what happens.
It is recovering from the lows, which is nice, but yeah, we need it back at 9. It's been there many times this year. It's just a matter of patience. Couple more here. Got a sign on Chipotle during April's drop at 60. Should I keep going with covered calls or cut my losses and sell the stock?
You got 13 IV rank. I would ask yourself if you want to be long the stock, and if you do, if you don't mind the capital, and if you're bullish, there's just not enough volatility here to sell it. You know, I'm not selling a 45 strike call for 90 cents. I'd rather just play the upside, hope for move higher, and sell out for a couple dollar less loss or whatever the your exit is. 30% implied volatility, just meh.
Yeah.
At lows, just not enticing.
What are we doing with crypto? I have shares of ETH A and IBIT, looking to sell a strangle around them to collect some premium with this range grinding. Yeah, that works. I have a strangle in IBIT. I got the 65.75 in September. It's been a great trade. And it will continue to be a great trade, I would assume. But yeah, I like the covered strangle.
I might do another little iron fly here. 25.30. $2 and change. Buying the wings just to cut buying power down by the 40 and the 15. So it'd be 10 points wide. I mean, this is, let's get in this.
I like it. Do you still have the pins Johnny trade from yesterday?
I didn't close anything. I do. Do we have this for earnings? Was this an earnings? Oh, it's after the close tomorrow. So we did this. What was this? We did this at $2.37. It's basically unchanged here. Oh, yeah. So we're going to hold this through the end of the week. 40.36. Put diagonal.
Yeah, pins. Pins is a crazy one.
Up
Stocks
only.
are nuts.
50%. I know, it's crazy. It's all crazy.
Was looking at a BABA covered call. Sorry, call vertical. Selling the weekly premium and buying September.
So a diagonal.
Yeah, so buying the October 120 call and selling the September 130 or 135.
Yeah. I mean, I think these sort of trades are interesting right now. Direction is your choice, but just in general, these diagonal spreads, you have the volatility is not juicy across the board in equities. So I've been leaning towards these sort of setups over short put spreads, short call spreads, just because I feel like the vol is just too low. So I like it.
Yeah, you could even go to the August 22nd cycle. That's where earnings are priced in. The 130 is trading for $1.70, which is more than half of the value. Actually, about half of the value of the September one, but it's a third of the amount of time because you're getting the IV boost there. So, but yeah, I like it. Either one.
What about a little upside crab trade?
Could do that too.
120, 130, 140, and I'll use the weeklies. See if we get filled on this. There you go. We're in. I like it.
Andrew, that rule was for gambling. So, sports books, poker rooms. Does not apply to trading. Different tax categorization. It's for the W-2Gs as opposed to 1099s. What's the Apple announcement? They're announcing that they're investing $100 billion in the U.S. That's what I could find on the interwebs.
Yeah.
Enphase will come back. If first solar is so high, it will follow. Be patient. Keep leveling down to 30, 25. Yeah.
Yeah.
Wise words. Yeah, I have just one contract at 40, so
fine.
It doesn't matter. It is what it is. It's just more pain for the year.
Yes. One more?
Yeah, let's even get one more here. Better long after getting crushed, AMD or Upstart? I would go with AMD.
Yeah.
I like SoFi better than Upstart. SoFi is near highs, but it's when I think about the two products, and SoFi ripped after earnings versus Upstart selling off. And SoFi's smaller of a product, so it's easier to do whatever you want in there.
Yeah.
But AMD, I would say, for sure, just because it's in that AI chip stock categorization.
Yeah, what was the strangle we were looking at yesterday?
I don't
140, 180 maybe, or
I think so.
No,
Maybe something like that.
140, 190.
I think it was a 130, 190. I think it was 130, 200. It was something with a 200 strike. Maybe the 140, 200.
Yeah. Well, that strangle came in nicely today. So good job out of whoever sent that in to us.
True.
Yes.
All right, we're out of time. Thanks for tuning in. If you got any further inquiries, you can always ping us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Glenn is at Glenn Freibarger with an A. Go give him a follow. Go let him know we need the descriptions on the Tasty FX platform. But yeah, enjoy the rest of your trading day. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
We're back. Still Wednesday, August 6, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, how's your turn through the middle of the week going?
It's good. I mean, we had, I'm putting on an oil trade, so the IA numbers came out, but other than that, still a little long natty gas, staying out of equities besides for Tesla. So, you know, I'm not too active this week, but getting in there with a few things.
You know, we're having a pretty quiet day here in terms of data. There have been some earnings releases that came out before hours, after hours yesterday, some due ahead. I know that you covered them extensively in this morning's 5 Futures note on the Tasty Live News and Insights tab. So I would encourage people to go over there on the website. Outside of that, though, we're looking at this 10-year note auction, which just came out at the top of the hour. We'll get there when we go to bonds. We're kind of at a technical turning point right now for the broader stock market. Volatility, ebbing and flowing, not really going much of anywhere, but stocks are on the up. Is this the time to get back in bullish if you didn't buy the dip on Friday? Maybe we're at that threshold, Mr. Westwater.
Yeah, it seems like we want to go a little higher. I think if the semiconductors were in this rally, I think, you know, we'd be doing a little bit better, a little stronger conviction. But earnings have been mostly positive. I mean, it's been a good season. That's what investors were looking for amid the tariffs, amid, you know, economic concerns for expanding corporate profits, and we're getting it. So, I mean, I think that's one thing that's really helping push this market forward.
Well, so we can pick our poison here today, right? Do you want to be an equity market bull or basically at the line in the sand? Do you want to be a bear? Decent place to get short. Before we go into stocks, though, I want to talk to you about those energy inventories that came out this morning. You were just mentioning you're sizing up potential trade opportunity in oil. I was going through the EIA report and looking at the crude oil stocks in particular, and I can't help but notice that crude oil stocks, no matter where you are in the country, are basically at the bottom side of their ranges right now. So oil inventories are fairly, well, they're low. Is this something that could prevent a steeper pullback in oil prices? And generally speaking, what's your read on the overall energy inventory situation right now?
Yeah, I mean, I think I wouldn't really expect us to go under 62, 63. That's kind of where I'm putting my shorts at for this iron condor I have an order in right now. But, you know, we're back at the bottom of this range that we've been trading at. You know, we traded at it through a lot of July, right at 64, 65. We didn't go under there. I mean, today's a big range with the candle. I mean, we're coming after a few days of weakness here. We got what seems to be a slightly bullish inventory report, but it's not really helping us either in terms of price. So, I mean, it's kind of weird because you also have Trump now threatening India, with these secondary tariffs for purchasing Russian crude. The deadline is coming up for this previously 50 days and pushed forward deadline for Russia to negotiate a Ukraine ceasefire. And yet, the geopolitical premium that you would expect to be in here from this is not really showing up. So there's still some concerns about maybe the labor market slowing. That jobs report we got on Friday still kind of weighing sentiment down, even though we did get this better than expected inventory draw out of crude oil stocks of 3 million barrels versus 700,000 expected decline. Gasoline stocks, distillate stocks went down a little bit. Exports were up a little bit. Refinery run rates are up a little bit. So, I mean, the actual fundamentals with crude oil, it's looking pretty good. You had Saudi Arabia again raising prices for their Asian customers, indicating that they expect demand to remain at least robust enough to consume those price increases. So I don't know. I think this is a good floor right here that you're trading at with this range we had back in July, right around 65. So I'm doing the Iron Condor. I expect prices. I'm getting myself a little bit more room on the top side. So if we make $2, $3, $4 higher, I'm still going to be okay with that. But staying a little bit closer on the downside here. So, I think it is a bullish inventory report overall. I think there's those economic concerns and maybe the market doing some kind of like taco trade on this, Trump trying to force Russia to the table with these tariffs on oil purchases from countries. So overall, I don't know. I'm leaning slightly bullish, but I'm playing it in a way where if we stay in this range, it's going to benefit.
Yeah, I mean, I look at the data itself, right? Because you see the low inventories and you see the economic data declining. So what are the odds that we have a significant drawdown here further? I don't know if that's going to be the case. To me, it means a lot more chop, quite frankly. We're going to have to rebuild the inventories at some point, but with inventories already on the floor, if prices go much lower, you start to get into break-even territory for a lot of the major producers here in the U.S. And why not refill the SPR? I mean, we emptied it out at what, $78, $85, $93 a barrel in some sales. And so refilling it down here at 65 or 60 means net positive cash flows as a result of the operation, but we have to start refilling it. Does this keep a floor under oil prices? Maybe. I think there's enough here. It's one of the reasons why I'm still looking at short iron condors and oil, Thomas. We're going to go over there in a little while. Volatility in that space, 30 IVR or so the last few days, but we're wrapped right back around 65 and 65, 64, depending upon what contract you're looking at, more or less the midpoint of that post-Liberation Day trading window, which captures the highs that you had during the Israel-Iran 12-day war. Before we get over to the energy sector, though, which is certainly zigging and zagging on its own today, we're going to talk about these stocks that are back into resistance. Here we have an S&P 500, 63, 67. I suppose right being on the line of the sand, we have the July 30th swing low that day at 63, 66.75. We're not quite poking through there yet, but as close as it gets. It's the halfway mark between the high that we had last week and the low that we had at the end of last week after non-farm payroll. So Thomas, it looks like this is as coin flippy as a coin flippy comes. It's a 16 IVR. Do we play the range between 65 and 62.5, or do we not do anything?
Yeah, I mean, what are you thinking? Like an iron condor for this to play the range?
Well, just looking at the calendar this week, I mean, really what's going to get us moving over the next few days, right? Is there something that could break us outside of, where we've been trading? I don't know. So sizing that up, why not take a look at a small constrained iron condor sort of situation? It's only a 30% probability of profit. And this is obviously a 40 TTE. So I don't know if that's the right structure here, but I guess my question is, why would we break below 22,800 in the NASDAQ? Why would we be breaking through 24K? We're sitting right in the dead center midpoint between the highs and lows that have been carved out.
Yeah, and I think this point in the range, reflects some uncertainty about where we go from here, right? Earnings were good. The jobs report signals, the labor market's getting weak. Fed rate cuts look like they're coming, but what's the catalyst that's going to put us back on the preordained path of that rally that we were seeing earlier this year? Is it something like the tariffs have to come off? Because after this earnings, where else does it come from? I mean, we could just continue to maybe grind out higher, but I think the market needs some kind of event-driven thing that will catapult us or get us back on track here. Right now, it seems like we're in, like you said, it's a coin flip. We're kind of wait and see, and if you're going to enter range trading now, then that becomes a point where you either need to capitulate at some point or you need to break out higher. So playing it right here, I think maybe staying neutral to a slightly bullish bias is the best way to do it.
Neutral with a slightly bullish bias. I mean, it's a market where I certainly have, and I've articulated these and shown the charts of seasonality for the month of August as it pertains to volatility. It's not like the stock market itself has a bad month. The average gain for the S&P 500 over the past 10 years has been a robust 0.7%. So it's not a month of July. We're not looking at 2.5 or 3% on the board as a potential outcome, at least if history is any guide. I didn't buy the dip the other day. I was feeling a little bit better yesterday that I didn't buy the dip. And then all of a sudden the market now here today again, bouncing back, Thomas. So I'm still very much in a stuck kind of mindset. I think if we're going to take this approach, I don't know if the typical, dare I say, 45-day window here is appropriate given what we've seen in terms of the price action recently. Maybe something shorter dated, maybe going to 35, maybe going to 30 and riding it out for a few days. So consistent with that, I mean, that would be something along the lines of, we'll call it 61.75, we'll go up to here, 34% probability of profit, risking one to make one. You're obviously not going to see max potential in a trade like this, but playing for some sort of chop right now in the market, as the market is sitting at this midpoint and effectively starting to carve out a new sideways range, that might be the most prudent thing to do for a month of August where you typically get better two-way action, especially once you get through the expiration window.
Yeah, I think I'm on the same page there. I mean, if I'm playing equities anywhere right here, it's probably going to be ES for August, just because there's some indecision. I think it gives you a little bit of that breath where you could kind of be controlled from volatility a little bit more versus something like the NASDAQ right now.
Yes, and I see this, market shaping back up here a little bit where we did break down to the 1 month the other day. We immediately reassert ourselves back above there. Today, back above the 1 week, the 1 month. You can see it in the S&P. You can see it in the NASDAQ right now. So technically there is some semblance of a firming up, and we are firming up from a place where the market bottomed out in the middle of July. Maybe nothing bad comes to pass, Thomas, and obviously I have no idea. I'm just relying on history for August being a crummy month as a guide. But if it's not, then I'm going to be way underweight equities as this thing eventually gets moving to the upside.
Yeah, I mean that happens, but I think like you said, the August seasonality, it doesn't offer you much if you're a bull. It doesn't offer you much if you're a bear. We're in the middle of this range right now. It's really a point where it's boring to say this, but there's really not that much to do. There's really not a high conviction trade here.
No, I don't see that either. And I'm looking at the recent highs here in the NASDAQ the other day. Ellie and I on Monday went through an exercise of what are the key swing levels. So for the NASDAQ, it's 23,350 or so. For the Russell, 2210, for S&P 6365. we're straddling these areas where the market, if I see a 23,400 print on the NASDAQ, this to me has a path of least resistance that brings us right back to the all-time highs. So volatility concerns pertaining to seasonality be damned. Let's go back to just riding the rails of this thing to the upside, reset the out-of-the-money S&P 500 puts, keep those in our back pocket perhaps for the end of September, post the Fed meeting, and then go back to the July well of buying short-dated calls and hoping that they run up 1% a week or so, and just putting more coins back into the slot machine. The technicals and the price action have to speak for themselves. So maybe this isn't like every other year where August produces its vol expansion. But I can't help but notice yesterday when the Russell was outperforming its NASDAQ and S&P 500 counterpart, today it's lagging them a little bit more here. What are your feelings on the Russell at these levels, having jumped back into that sideways range that was carved out effectively the start of July onwards?
I mean, the Russell, we were looking at that almost breakout there. Then, gave up the trend line, moved below the moving averages. Now we're having trouble getting back above there. So I think this is kind of reflective of a weaker U.S. economy where, all of a sudden this jobs report comes in and the Russell doesn't look as enticing anymore. Because if you get a weakening economy, maybe even just a couple quarters of a weak labor market, the Russell is going to suffer there, even if those rate cuts come in. There's a couple of good things happening for like regional banks and stuff, but for the Russell as a broad component, I'm not going to get long here.
No, and I'm still leaning short a little bit of deltas here in the Russell. I'm not completely enthused or convinced that this is a bounce that's going to last. More importantly, if the economy is careening towards recession, which some of the data would suggest that's not just an outside risk, but more of a central tendency here, Russell should suffer. The interest rates moving around, of course, helps the Russell a little bit more than the other equity indexes insofar as these companies typically don't have the type of balance sheets and moreover have floating rate debt. So, in theory, rate cuts could help balance things out. Maybe that produces a cushion or a floor underneath RTY. I think the volatility here is really interesting, though. It's only an 18.5 IVR, Thomas. We look at the VIX here. It's back under a 17 print with today. So we have the bounce last week, Thursday going into Friday's non-farm payrolls report. We've effectively erased all of it. I don't recall VIX at 17 2 weeks ago being problematic for me when I was looking long equities. Do you think at these levels we really have much to worry about?
No, I don't think so. I mean, we had that little spike, but it's looking like volatility is just going to kind of trend sideways here. Of course, you never know when you're going to get that expansion of vol, but you want to have some cash to be ready to trade on it if it does. But the VIX isn't really making things too exciting right here.
No, and if we were to close here, it's effectively where we closed on July 25th, and thinking about where the market was on July 25th, that's 64.25. So maybe we're 60 points removed. It's 1% lower. We're digesting it. The market was really overbought at the end of July. 93 percentile or 93rd percentile, for CTA position in equities. That's stretched. It's really stretched. And maybe the past week or two, we've started to clear some of the cobwebs. We're not going to have the positioning data update until this Friday, of course, when the CFTC COT report is released. But it's going to be an interesting one. So are we clearing the deck out? Or is the market getting a little bit less saturated? Are retail traders taking some profit here? That is something I saw today, for what it's worth. Citadel put out a deck. Retail cash equities have been net buyers 27 of the past 28 weeks. So this entire thing right now, we think about that fact and the fact from the positioning report, hedge funds are the most short that they've been stocks basically all year long. This rally is really hated by institutions. And as people who are more retail trader focused, Thomas, I think one of the reasons why I'm so concerned is if this thing spills over, the people who are going to be losing money are more likely to be listeners of the show than those who aren't, because these are the people who've been riding it long since April.
Yeah, and I mean, we're going into a time where, retail is going to step away a little bit from trading. You get, low volumes all summer usually, but people are going back to school. You're getting busy for the year. You could be away from the desk. You could get caught sideways. But yeah, if there is a spillover, retail's going to take a hit. Then you get the declined prices. Then institutions step back in to get those, discount prices. So is this where you want to, maybe take some chips off the table right now and wait for that to happen? Of course you can miss out on grinding back higher, but it's all about how you want to eventually play for an expansion of volatility when it does come.
In terms of top performers, before we get off the equity market here today, it's a top heavy day is what I should suggest. Good way to illustrate this. You go over to SPY, market cap weighted S&P up by 0.67. RSP, equal weighted S&P 500 is down by 0.16%. So QQQ, 1.03% higher. QQEW, equal weighted NASDAQ, only up by 0.28%. So the breadth isn't fantastic. Apple is a big mover, making $100 billion investment here into the United States. If you saw that news break earlier. So Apple share prices back up, much needed. Perhaps we reorient this and the consolidation continues. But Apple being the place of leadership, it's a market that, broadly speaking, doesn't have a leader right now elsewhere. Yeah, Amazon's up a little bit, but this is all about just the tech. 1, 2, 3, 7 ETFs in the positive: XTL, XOY, XRT, XLP, GDX, GDXJ, and XLK. And you know what? XLF just joined the ranks too. So 17 of the 25 are down. Some of them that are up are miners and related to the metals. This is not a healthy looking market per se. That's why I just think it's worth waiting. This feels like a little bit of a squeeze because of the Apple news. I don't know if there's a lot of meat on this bone.
Yeah, I mean, Apple's carrying a lot of weight today. Some of these smaller companies on the tech side, especially for chips, things like Super Microcomputer. I know it's smaller, than some of the bigger companies. It's only about a 25 billion market cap, but they're down about 20% today. So, they do provide AI infrastructure, servers, things like that. We're in a time where some of these companies are doing really well with AI investment. They're doing well with catering to the market. But then you get these spots where, the investment doesn't translate, all these dollars going into the industry. It doesn't necessarily translate into, it's not raining money on everyone. There's still problems in the industry, the way this money's being allocated, the way players are trying to gain market share. So, another one's AMD hasn't, even though they had pretty good, the outlook was good, they struggled in their data center business. So that put the hit on AMD.
Indeed it did. Other companies leading the way higher, Broadcom pushing up over $300 a share. Again, nice run there. Amazon getting a little bit of a bounce here too, up to 220 after their bad earnings report last week. They just haven't been able to capitalize on this. I think Jim Cramer had a really good point today when he said that Amazon's been penny wise, pound foolish. Everyone else is just splurging on GPUs, and Amazon's trying to develop their own chips. Just buy NVIDIA chips, guy. It's not that big of a deal.
Yeah. You try to do something too fancy. I mean, NVIDIA does what it does well. So, I mean, if you want to try to do it as well as them, you got to spend a massive amount of money.
You'd have to. So we have this 10-year note auction out. Oh boy.
Uh-oh.
Bonds weaker ahead of the 10-year auction, and I don't know if the auction gave us what we were looking for. One of the caveats of the bond market rally in recent days has been, in the absence of data, we would probably look to the auctions as the more meaningful events. There's some Fed speakers this week, but the market's jumped to pricing in a September cut. So more and more of these folks coming out saying that September cut's possible doesn't necessarily move the needle. But the 10-year auction, high yield, 4.255. But we were looking for 4.244. So that's a 1.1% tail. Not good. Bid to cover ratio, 2.35. Is that better and worse than what we've seen recently? It's worse than what we've seen recently. I'm looking at this auction, Thomas, across the board. Indirect 64.23, lower than it was recently. C minus, D. I mean, it's just not good. I think it's really interesting that we get to the latest iterations of Trump's trade news and this and that, the other thing, and foreigners now on the other side of it looking a little bit less enthused to help continue to finance the old U.S. economy. Maybe this is enough to get us back moving a little bit lower, but goodness, it's not producing any semblance of volatility right now. 6.8 IVR in the 30s.
Yeah, I took off my long call spread in ZB yesterday. I wrote it all the way from early July, so I was, I was in pain on it for, a few weeks. I held it, came back up, ended up coming out with a decent gain on it. But after the 3-year note auction yesterday, I just wanted to get out. I tried to get out my ZN position. It did not fill yesterday. So still in that. I'm probably just going to get rid of it, especially after this auction results. And then maybe wait a week or two until I make another play on the treasuries. So, yeah, I mean, I think we have a 30-year tomorrow, right?
Yes, we do. Yes, we do. 30 years are tomorrow. I'm sorry, I'm just trying to find more information about this auction. It's just not kind of blowing my mind. There was a weird tick earlier this morning too, Thomas. I don't want to miss that. Not sure what that was. I've been looking all day to see if that was a fat finger or if it was something with the feed. No, that's everyone. Everyone's seeing the same exact thing. There was something that, because this morning I was looking at it saying, how come ZB's down 1.5 points all of a sudden? Wasn't it like 10 minutes ago up at near 115.5? But we've since recovered. Fading a little bit here after the auction. The volatilities are remaining low. Thomas, the question is, are the current approaches still viable, right? At the end of the day, volatility informs the way that we approach the market. If volatility is really low, is it worth selling? Maybe. You really got to think about it. If it's very, very high, almost jump in blindly and trust the process. Trust your mechanics. Trust your risk management. So at these levels, 7.4 IVR, could I make the case that we're backing away from range resistance here? Forget the triangle for a second. Let's go over to a rectangle and just size up our charts. 112.5, we'll say, down to 109.5. That seems like a pretty tight range that's just run into resistance. So if we're thinking about this being a range-bound market, that gives us our 111.5 level still as the midpoint. Is this a good place to put on the short iron condor? Maybe not. Maybe you get a little bit of a pullback and put something like that on, and then use the opportunity in whatever setback, given the broader recession concerns circulating. Low vol, some out of the money exposure. Get that protection in your pocket. Because if, again, we follow the path of history, since 1980, the best places to hide out during recession are bonds and the long end of the curve and gold, excuse me. So pull back in. You set to the midpoint. Otherwise, short iron condor against 112.5. But this is still very much range bound, and we should just appreciate the fact that we've reached the top side of the range and they may need to settle back in a little bit before we get our bearings straight once more.
Yeah, and I mean, the market's been waiting for yields to come down for a while, but now it's like, the yields came down on the jobs reporting. Obviously, that's driven by, a weaker labor market, getting recession fears coming in. So, if you're long, especially ZB, are you seeing that as taking a position where you think equities are going to underperform?
That's a good question. Yes. If I'm trading in bonds and notes like recession is coming as something that's informing the view, then it would stand to reason that I would not want to have significant long delta equity exposure in stocks during that same window. But I'm also struggling with the idea that maybe this is two worlds, Thomas. Maybe this is like something we talk about on overtime where it's more of a K-shaped recovery. And the economic data can get worse, but it really doesn't mean that much of anything for corporate earnings. And we always say Wall Street and Main Street are not the same thing, so that shouldn't be news. But it makes it even more so the case where Wall Street is even less reliant or dependent upon what's happening on Main Street. So could you have a market where the bonds are pricing in recession, but thanks to AI and all the money that's coming in from digital and advertising and abroad, that Facebook keeps printing dollars and Google keeps printing? Yeah, that could absolutely happen. And so the stock market sees a slower pace of gains, but it holds in there because the giants that constitute more and more of it are continuing just to be gigantic cash cows.
Yeah, I mean, it's a good point because these massive companies that are pushing the AI investment, they can withstand a recession, and they don't necessarily need to, spend less during a recession. If they have this, golden egg of AI in their sights and they're going at it with everything they have, executives, if you're saying, the labor market's weak, we're in a recession, you're not going to necessarily say, let's take our foot off the gas, because, no one's going to want to be the first one to take their foot off on the gas after going after AI, because that just means you're going to lose future market share. You're going to fall behind your competitors. And this is a frenzious market for AI where I don't think that's going to happen. So I think that's a really good point that, even if recession, some of these players that have been pushing this AI-driven rally, it can keep going.
If I were looking at this market and thinking this is still a range and I want to take a brand new trade in here, we could go do something like selling a call spread, technically. The problem is, even at 64% probability of profit, this is not a fantastic risk to reward.
Yeah.
Usually in the 60s, we're looking for something around a 3-to-1. Looking to make 250, risking 750. This is a 5-to-1. And we need more buying power than what max profit's available to us. So I'm not inclined to be enthused about this. If the idea is, if we're putting this on with fresh eyes for the first time, would we do this trade today? Maybe if we were to turn this into the short iron condor here, you're going to get below 60% pop, but then all of a sudden the risk to reward shapes up a little bit more favorably where it's closer to that 3-to-1 and your buying power isn't dwarfing your max profit potential. So calling the top, this could be the better way to go about it. Tinkering with the strikes it's there, but it's a 7.4 IVR. And I think we need to acknowledge the fact that first and foremost, our North Star here is, where's the opportunity? Well, where's the volatility? The volatility in equities and bonds isn't great. So pick your poison, right? If you're going to be directionally neutral in stocks over the short term, we see that range in ES playing out. We see that range in NQ playing out, 22,800 at 24K. Maybe we get more range bound action here as well. But in terms of the volatility, I don't know if there's much of a difference materially. You're still looking at same pop percentage and similar risk to reward if you tinker with your strikes well enough.
Yeah, I mean, if you're looking for vol right now, you kind of have to look outside of the equity and bond markets, and it's just it'll come back. I mean, but right now it's not. We're not being given much. So
we're not being given much. And to that point, we frequently mention the difference between ZN and ZB here. ZB has a 6.8 IVR. ZN has a 7.6 IVR. If our North Star, again, is volatility, and we want to take trades in products where we can squeeze the most juice from the stone, ZB has a lower vol. It's also a much bigger product. This is like the part and parcel situation why I use ZN as opposed to ZB. ZN tick value, $15.62.5. When you go over to ZB, it's $31.25. The buying power requirement is twice the size in ZB as it is in ZN. $4,070 versus 2063. So I don't know why I would go over to ZB right now is the point. There is a similar product with better volatility on a relative basis that is cheaper to trade. If you're going to go to ZB and you're really drawn to it, maybe even think about TLT. Always trying to find the most cost-effective way to express our views around here, Thomas. But ZN right now, it has the numbers that ZB would otherwise typically are afforded because of whatever's been going at the long end of the curve over the past 4 months.
Yeah, I mean, for ZN, it's, in the next couple days, maybe by Friday, if we keep moving lower, then maybe it's something like that happened last month where, you go back into the middle of the range. At the same time, if you stay supported here, maybe it sets up a base for the next move higher. We eventually get out of this range. Just not too confident in that. And after holding these ZB and ZN long positions for going on over a month and just getting out of them this week, I'm going to take some time and just let the next move play out, and then I'll take a position.
We move along to metals here today, Thomas, which are inching up ever so slightly. Bad note auction result aside, it really hasn't done much of anything to deter traders from trying to pick up gold off the lows. Ilya and Jamal in recent days have made the point that it feels like gold's been wrapped around $3,400 an ounce. How are you feeling about the shiny rock now?
Yeah, we were talking about this yesterday. I think it's just you're in this range. It's not going to do much anytime soon. I mean, the jobs report is passed. Like you said, we have some Fed speakers coming up, but I'm not expecting much out of gold, so I don't have a position right now. What I am long in is silver. That's where I'm going to stay long. Even though I'm not loving my position as much as I was when I took it, it's definitely improved the past few days. So I'm going to give it a little more time to shake out, hopefully go into next week with a better outlook. And for now, I'm staying away from gold. I think, you could play the ranged iron condor. The volatility isn't that great there, though. So, I mean, if you could find it, trade in other places. I'm just not looking at gold too much.
No, I hear that. And for the past several months, ever since gold volatility started to break down in April, gold prices themselves have struggled with gaining any significant traction to the upside. Volatility right now is an 18.9 IVR. Rare has been the occasion that we've seen it this low over the past year. But over the past several weeks, it's been this low. And what has gold done? Meandered. It's kind of listless right now, wandering through the desert, looking for something to sustain it. And it's been given absolutely nothing. I'm still leaning long because gold's been so good to me, at least was in the first quarter. The second quarter has been a lot of chipping away from those first quarter gains. But I'm liking this technical setup here, if only because 34 has been seemingly a midpoint pivot line in the sand. We do have that Morningstar candlestick cluster from last week. And now we have gold, boop, boop, boop. That's 3 days in a row where we're bouncing off of that 1 week, 1 month moving average crossover envelope. So momentum is picking up here. Stochastics, my equity, they're starting to pick back up. I'd like to see volatility expand, Thomas, but it feels like we're due for another swing up into that 35, 25 area that the market has peaked out around so many times since April. And so I'm here for that right now. The dollar is obviously helping inform that view because the dollar all of a sudden looks really ugly once more. And so gold at an 18.9 IVR, I still think it makes sense to lean long. And that's, I'm biting my teeth as I say that because it's been very difficult. Of course, Ilya's way of playing long gold has been much better. He's been short put spreads, not long calls. So he's been a happy camper here since April, whereas I've been frustrated. Maybe that's the appropriate thing to do instead.
Yeah, I've tried the short put spreads on gold a few times. The position's never done anything for me. Even when it moves, I just get, it moves 10, 20 bucks maybe, and that's it. So the times I play long call spreads and I'm actually right on gold, the position gives back a lot more. So until I can see, a position where I could get long a call spread, and expect volatility to expand with that move higher, I'm going to sit out.
Silver prices perking up. Now, volatility here is low as well, but it's been trending higher. We did have negative IVRs at the end of July last Tuesday, July 30th. And that's when silver prices fall out. And ever since then, we've started to poke back up. That improvement off of the 50-day moving average, something that we saw at the end of May here, showing support. Now, Thomas, I can't help but notice that we did have this drawn in the chart previously where the highs in March become support throughout June, and then we bump up into a new range, which that range top is roughly 3770 or so. We're now back through 3770. We're back above the 1 month. We're back above the 1 week. So the posture here in silver all of a sudden is a lot healthier looking after washing out. We never quite got that into 36, which to me is a missed opportunity because I would have been looking to buy at 36. So I wasn't able to add in. But now having reestablished ourselves back above that former high, former swing low, and you can see the wicks on the lower term timeframes pulling us back through that area, feels constructive again. Feels like whatever we just had here making its way through the market at the end of July, that washout is finished. So not ready to buy $40 calls just yet because I have already some silver exposure here. But at 7.1, if I did not 40, 41, it's a nice 3-to-1 risk to reward. Seems eminently reasonable from where I sit, but I already have my silver long trade on, so I'm not going to do it this time.
Yeah, I'm long. My position as a call spread, it's 83 days out. And I think we were talking about this maybe 2 weeks ago, putting the trade on around 96 days out. So I took that trade. I think you took it as well.
Yes.
So I have plenty of time for this to develop. I got hurt on it right away, and then the jobs report helped out. So it seems like, silver is going to do well if the economic outlook remains kind of cloudy. And, I like doing that after the jobs report because, you also had the ISM, it came in under, you have these tariffs that haven't cleared yet. So I think, overall, if, you get a market where it's working against your other positions, silver will do well, assuming the market's being impacted by, a recession scare.
So 40-41 call spread, 50 days to expiration, 3-to-1, 30% pop. If we were to express a similar type of view where we're looking around the 36 or 35-25 deltas on the other end, that would mean we'd be something like this. So that's a 60% pop, right? If you're looking for a similar type of risking a little bit less than 2 to make 1. It's a way to go about it, for sure. I think when we look at silver prices here, the floor that we need to operate around is $36, because if we clear out $36, then we have a bigger problem on our hand. So even like the short put spread 36-35, now it's a little bit worse than a 2-to-1. It's like 2.3-to-1 risk to reward, but 64% pop. Bigger product because of the buying power here, which always brings us back to, depending upon how you're playing this, maybe SLV is the better way to go about it. But silver has had a nice technical improvement. It's just 6.9 IVR leaves a lot to be desired right now. Maybe that means getting away from the commodities themselves, going over to one of the equity names, an FCX, a GDX for the ETF, XME. I mean, more than one way to slice this. But silver here has, it's at its line in the sand, just like equities.
Yeah, we're kind of at a point of decision right here. If it clears this floor that we have in there, right around, where is that? Right around, 37.5, right around there.
Yeah, 37.75. Yeah, depending upon what contract you're looking at. But churning up.
Yeah, I mean, I don't know if there's much event risk that could impact silver a lot for the rest of this week. So maybe next week is, the decision point. But I'm going to stay in it for here. If I take a little pain on it, it's okay. I have plenty of time. So I'm not worried about this trade, but I'm going to stay long.
Staying long. Copper prices up by 0.65%. Thomas, have anything interesting to say here ever since the tariffs were removed last week? It feels like copper hasn't done much.
Yeah, and that huge move we got when the whole thing was taken off, and then now some products are exempt. Most of them are exempt except for copper piping, some of the copper used for electronics. That's a small part of the market. So you get this rally that was driven on these tariff fears, and then all of that was pretty much taken away and the market just dumps. It takes, after these kind of moves, what I've noticed, and maybe you have a different opinion, is you usually get this period of consolidation where a lot of traders were thrown out of the trade, and now it has this light liquidity in terms of a volume profile type structure where you have to reestablish this new price for a while until you get a new directional move. They call it Dr. Copper. Otherwise, you got the jobs report. That didn't really affect it too much. So the market's looking at how are these tariffs, or is anything going to change on it? I think this isn't really tradable for the short term for me. I looked at some trades and I'm just not really finding anything in there that is too enticing for me.
You say that copper tends to consolidate on the other side of a big news event like that. July 8th announcement obviously puts this tariff into place. It's about 10 days, right? From July 8th to July 18th when the market starts to move again.
Yeah.
We have the announcement here on July 30th. So 10 days out from July 30th brings you to this Friday, August 8th. So maybe we're getting into the end of the window where copper's done reorienting itself after getting knocked down so significantly. Nevertheless, you mentioned that the volume and the volatility here, that is a consideration right now, even at 50 days, going around to some of the big round numbers like the 4 strike or the 4.5 on either end. Not a lot of open interest. So traders have been scared away. I don't want to call it untradeable, but it's not the market that it was in March, April, May, or even in June. So give it a little bit of time before I think we step back into copper. Energy zigging and zagging. Thomas, you and I touched on this at the start of the show, spotlighting the energy inventory changes. Crude oil here today is off by 0.21%, natural gas up by 2.26%. As far as my eye can see, Mr. Westwater, this is a market that's sitting right at the midpoint of a place we've been talking about nonstop like a broken record for the past month and a half. Why should we do anything different than continue to look at a 25 plus IVR environment and say at the midpoint of a multi-month range, all we should do is be directionally neutral?
And I think that's it. I mean, directionally neutral is what you do here. I mean, that's what the chart is telling me. I mean, and that's what the price action in terms of how it relates to all these risks we've gone through has told me. It seems like, the long-term outlook for crude oil is being tied into what happens short-term. We need to get through these tariffs. We need to get through these short-term risks until we know how crude oil is going to develop into next year. And right now, that's indecision. So it makes sense that the prices are reflecting that indecision. I mean, the market, it's still fundamentally, I think it's strong enough to keep prices from not going below, where I said earlier, 62, 63, 64. I don't think you see 60 anytime soon. If anything, maybe a little more room on the upside, which I have my trade positioned for. Still waiting for it to get filled right now. It's been about 45 minutes, but hopefully soon. So I don't know. I mean, you're not seeing a big move on this inventory number. You're not really seeing big moves on the OPEC announcements. You're not seeing geopolitical risk come in from the Trump tariffs on India or all these other big buyers of Russian crude oil. So you just, I think Iron Condor is the perfect thing to do right here.
If there is an alternative view that the sideways chop wasn't going to continue, perhaps this trend line off the lows in May, both in the start of the month and then at the tail end as you make your way into June, right? Some of the lows that we have here at the end of July. All right. As Josh Fabian would say, our producer, he's a horizontal man. There's a horizontal line that's basically running through the market since the Israel-Iran war ended. And that's going to oscillate right around these levels. So maybe we're not going to break down through 63. But if I was really bearish, I would see that momentum's being lost. I would think about the fact that oil demand is very highly correlated with global GDP. Inventories need to be rebuilt. Yes, but maybe they're low for a demand reason. I mean, I think there's a floor in play, Thomas, like you said. If I was bearish, I could talk myself into getting a little bit more directional right now. But I'm not, because the Iron Condor has worked. The short Iron Condor trade has worked. We're sitting right on it. Until that changes, it's a well that I'll keep digging back into. It's typically what works. Typically what works for crude oil outside of periods of geopolitical risk. So there's no reason to do anything else but that. We'll talk natural gas later, because for now we're going to go over to the dollar as we do wind down the show early. It's Wednesday, which means it's time for Truth or Skepticism. We take a look at our beloved greenback, and it is continually getting punched in the face. Euro back testing through 117. The British pound back about to test 134. The Canadian dollar getting ready to move back through 73. All of a sudden, the best laid plans of a more meaningful dollar bounce have been eradicated post non-farm payrolls. If the Canadian dollar is back above its support turn resistance, if the British pound is going to break through its neckline, if the euro is going to scale 117, danger Will Robinson for the US dollar. I don't really think there's another way to put it. We've all of a sudden started to lose this series of higher highs and higher lows here. And we're back below that 50-day moving average, which was a death knell for the greenback on many occasions since this tariff talk started in February. So I might actually clear my book in currency and just reset, because I may have been a misread on how far this dollar rally could run. I'm not feeling too hot under the collar. I'm feeling pretty hot under the collar, actually, about the dollar right now. I'm very uncomfortable.
Yeah, I have an order in trying to get a put spread on the euro. So trying to at least take a neutral to slightly bullish view on that. And that's mainly on dollar weakness. I think this chart looks kind of ugly. I think the euro's reestablished some of its strength. Maybe get a run up to 119, 120, right around there. So I'm doing that in the 58-day out contract. I got out of my yen position and pound position last week, and I got out a wash between both of them. They kind of equalized each other. So going into currencies now, I'm going to try to take something directional based on the dollar. So if I think the dollar is going to go down, I'll get long. It's peers. If I don't, I'm not going to try to hedge each other again on that for a little bit here.
We'll talk more later on overtime. I'll be back with Dylan and Ilya at 4 p.m. Eastern, 3 Central, right after last call. But we're going to hear from Dylan up next, because he's here for Truth or Skepticism. Tomorrow's calendar, Thomas, unremarkable BOE rate decision, interesting. Canadian PMI, interesting. Tradable, who knows? I don't think so. Okay, we're done. It's time for Truth or Skepticism, because it's Wednesday. And when it's Wednesday, you have Radigan and Sosnoff coming up next here on Tasty Live. Good luck trading.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
It's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Hello, everybody. We're back. I'm Tom Sosnoff. I'm here with Dylan Radigan. This is Truth or Skepticism. Mr. Radigan, we're twinning today.
Yeah, it's a black T-shirt Wednesday. Black T-shirt.
There you go. Black T-shirt Wednesday.
Black T-shirt's an important day.
Yeah. Every Wednesday at 1 p.m. Central Time, Dylan and I do Truth or Skepticism, and it's fun coming up with new topics every week, Dylan. But today we're going to go with a very public topic because I think it's interesting. You know, the markets are. I'm a trader kind of that's always traded off the noise in the crowd. You know, from the pit trading days where it's just you trade based on order flow to to trading based on kind of gut instincts or you're a tape reader, that kind of stuff. So I've never paid much attention to technical studies. I've never paid much attention to anything fundamental. It's, I'm an efficient market theorist. If it's trading there, then it must be what it is, and all the news is known. So, there's nothing to, everything's already priced in. But a lot of people don't trade that way. A lot of people don't invest that way. There's $100 trillion invested in the bond market and the stock market. And a lot of people really rely on a different set of fundamentals to make their decision. What if those numbers were all made up?
So
what would that do to the integrity? What would that do to the integrity of the marketplace if a CEO came out and said, you know what, this quarter, our CFO shows us losing 22 million, but on back of the envelope, I think we really made about 22 million. And
so, I think you have to make some distinctions here. I think when it comes to the numbers that are reported by companies, quarterly reports,
okay,
I think that if those numbers were made up, that's a huge problem. We've seen that problem many times. It's called accounting fraud. It's called Enron. It's called.
Okay, I agree. Sure.
But I think when it comes to the government data, which I think is kind of where this conversation ends up right now because of the recent firing of that one person from the jobs report or whatever. So I spent this topic is interesting for a few reasons. When I was writing my book some years ago, one of the many things that I sort of dug into was government data. And specifically, one, to sort of a stab at the question you're asking, which is, are these numbers even worth a damn? And then even if they are worth a damn, are they measuring something that actually is indicative of anything?
Yeah, but whether or not the numbers are worth a damn is not the discussion here.
Okay.
The numbers, whether they're worth a damn, is not what this discussion's about. The discussion's about we can argue till the cows come home whether they're worth anything. But the question is the number accurate? Is the number fair? Is it real? Doesn't matter if it's worth anything. Is the number real? Like,
and I guess what I'm getting at, is I think that the number is consistently real in an inaccurate way. How does that for a bullshit answer?
That's fine. You can say, the number is consistently real in an inaccurate way. That's still completely subjective because that's your opinion that it's an inaccurate way. But
is the number real? That's all I want to know. Is the number real?
Define real.
Well, the way that is the number using the same calculations, using the same math that we've used forever, that is standard practice. Okay. Is that number real, or was that number fudged or made up? That's what I mean.
Meaning, is it real in the sense, is it derived from some collected information about pricing or so about
that
jobs
is consistent? That is consistent.
Or is it just fabricated in a conference room in Washington, D.C.? That's
exactly. Is it Bernie Madoff making up a number, or is this the same way that we've been calculating this number, going back as long as you can remember?
I do not believe the number is fabricated in a conference room in Washington, D.C. I believe
Either do I.
Okay.
Because if you believe that the number was fabricated in a conference room in Washington, D.C., then you also have to believe, just as an example, that the election really, the 2020 election really was fraud. Like that's the same type of thing.
And we didn't land on the moon.
Everything. The earth is flat. Everything. It's just
JFK Jr. is playing golf in Bora Bora.
Of course he is. But the point being is that there comes a point when you have to, when you get a room full of smart people, at what price is the integrity of those people? Let me give you an example here of Scott Bessent, who's the Treasury Secretary. When he was in the private sector working for Soros or whoever else he's working for, and getting paid billions of dollars or whatever it was, there's no chance that they would have ever made an investment in something where they thought the numbers were rigged or false. In other words, they would have gone to the mats to fight that. Okay. However, explain to me how, as soon as you get to Washington, you can accept a senile old man saying, you know what, I don't like those numbers. They're not real. They're fake. And then all of a sudden, but you don't defend those numbers. You basically come out and say, you know what, those numbers did look a little weird. Like, that is the most fucking ridiculous thing I've ever heard in my life. And then we're sitting around and we're making it like it's not important. And yet people will be like, oh yeah, well, that was just fake, so we'll just buy them anyway, whatever it is. It's like so ridiculous. It doesn't even, there's no logic to it whatsoever. Smart people do not act that way. It's almost as saying, you know what? Bernie Madoff made up every single trade he ever did. Okay. He made up every single thing. And somebody there goes, well, even though he made it up, it could have been real trades. Like that's what it is.
That's a great metaphor. And so, and I guess for me, this is a commentary on power, because if Bernie Madoff had consolidated power and had sort of become so politically dominant as Donald Trump has become as the president of the United States, the reason you're getting these answers that you're correctly viewing as, profanely preposterous, the reaction is incomprehensibly idiotic.
Yeah,
is only because of the power of power, right? If Donald Trump hadn't consolidated his position over the last, 9 years, 10 years, to have this sort of absolute position of power, because obviously it's the only possible explanation. It's like the dictator syndrome.
So are you telling me, but it's not the dictator syndrome, Dylan, because the dictator syndrome, if you do this in Russia, you are going to get thrown off the top of a building. Okay, there's a big difference. What?
If you do what? If you say the numbers are not real?
No. If you question Putin, okay, if you question the integrity of Putin, okay, you are going to get thrown out of a 32nd floor building out the window, and you're dead, or you're going to get poisoned. Yeah, whatever it is, you're dead. You're dead in a matter of hours, days, whatever it is. Okay, you're freaking dead. We don't do that in the US. We don't kill you. We don't kill billionaires who get appointed to jobs. Like if you're the Treasury Secretary and you don't have the backbone to stand up to something that you know is patently false, how can you possibly look in the mirror and say you're a person? How are you a man? How are you anything? How do you even exist? How do you wake up in the morning and say, you know what, I think I'm doing a good job? How do you tell your kids, you know what, you got to be truthful. You got to be honest. You got to work hard. How do you say that? How do you do anything? How do you look anybody in the eyes?
So so this is a referendum on Bessent, on the cabinet, basically.
Well, Trump is a criminal. Everybody knows that, okay? He's a convicted felon. So you're not going to change Trump. But the people you put around, even if they're not felons or criminals or whatever else, you have to trust that they have at least an ounce of integrity. I don't even blame Trump, believe it or not, because this is who he is. He is a pathological liar, and he's a criminal, and he doesn't care. So you can't blame Trump because this is who you got. You have to blame the people around him, the Pam Bondis of the world, the Scott Bessents of the world, the Howard Lutnicks of the world, because for some reason, these people, unless they've always been like this and I didn't know it, they just decided to lie for him, and which makes no sense whatsoever. It doesn't make any sense. It's not the way good people, good souls, humans react. You're never going to change Trump. He is what he is. So forget him. But everybody else, there's no way that everybody else can act like this. There's no way that not a single person has a backbone. There's no freaking spines in Washington. Doesn't make any sense. I'm sorry.
But the thing that I'm thinking about is when he was picking his cabinet, you were the one, we were saying, oh, this.
Yeah, I said pick the people that you like.
And you said, I'm like, everyone's like, why is he doing this? And you're saying the reason he's doing this is because he's filtering for loyalty.
Okay, I'm going to give you a different example. Dylan, I really like you, and I want you to come work for us, okay? Because I think you're going to make Tasty better. You make the network better. But you happen to have been there when I killed somebody last weekend, okay? I shot him in cold blood, all right? Threw him in the garbage. Shot him in cold blood, threw him in the garbage. You saw the whole thing. Okay.
Breaking Bad.
Okay. Now they come and they go, what'd you see, Dylan? I just say, I want to know how far, are you going to be willing?
But isn't that exactly what this is? Isn't that exactly what
I don't think you'd be. I think at some point
I would not be, but I also wouldn't be selected for Trump's cabinet. I'm just saying I think that the extreme nature of your example, that actually is you're answering your own question, because you're like, how can you sit there and be like, yeah, maybe you're right, maybe these numbers are made up in a conference room, never mind. We'll just.
I mean, it's hard to lie for your own kids, but I can understand possibly protecting, one of your own children, whatever. You do what you got to do. But come on, Dylan, I am not going to take a bullet.
It's not, but it's not you and me. I'm saying the people Trump selected for his cabinet are loyal at the level that they would lie for him about anything.
Well, it's obvious, but then that begs the next question. How do you trust? What can you trust going forward? So now it begs the question, is Tim Cook on the payroll? Is, the payroll just being,
on the loyalty.
That's right. Is Jeff Bezos on this? Is Mark Zuckerberg on this? Are all these, because Trump is attracted to dollars. It's all he cares about is money. So are all these guys now, all these, soon to be trillionaires, all right? Are they all on the payroll? Is everybody on the freaking payroll? Except.
I think so.
That's crazy. That's ridiculous. And if that's the case, we are totally fucked.
I think so, because I think that everybody basically is like, no one wants to have Trump as an enemy. And so even if they disagree, they're like, first of all, they're like, I hope he just doesn't notice that I'm in the building. and we'll just ride it out, and we'll just try to get behind it. We'll just try to stay out of the line of fire. And then if we come into the line of fire, we'll say whatever we have to say to fall in line. I mean, but I also, here's the thing, here's a bizarre way to look at this, so forgive me, but there's a version of this that is, it's almost like everybody knows what they're doing. Like, so even though, so it's like saying, well, the jobs number might actually just be made up. But everybody knows that you don't really think that the jobs number might just be made up. Everybody knows that you're lying because of your need to keep your job close to the president. So in other words, it's not as damaging as you might think it could be, because everybody's in on the joke, if that makes any sense. Like, everybody knows that the number's not made up. Everybody knows that you're saying the number is made up only because of your need for proximity to the president. And so, it's not as damaging as you might suggest for that reason.
Okay, and then so you're saying that we're supposed to read through the lines, because when you have somebody that's a known, when somebody doesn't know the difference between right and wrong and truth and lies, that we have to forgive them and just accept the good part of whatever they do, whatever that may be.
No. This is just a game of it. When you live in a house with a lunatic, and that lunatic owns the house, and you're a child and you live in a house with a lunatic, you have to do everything that you can to simply try to adapt to survive the lunacy. Because you can't throw the lunatic out of the house. You can't move out of the house. And so you develop coping mechanisms having to do with either isolating yourself in other parts of the house, hoping not to get noticed, or cooperating with the lunatic's lies in public as a way to maintain your safety.
So we're a society that needs to walk on eggshells to survive. And that's acceptable to 50% of
No. But 50% of the population didn't vote for this person.
30%, whatever. Yeah, 30%. Do you see the longer term implications that this can have if every single government statistic, if every single election, if everything that you don't like is immediately rejected as this is rigged, this is false? I mean, it's dangerous enough that somebody who's an election denier wins the presidency. It's just as scary as somebody that is a statistical denier that literally can't do math.
This man used a Sharpie to change the direction of a hurricane on live television using a National Weather Service map.
You can't teach stupid, but there was a very funny Borowitz article this morning from the New Yorker who basically described Trump's ability to do math and how dangerous, how incredibly stupid he is when it comes to trying to figure out any kind of a math equation, and how scary it is that that he actually even has that he can even talk about numbers, because he can't add or subtract or multiply or do anything when it comes to numbers. And it's mind-blowing. But getting back to the integrity of the markets, I'm a trader, okay? And I personally don't care, but I'm in the minority. I'm in the 1% that don't care about. I'm an efficient market person. I believe that as soon as the number comes out or whatever else, it's already built into the price. There's nothing you can do, blah, blah, blah. It's all over. But how far does this extend? Does this mean that Elon Musk can continue with the ridiculousness of, hey, someday Tesla's going to be worth $20 trillion, or someday, maybe 2 quarters from now we do this or whatever, we make, we go from a loss to a profit, like where does any of this stop? Like the whole, one of the reasons the markets are such a incredible ecosystem is because the massive amount of capital out there and the massive amount of liquidity creates this incredible efficiency. but the efficiency needs some foundation. There has to be truth. Here, I'll give you an example. I grew up in this business as a pit trader in the S&P pit and in the S&P option pit. And for 20 years, just about 20 years. And we didn't have any electronics back then. So every single trade I made for 20 years, probably, I don't know, I'm going to guess 1 million trades. Every single trade was made with somebody else. Like I trade with you, all done on hand signals. So, right, I sell you 100, I sell you 50, I sell you 1, I sell you 5, whatever it is. Everything's done on hand signals. You know, sold, buy, the whole deal. We lived our life in screaming and yelling and hand signals.
Billions of dollars.
Literally billions of dollars with 400 guys screaming at the exact same time, all doing hand signals. Every single trade cleared the next day. I mean, occasionally there'd be a confusion over, was that a 1 or a 10, or was that a buy versus sell, whatever it is. But for the most part, every single trade in the hundreds of billions of dollars cleared because everybody had integrity. Otherwise, you were thrown out on the street. There were a couple of grifters. Maybe in all the years I was down there in 20 years, there's probably 5 grifters. Those guys got thrown out the street, ended up in jail, whatever it was, but they got thrown out. Everybody else, the thousands, tens of thousands of people, unbelievable integrity. Win, lose, draw, whatever. Fast forward. We don't have an ounce of integrity in Washington right now. And again, it's not just Trump, it's the people that defend him, that lie for him.
Don't you think that, I mean, Trump is the most extreme example of the corruption and decay of integrity and the people around him?
Yeah, but he's the leader of the free world.
Don't you think that the Biden, don't you think it's bigger than Trump? I guess is my concern. I don't you think that the decay, that covering up I'm not trying to do a what, I'm not trying to distract. I think Trump is uniquely catastrophic. I'm not diminishing that. But I would say yes and, not yes but. Yes and part of the reason Trump even got in is because the Democratic Party was so arrogant and abusive in the way it used the White House that it incentivized a part of the population to basically say, F me, F you.
Yeah, don't confuse arrogance and incompetence with criminality. That's the difference.
Okay.
There's a big difference between, I have seen arrogant people, I have seen egotistical people, and I have seen plenty of incompetent people. Okay. But there is a giant difference between all that and people who are criminals and people who are fraudulent. And that's where we draw the line. That's the difference. It's intent. And I think that's really the key. And now I'm one of these people that don't believe that Donald Trump knows the difference. I think the lines are so blurred for him that he thinks whatever he says, he has a Putin complex, and whatever he says, he thinks it's true. And therefore, I don't believe he can tell the difference between right and wrong. He does not know the difference between right and wrong. He doesn't know the difference between a truth and a lie. That's why Trump doesn't bother me nearly as much as all the people that defend him. The people that defend him are way worse because they have to know better.
I totally agree. I'm just thinking they're doing that job because they believe that it is in their self-interest to have a high social status and get money. And they're willing to do anything, including to cooperate with and empower this lunatic in order to keep the job. That basically they're willing to forfeit the integrity of the United States for what they perceive to be their own personal career advancement.
So if you are a billionaire, which I assume I've heard Scott Bessent is a billionaire. I don't know that for a fact, but assume he's a billionaire.
But a few hundred million is enough money to get you a piece of pizza.
Okay, whatever. Let's say he's whatever. They say he's a billionaire, 500 million, who cares? Whatever it is. So you're going to sell your soul to the devil? You're a billionaire. You're selling your soul to the devil for what? So your legacy is that you're a complete piece of shit? That's your legacy after working your entire life to get a reputation that you are to build a legacy for yourself and your family and everything else. You're going to sell it all out, okay, to be remembered as a piece of garbage.
But I mean, obviously, they don't perceive it the way you're describing it. First and foremost,
how could they not? They don't know. You're telling me that all these people don't know the difference from right from wrong. You're telling me
what are the three weapons of the devil?
I don't know. I'm not a good devil person. Okay.
Money.
All right.
Women.
Okay.
And power. And I believe this is a situation where power, which I think is the most persuasive, the most attractive, the most seductive of the devil's instruments, overwhelms people. I think that people get so seduced by the influence and the attraction of power, and then they create a story for themselves that is a delusional story that they're helping that they're saving America. I would defy you to find anyone who's ever been the president of the United States or anybody who's been a senior cabinet member or chief of staff, let's say the top 50 executives in the government, whether it's whatever the title is, chief of staff, treasury secretary, blah, blah, blah. I bet you if you ask every single one of them, they would tell you that they devoted their time in Washington, D.C. to helping and saving America. There's not a single one of them that would say, oh, I knew we were screwing America, but I thought it was good for my career.
Oh, I don't think any of them necessarily think they're screwing America. I think that they all recognize the difference from right and wrong. I don't think it's possible that you can assemble a team of people that can't tell the difference between right and wrong.
But this team of people that was assembled I don't disagree. They may know the difference between right and wrong, but they don't know the difference between right and wrong, but they also know they're in the room with someone that they cannot disagree with, even if they believe what is being stated is wrong. Like that, they knew coming in. It's not like, oh, I discovered you murdered somebody last week and now I'm not going to tell. It's like, I know you're a murderer up front. Everybody knows you're a murderer when I interview for the job. And one of the preconditions of the job is like, listen, I'm going to give you a lot of money, Dylan. We're going to give you lots, put you on big stages and you'll be seen by millions and blah, blah, blah. However, I am a murderer and you're just going to have to help me cover that up.
So if you
I think that when Lutnick, when you interviewed with Donald Trump to join his cabinet 9 months ago, it was everybody knew who he was.
So if you were hired as a trader for Bernie Madoff and you were sitting there and you actually never made a trade, but you saw the returns and the money coming in and the articles written about the firm, and you're sitting there going, well, this is awfully strange because we're one of the largest S&P 500 traders in the world, but we've actually never made a trade in the S&P 500 pit. And this is kind of a strange thing. I mean, now, do you continue?
No, but remember, there are two divisions because they had the market making business.
No, I understand that. I'm not getting into the details of but they did. I'm just making a fun little thing.
Okay.
You're a trader. Now, you've never made a trade and you know that something is wrong. Okay. Do you shut up and take your $1 million a year or $2 million a year, whatever he's paying you and knowing that this is a fraud, but you don't actually, you actually haven't seen anything. You haven't been on the inside. You're paid $1 million or $2 million a year to be the head trader and you're not getting any order flow, but you're sitting there and you're like, man, we're doing great. I'm not sure how, but we're doing great. Something doesn't smell right. You know how there's lots of different ways they busted Bernie Madoff, but the first guys that turned him in, that it came from the trading floor.
The guy out in Boston.
Well, they came and they said, because he said we're trading all these, you know, in order to trade whatever, $100 million, you have to have a certain amount of order flow. It has to go through somebody. But nobody could find a broker that was actually filling a single order for them.
I know.
And there was no order. And in the pit, every guy was going, where is this guy routing these orders to? We haven't seen a single order. And so they tried to back into it. They're like, what the hell's going on here? This guy says he's dominating the S&P.
He's the biggest fish in the pond, and no one can see the fish.
Every single broker goes, I don't have his business. Nobody has his business. Okay, no trader ever made a trade with him. Nobody even knew. It was all a scam.
You know, Jeffries or you know, Hambrecht and Quist, one of these little old banks, does something, everybody gets a look, but the biggest trader in town, no one's getting a look.
Yeah, but if you were that trader, do you say something? Because what you're saying is that you know, the $1 million or $2 million is you don't actually know that he's stealing everything. You just think he is, but you don't actually know. So you just take your money and just shut up.
Yeah, you're like I'm just a lowly above my pay grade.
Okay, I mean, I don't think that's the case for 99% of the people.
But I also don't think that's a metaphor, because while I could sort of back my way into an excuse for, you know, why the Madoff trader might not raise an alarm, but that doesn't, to me, justify a Lutnick or a Besant. I mean, it's not above their pay grade. Unrelated, do you know that the penthouse at my building in New York years ago, the guy that owned the penthouse of my building in Tribeca years ago, there was a guy who had figured out how to basically, you know how I don't know if they probably still do this, but they for sure used to do this, where they take bonds and strip them into parts, like where you have all like principal payments and interest payments. Like, I forget, there's some name for it, where it's like a 30-year bond becomes basically 31 pieces, where it's a 30 principal payments and one interest payment.
Okay.
It's like IOPO, it's some sort of a thing.
Okay.
And he figured out how basically to buy the parts, the bond parts.
Okay.
We buy 30 years worth, 30 different chunks of payments, plus one chunk of interest payment. And then he would rack it in, and basically it'd be like, it's like the equivalent of like trading in 4 quarters for $1. Like, he would take all the bond parts and then trade it in for a bond, but there was some price discrepancy that he'd figured out in the.
Yeah, it sounds like arbitrage to me. Okay.
Made a fortune.
Okay.
Joe Jack, that was his name, was a big fraud.
What was the fraud? What was the fraud?
The fraud was that there was no arbitrage. There is no arbitrage. There's that the value of the bond is the value of the bond. That he was marking, that he was based, he was marking up or marking down, whatever it was, to create the appearance of this incredibly profitable trade that he was repeating over and over. My point is, when people figure out a way to make a lot of money, they're not real quick to call the cops or the compliance department.
Okay. I was
merely
giving
still
you.
doesn't explain why Besant and Lutnick, I think, are more like abused children who are afraid of their father.
It's way deeper than that. It's not just those two. There was, I think it was the assistant commerce secretary, when the number came out in the morning on Bloomberg, she said, well, the underlying jobs are pretty good. It's just the overall number wasn't that good. And then later on in the afternoon, after Trump made his statement, she came back out and said, no, the numbers were rigged. Sorry about that.
Bad numbers.
They were good numbers in the morning, but they were bad numbers in the afternoon. There's, you know, it's.
My biggest concern is what's the message? The world never considered that in any given 4-year period that America could elect a lunatic that will basically destroy the integrity of everything. I mean, I just don't know.
I am not so sure I agree with that. I think that as a kid that grew up in the Nixon era, you know, kind of remembering that whole, you know, because I was in high school then, remembering that whole thing, I thought he was a lunatic. And I can appreciate a lunatic in the White House. I mean, I can see that happening. But I can see a criminal because he was a criminal. No question about it, you know. So I can see it happening, but not somebody, but we addressed it. I can't believe that we can't address this. Like, that's what bothers me. It's not, for some reason, it's not addressable. It's like
it's any intervention.
It's accepted. Everybody had the spine, the balls to step up and say, hey, you know what? Every Republican in 1972 or whatever year it was said, hey, you know what? This is ridiculous. Get out of here. You know, you're going to be resign or be impeached, whatever it is. And to everybody, when you did something wrong, everybody had at least enough integrity to step up. What happened? We don't have that anymore. It's crazy. It's crazy. If you asked right now and you asked, 50 Republican senators or 51 Republican senators, are these numbers rigged? 48 would say, well, Trump said they were, so sure.
I know.
It's insane. It's insane. It's freaking insane. All right.
To tell you, I mean, I don't even know.
Oh, you're an Italian now. You this is normal behavior for Italy.
This is just, what's the big deal?
Exactly.
Have a glass of wine, relax.
Exactly. I don't even know why
Luciano, get so worked up.
Exactly. I'm Tom Sosnoff. He's Dylan Radigan. This has been Truth or Skepticism. Thanks so much for spending a little Wednesday afternoon fun with us. Talk to you later, Dylan.
See you later.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything has value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I
well,
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry things. It slows me down.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right.
I knew it was on there. I knew it was on there.
It's warm.
No, I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC style?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce.
I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live. Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
What is going on, everybody, and welcome back to today's assignment. It is Wednesday, back with another market with Dr. Jim. Dr. Jim, how are we holding up today so far?
Man, what's going on? It's been, I don't know. Today, has it been quiet? Has it been active? Like, how would you categorize a day like today? I mean, the morning was pretty back and forth. Like, there was a lot of, 60 point up, 60 point down in the NASDAQ. And then all of a sudden, Next thing you know, we're up 300, man. So
Yeah.
I mean, to me, today's kind of quiet, but how would you categorize today?
I mean, I would say it's kind of quiet. I feel like a lot of the times whenever the market is just kind of like bleeding upwards, that's kind of the description that I would use for today, kind of just bleeding up. It's very quiet on my end, at least. So I would kind of categorize it or characterize it as the same way you did. It's been a little quiet, even though we have the market silently makes moves to the upside without us realizing, Dr. Jim. So it's been kind of one of those, or it's been one of those kind of days on my end. So nothing too crazy, but the market's bleeding up. And there's nothing, or there's not another way how I'd really put it. But that's how my day's going.
Yeah, no, I think I agree. And you know, I think, and I don't know if there's any stats to back this up. Like, I'll be curious to hear your thoughts on this.
Yeah.
So I actually think, so you've got obviously the futures market, the cash open is like 8:30. The stock market opens at 9:30 Eastern, right? I know you're in the central time zone, so 7:30 and 8:30 for you.
Yeah.
But the stock market opens, and for about the first 20 to 30 minutes, you know, not every day, of course, but there can be a lot of back and forth. There can be a lot of kind of like, hey, you know, where do we want to take it today type of deal.
Right.
But once you get to about 10 o'clock, unless there's like significant news out or whatever, it's that 10 to 10:30 window when a lot of times, if the especially to the upside, if the market wants to move higher that day, it just becomes a slow bleed higher from, let's say, 10:30 to like 2:30 or 3.
Yeah.
And then the close can be a lot of different things. But I feel like that 3-hour window in the middle is oftentimes where you get these silent bleeds higher. What do you think?
I mean, I feel exactly the same way. And what's funny is we can probably circle back around to that question and get a little bit more context on that. Over the next week or two, find some time, we can crank some data on that actually and kind of get when we typically see more of a directional movement in the market. And, you know, because I think it's kind of cool. We can maybe quantify that. So we could circle back around to it because I kind of feel the same, to be honest, Dr. Jim. So I know for myself between 11 and 12 o'clock, I'm typically like never trading. A lot of the times that's like that window where it's in my head, it's lunch, but also I just think like 9:30 Eastern time, that's 12 to 1. Markets are typically a little bit smaller there. I'm sure we could quantify that again, but I know that kind of fits in that range to where if the market's going to do anything, it's probably going to do it already or it's already done it. But I know that time window too, things really start to slow down. So I'm on board with that.
Yeah.
Yeah.
Well, there we go. So
Yeah.
there you go. We're shooting from strength. We're on the same side of the trade. So
Yeah. I don't know if that's a good thing or a bad thing yet, but Dr. Jim, today we're going to talk a little bit about buying power and how that buying power can increase on you if you're not being mindful about it. You might get a call from your buddy named Margin. So that's what the title is going to be for today. And if we have some extra time, we'll get into the platform here. But I got to ask, what are you guys doing?
By the way, whenever your boy Margin calls, you never answer. Like that goes straight to voicemail. Just so everybody's clear. Like you never answer. Your boy Margin needs to be texting you.
I don't even save the number.
Do not answer.
That number's blocked. That number's blocked.
Yeah, that number is likely spam. Like when it says potential spam, like there you go.
Exactly. We can go ahead and jump into the slides here. But today it's going to be a little different. Again, navigating capital in your trades. And these are going to be the large moves in the SPX and VIX over the past few weeks, Dr. Jim. So the past few weeks, we've seen some pretty significant changes in the VIX, especially after a major weekend of market news. I think this weekend we had, I believe we had gapped up a little bit after a pretty strong sell-off into the end of last week. This caused some traders' overall portfolio BPR to balloon and causing them to allocate more capital than they initially started with. And I feel like this is one of those things where you can know if you're informed, but if you're not informed, you don't know until you know. It's one of those things where it's going to catch you off guard, and then you're going to be like, oh, wow, this is something I need to be mindful of. I need to be mindful of the undefined risk strategies that I'm putting on in my portfolio, the size of my portfolio. I don't know if the market's going to gap down tomorrow, especially with the administration that we're in right now. I think uncertainty is a very common characteristic here too. So, I mean, BPR can catch you off guard. And I mean, imagine waking up one morning where maybe your buying power allocation to one trade is maybe twice the size, right? It's like that's something that is going to catch you off guard and might alert you. But just right off the bat, Dr. Jim, just making the case for that, this buying power, it's dynamic. It's never really staying the same. And I want to preface this by saying this is all undefined risk strategy. So as we go through the slides today, we're going to be referencing undefined risk trades, Dr. Jim.
Yeah, so this is 100% right. And this is one of those things. There's a lot of things like this when it comes to trading.
Yeah.
But I think this one might be near the top of the list from the standpoint of this is something that you really can't quite appreciate until you experience it.
Right.
Like, you can listen to a podcast, a YouTube video, today's assignment episode on a Wednesday, whatever, and you can file it away like, hey, all right, that's going to be pretty bad, pretty nasty. I hope it doesn't happen to me. Well, it's going to happen. It happens to everybody at one time or another. And it isn't really until you do wake up that morning and all of a sudden, you know, you were 40% allocated, but now you're 75, 80. And it's like, man, where did all my capital go?
Right.
Volatility shooting through the roof. The market's dropping like a stone. And so this is why understanding your capital allocation is so important.
100%. And I mean, a lot of the times these gap downs, these sell-offs, it's almost like you can't predict these things too. So for the most part, when things like this happen, when you're in a situation like this, you did not expect it because we don't expect these things in the market. Hence why the fear and greed index or the volatility index will increase whenever we get those big moves in the market. We can go ahead and jump to the second slide here. And we can go ahead and jump to this next one. But yeah, no, Dr. Jim, I know.
Josh just falling asleep at the wheel, man.
Yeah,
like,
no, I
mean,
need to get.
But that's what we come to expect, you know?
I don't know. Yeah, exactly.
There we go.
The math
hey,
is
how about
mathing.
that?
Yeah.
Look at this guy. Look at this guy.
He was trying to finish that last line real quick. He was a little. BPR expansion. This is due to BPR expansion. Defined risk strategies don't usually change buying power during the trade as max loss is already baked into that trade, right? This is one of the reasons why I'm fond of defined risk trades. I love knowing what my risk is on the table as I send that trade through. However, undefined risk strategies have the possibility of your buying power to greatly change throughout the trade. And this is why different account sizes are only able to trade undefined risks with certain stocks as shown on this next slide. And before we jump to this next slide, Dr. Jim, with defined risk trades, what is a reason you would personally use a defined risk trade, or what's an underlying that you would use if you had a smaller account trading an undefined risk trade?
Okay, so two very good questions.
We have a bucket of underlyings that's in specific categories for prices. I want to see if yours land in any one of those.
Okay, so I'll answer the second question first because I think it's a little quicker. So, like, what stock price am I looking for undefined risk? If I'm a brand new, if you're a brand new trader, I wouldn't do any undefined risk. So just to be clear, once you've been trading for a little while, for some traders that might be a month, a couple months. For some traders, it'll be more like 6 to 12. I mean, whatever it is. But once you have built up some experience, you want to dip your toe in the undefined risk waters. Usually $50-$60 or less. That's going to do a lot in terms of the stock price. That's going to do a lot for putting a natural cap on just how bad it could be if you happen to walk into an outlier, which again, we don't know when these things are coming.
Right.
If we knew, we would not be on this show today. You and me would be in Fiji just trading that. That's all we'd be doing.
Right.
But unfortunately, we don't know. So you have to kind of size accordingly, with the expectation that, man, this could really happen at any point in time. From a defined risk standpoint, one of the huge benefits to defined risk, which is what you kind of hit on here, is your max loss. You know the worst case scenario. A secondary benefit that kind of dovetails with what I said a second ago. If you're a newer trader, like if you're just getting started, you're just getting rolling and you want to, add a more active component to your portfolio with derivatives and whatever, defined risk is such a nice way to do that because you can cut your teeth on the market. You can gain the market awareness.
Yeah.
You can understand how strategies move, when the underlying index moves, when stock prices move, whatever. And you can do all that with kind of that peace of mind, knowing, all right, this is how bad it could possibly get. If I'm completely wrong, like couldn't be more wrong, I'm still only going to lose $200 or $400 or whatever it might be. That's really powerful.
No, 100%. And I think what's nice about the defined risk strategies too, and it was something that I had heard over the last few years, is the best way to manage your emotions. And this is something that I took with myself and I think just life in general, but the best way to manage your emotions is to manage your expectations. So I think a lot of the times whenever we make irrational decisions in the market, we're typically in an irrational state of mind, but also because we didn't calculate that in. We weren't able to manage that as best we could because we didn't expect that. You know what I mean? So I think those defined risk strategies allow me to have more accurate expectations, which allow me to be a little bit more level-headed when making some of those decisions. So that's where I'm coming from on that point, Dr. Jim.
Mm-hmm. No, cool. That's good. That's
awesome.
Good stuff.
We go ahead and jump to this next slide here, Dr. Jim. And we'll see what we got here. But these are going to be the underlying asset selections for diverse account sizes. So we're going to start with 10,000. We got our Tasty Bites accounts. Look, don't leave out our Tasty Bite guys, right?
Bro, they're still in business? No, there's no way, dude.
Dr. Jim, I have not heard any response outside of the one that you just gave when we talk about Snapchat. Every time I hear another trader talking about Snapchat, it's never anything good, except whoever was probably shorting Snapchat a couple years ago. But Snapchat is still, if I'm not mistaken, technically speaking, a penny stock. I think the technical phrase for a penny stock is anything under $10. I've also heard anything under $1. But regardless, I believe Snap is trading beneath $10. You can fact check me on that, Dr. Jim. Is it
7.75?
Okay,
Yeah,
so pretty much close to zero. We're closer to zero than 100. Then we got we got INTC. We got a cheaper underlying there. BAC, which is Bank of America. No, BAC is...
Yeah, no, you got it.
Yeah, Bank of America. We got SoFi, Silver, Uber, Apple, EEM. We got some bonds. We got some TLT. But these are going to be your smaller products that you can get involved with. And depending on your account side, you got a Tasty Bite account. You can look at some of these things for some undefined risk strategies. We don't have Steel on there. Steel is one that I liked to dip my toes in to get some practice managing some of these undefined risk trades. But that's for the Tasty Bite size accounts, Dr. Jim. Would you have put any of these or any of those in your personal basket if you were to be looking for a smaller asset to trade?
Yeah, I mean, I think that's fine. The only thing that, like, if you get into like a TLT, I mean, now you're getting close to $100. I mean, Uber's like 50 or 60 or whatever. And so when it comes to undefined risk, again, with only $10,000, you might want to be a little careful with something like a TLT. That might be a little bit over the scope of what you want to do. But the rest of these are really, really good, especially like Bank of America, Intel. I mean, Snapchat's amazing, other than the fact that they're obviously going to be insolvent here in a couple of weeks. But assuming they stick around, it could be a good option.
Yeah, honestly, I still don't know what's going on with Snapchat. So I don't know if you know, Dr. Jim, went down the whole rabbit hole of Snapchat. I'm like, how is Snapchat making money? Like, what are they? They got to be a front for something, because how is Snapchat making money? I don't get it. But Snapchat is paying out a lot of money to creators, believe it or not. They're running a lot of ads through their stories. You know how you can click through the stories depending on what people are doing? They have ads like in the middle of those stories whenever you switch stories, and whenever you click through people's stories, if you're a high followed creator on there, they make money through that AdSense of people watching all those ads. So I know Snapchat is paying out a lot of money, but I'm just like, are these companies and businesses really paying Snapchat to advertise their businesses through their platform? It just kind of blows my mind. Would love to see some more data on that.
It's got to be.
Something's going on. Something.
Yeah.
Then we got our medium size. Anything under 100,000, you might be like, yo, medium size, Earl, what you talking about? Anything under 100,000, that's medium. But we got XLE, Target, SMH, BABA, PG, Gold, XOM, Waste Management, WM, IBM, Starbucks, good old Russell, McDonald's, Disney, Apple, the whole 9 yards, Dr. Jim. So these ones are a little bit more intensive. Obviously, we're going to have more options. We're in the middle of the data set with the medium-sized accounts. If you have a larger account, you're going to probably be dipping your toes into a lot of these assets. And even if you have a smaller account, you might experience with some underlying, you might gain a little experience with some of these underlyings in the middle chart here, Dr. Jim. But I just also want to say, defined risk, we can trade any of these products, right? But specifically,
That's right.
If you weren't here in the beginning when we gave the context, we were specifically talking about all undefined risk strategies. But this is going to be for our medium-sized account, Dr. Jim. Usually underlyings with $350 or less, typically.
Yeah, I think that's really, really good. And just remember, just to give everybody a context too, like position sizing, we typically like to live like between, let's say, 3% and 7% for the buying power effect on an undefined risk position. So if you have $100,000 in your account, that's $3,000 to $7,000. Now, it's not a hard rule. Like, you can go a little bit above the top. You can obviously go a little bit below the bottom. This is just a reference point. So, I mean, if I did, if you're going to go in and, I can even pull it up right now. If you go sell a put in gold, let's say, like if I want to sell a put in gold in like September, you look to sell, sell like a 30 delta put in gold in September. It's going to be, hold on. I don't know. It's going to be maybe 6,000, 7,000. And so it's like, that's kind of, near the upper end of that range, but it's still very doable with $100,000. And so this is why the capital that you have is so important. This is a great list. And McDonald's actually had earnings today. I just looked them up too. They had a great earnings call.
They knocked it out the park. Wow.
Yeah.
And then we have some of the larger underlyings, Dr. Jim. Tesla, QQQ, Costco, Home Depot, SPY, BKNG. Is that Burger King? Microsoft Spot.
Is that
SPX.
Burger King?
No.
It's Berkshire Hathaway, right?
Berkshire. Yeah, not no Burger King.
No, exactly. We're both wrong.
Oh, what is it?
It's Booking. It's Booking Holdings.
Okay.
Whatever that is.
It sounds like some SaaS platform, some software services platform. But,
I thought it was Burger King too. I was like, it's Whoppers, baby.
I was like,
it's
BK.
Gotta be Whoppers.
Yeah, no, BK.
Hold on. Let's have a serious discussion.
Okay.
When you're really craving it, like when you're really like, man, there's only one thing right now that's gonna hit the spot, and that one thing is a Whopper from Burger King. Like, you know what I'm saying? Like, it
that's
stands
true.
alone.
Okay, Whoppers are fire, no doubt.
Yeah. Now it's not it's not like an everyday thing. It's a once in a blue moon thing, but it just has that specific taste. And man, that's some good stuff.
No, I would 100% agree. I guess I can compare the Whopper to the Big Mac, but I got to say, I've always hit McDonald's out of convenience. Last time I was really hitting Burger King like that was when I was in college. I literally had I had the McDonald's app, I had the Wendy's app, I had the Burger King app, I had the Little Caesars app. I had every app, and me and my boys, we would just figure out which one had the deals of the day. That's what we had for dinner. So that gave me more experience with eating Burger King, and I started to find some of the stuff that I like. But no joke, literally, it was like, get the apps, whatever deals, that's what the boys are having for dinner. I kind of,
that's smart,
those days
dude.
were fun.
That's smart.
Yeah, no, it is.
Yeah, that's using modern technology, man. That's good stuff.
100%, 100%. We can go ahead and jump to the next slide here, but that gives a little bit more context.
You can advance the slides yourself, by the way.
Oh,
they
there
just
we
sent
go.
me a message that said that you can advance the slides yourself.
Awesome. Sounds great. Thank you, Dr. Jim. BPR formulation and definition, Dr. Jim. You can actually get the buying power yourself, and it's actually a lot more simple than you would think. So what we do to grab this is we're going to take 20% of the cost of the underlying. So if we have a $100 underlying, we're going to take 20% of that. It's going to be $20, and we're going to multiply that by $100. That'll give us a good estimate of what that buying power for that position is typically going to be. So if we have a $100 underlying, we take 20% of that. It's going to be $20. We're going to multiply that by 100. It's going to be about $2,000. So we need about a buying power of $2,000. So it gives you a good idea for the capital that's going to be allocated. There we go. I was going to say capital allocation. There we go. But no, Dr. Jim, this gives you a rough estimate. And this is one of those things where we're now just kind of just drilling it in your head, but this is some quick math that you can do on your own.
No, I mean, you're right there, man. And I think the biggest piece to this is just to show you that the biggest determining factor in the buying power equation will be the underlying stock price.
Right.
Which is why you see it kind of in this equation, kind of carrying the largest amount of weight, because it's going to be the dominant factor in determining what the buying power is. So that's why when I suggested undefined risk, just getting started, look at the stock price first. And 50, 60 bucks or less is going to be a great starting point for a lot of people. Because again, I mean, just think about it, right? Like, take Bank of America. Bank of America is a great example. Bank of America is like a $40 stock, $35, whatever, right? If Bank of America crashed by 25%, that's a huge move, right? That's like very, very unlikely to happen. But let's say something crazy happens, Bank of America, the whole banking sector, like, writ large, whatever, 25% move would be a $10 move in the stock. So if you sell a put in Bank of America, let's say, and you collect $1, then that means you collected $1, you're down 10 from the stock move, you're down $900. So that just goes to show you it's going to sting. Don't get me wrong. Like, it's going to hurt, but it's not going to clear you out. Like, it's not going to put you down to the mat to where you can't recover. And so that's why by choosing a lower price stock, it just helps you with that buying power control a lot more effectively than if you sell a put in Tesla or you sell a put in Spotify and it crashes by 25%. That could put you, down to the mat.
Are there any underlyings like Tesla that you're a little bit more hesitant to trade undefined risk because of the unexpected moves that it has? Are there any underlyings like that for you, or not really?
Well, I mean, yes, of course.
Not that they don't catch you off guard, but is there one that you stay away from because of the uncertainty?
Well, it's not that I would stay away from it necessarily, but it's going to impact my strategy selection significantly. I mean, like AMD is a great example. They just had earnings last night. Now, the move from earnings for AMD today is pretty muted. I mean, it's down a little bit, but it's down like $10, right? But it's like AMD, Nvidia would be another one. I mean, these stocks have the potential to move so drastically that you just have to be very clear of the concept of whatever it is that you're signing up for. If you're going to do defined risk, then obviously the disaster scenario is off the table, which is a good thing. If you're going to do undefined risk, which is, that's okay if you have the experience and the account size, you just have to know, all right, this is what I'm signing up for. Like if NVIDIA moves by $50 tonight, I've got to be ready for that. That's a very real possibility.
Yeah.
So those are going to be the two that come to mind first. I'm sure there's more, but I would say those two.
Yeah, no, that was exactly what I was getting at. Thanks for the context you added there, because I knew there wasn't any underlines that you probably like put on a no trade list, but I was wondering how you approached them differently, as I would assume you would if they're a different beast, or you've had a different experience.
You really
with
just
them.
have to know. You got to know what you're signing up for. You just have to be very clear. Like, hey,
Dr. Jim, you're consistent. I got to say, your vocabulary and what you say, it is very consistent.
Well, again, I give my students all the credit for that.
Yeah.
That's from the classroom, man. That's like, I kind of had to be consistent.
Yeah.
And it's like,
I mean, your verbiage is
same
consistent
class.
too, so it really does stick. Your verbiage is consistent. Yeah.
I mean, I taught the same class every semester for, 14 straight semesters. So I had to say the, same jokes, same stories. But the beautiful thing, it was a brand new audience every 3 months. So it was still equally as not funny, but it was like,
I was like, Dr. Jim's going to keep saying until somebody laughs. This is it right here.
That's right.
No, we'll go ahead and jump to this slide right here. But we have some traders are curious why the BPR for their naked positions, such as short puts, short calls and strangles can suddenly change throughout the trade. This is especially true when there are large changes to the overall market, like market crashes, rallies, earnings, other binary events. But aside from the stock price movements, Dr. Jim, the next big reason why buying power fluctuations, or the next big reason for BPR fluctuations is an increase in implied volatility. And a quick spike in IV can boost the option premium, which in turn will raise that buying power or the capital allocation for that specific trade. And I'll go ahead and jump to this next slide. So I got a little slide here to give us a visual for the fluctuations in BPR here. So this NVIDIA example demonstrates how the stock movement and changes in implied volatility affect daily buying power fluctuations. Now, over here on the left-hand side, it's going to give us the dates. The next column is going to give us the stock price, IV, buying power, and then the BPR change. So like we just discussed, we know that the fluctuation in the stock price can move or it can significantly fluctuate that buying power allocation for that specific trade. And then also we're going to focus a little bit more here on the IV. So if we look when the stock price was trading on January 23rd at $147, the IV was sitting at 41 with a buying power of just over $2,000. Now, just a day later, the stock price drops about $4, IV spikes to 48. The buying power now is 1,900, it's like 1,900, 2,000, about a 50 to a, I'd say about a $70 difference in buying power. Now, just 3 days later over the weekend, the stock price drops to 118, so the market gap's down. The IV jumps to 72. The buying power has almost doubled over the weekend, Dr. Jim. So, I mean, that is a 119% increase. That's not a small little change. I mean, percentages speak volumes. So when you see a percentage double, 119%, and then you look at the dates here, that's just in a span of 3 days. It can really show you that things can hit the fan very quickly, Dr. Jim. And then, just a day later, the market bounces back to 129. IV drops to 61. Buying power also reduces a little bit from where we initially started, but that BPR change is now going to be around 50%, not as aggressive as the day before. And then just a few days after that, the stock price is trading at around $117. IV increases a little bit to 74, and then that buying power shoots right back up, Dr. Jim. And we had seen a buying power change of 125%. So I think percentages really gives you an idea for how drastic some of these moves are, especially because if we're trading a smaller account, sometimes we might think like, oh, it went from a buying power of 2,000 to 3,000 or 4,000. It's like, yeah, it got up there, but that's still doable. I can manage that. One thing I got to say is like the account size you're trading with now might not be the same account size you're trading with tomorrow or in the future. So even though that might not seem like a big deal now, if you're trading with 50,000, 100,000, 150,000, 200,000, so on and so forth later on, that's a big deal because if you have a 100% increase in your buying power, you're putting up an extra 100K if that's your account size now. So I think practicing these little habits and ways to view things from a smaller scale is important because these numbers scale as we get larger with your account size. Dr. Jim, and I'll leave it at that for you.
You nailed it, man. This is why, generally speaking, from an overall capital allocation standpoint, we don't usually like to go over 50%. Like 50% is generally the ceiling for a lot of us.
Right.
Now, there are times when I'll certainly go over 50%. There are times when other traders will go over 50%. And if you're trading in like an IRA or something, it's very difficult because you don't have the margin relief. So you're going to actually spend most of your time over 50%. Like that's very possible. But again, remember within an IRA, I mean, you know, the margin is totally different. It's all cash secured. So you're not going to have to deal with the margin expansion like you would in a regular margin account. So just be aware that, I mean, if you normally live around, let's say 30, 35, 40% capital allocation across the whole portfolio, that's going to be a good place to live, generally speaking.
Yeah.
Because you are going to have a lot of safeguards in place against, you know, these rapid buying power expansions that aren't going to happen that often, but they will happen. And when they do happen, you want to be ready for them.
100%. And you're alluding to this next
and here
point
we go.
here.
I mean, this is the perfect next slide.
Yeah, no, 100%. So as Dr. Jim was saying here, therefore it's crucial to allocate that capital wisely into your options positions. And down here at the bottom, we have a little graphic to kind of show you how much percentage-wise you should be allocating towards or in your position or your portfolio. Now, when IV is low, around 30 to 50%, and you know what's funny, Dr. Jim, you know what you just said? You said, I think 40%, which is like right in the middle of those two numbers. When IV is high, about 50 to 70%. You can see we're never really positioning around 80 to 90 to 100% again because we're taking into account the potential fluctuations of your buying power as well. So when IV is elevated, traders have the opportunity to take larger positions to capture higher premium. However, any capital allocation exceeding 70% should be carefully monitored as this number can quickly expand if the market moves against your portfolio, Dr. Jim. As we've seen some big moves, especially early January, quite a few people got calls from their buddy margin. But whenever we see those outlier moves in the market, I think it's safe to assume somebody's getting a call. I mean, just dynamics and human behavior, because not everybody's going to be positioned correctly at all times. And these things happen out of nowhere, so it'll definitely catch you off guard. And it's one of those things I think you just have to prepare for, or you're going to learn. That's how I see one of these things. But we got an extra few minutes here, Dr. Jim. Anything else to add on this topic before we wrap up here?
Oh, no, this is really good, man. Like, this is really good. And like I said, this is one of those things where, like, if there's, there's so many new traders that find us. They're probably listening, watching the show today. Like, hey, welcome aboard. You're in a great spot. I hope you stick around. And this is one of those things where, honestly, just file it away. File it away in the back of your mind. Hopefully some of the math and some of the equations will help you out a little bit. But this is really, truly one of those things where it's not really going to make sense to you until you live it.
Yeah.
Like, you've got to live it. You've got to go through it. You know, it comes for us all at one time or another, and so it's coming for you too. And so I'm not trying to be the bearer of bad news, but just like you saw with the video in January, nobody saw that coming, and then it happened. It happened twice, basically, in about a week or a week and a half. So it's coming. Just be ready and keep these capital allocation numbers in mind, and I think it'll be okay.
The bear of bad news. Is that a coincidence?
Well, I meant to say bearer, but the bear of bad news might be more.
That's kind of good.
That's pretty good.
No, Dr. Jim, as always, we always appreciate you having here, getting your thoughts and insights, not on the positions today, but on these specific topics, especially as newer traders are diving into the market as well. But that's going to do it for today's segment. Everybody, we appreciate you taking the time to come hang out with us. Tomorrow, I will be back live with Gus at 4:30 o'clock Central Time. Dr. Jim and I will be back next week, Wednesday, same time. We'll catch you guys next time. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
On today's Trader Taste has a fever, and the only cure is the KFC pizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good. Hello, everybody. Well, tonight here, we're here to look at charts together. Bit of a mixed bag today. AMD turned out as I hoped. I had a nice tumble on that. What I didn't hope for is that the NASDAQ wouldn't care. The NQ is actually up quite strongly, almost 300 points on the NQ, about 1.25%. The RTY is down a little bit, and the ES is up pretty strong, almost 50 points. So pretty green day on the market. Not quite at lifetime highs, but close. So kind of annoyed that there's not more participation to the downside, but it's an okay day. And you know, the earnings season, as I keep saying, has been kind of drying up. It's getting less and less interesting. I don't think there's any cool ones left at this point. But we will make the most of it. There's always going to be motion somewhere. So let us jump in. I've got a couple of dozen charts or so loaded, and we can talk about them. We begin with the spider. Now, we have blown past that price gap, so we're going to say bye-bye to that. We have spent pretty much the past 4 days recovering from the big tumble last week. Actually, so the last 3 days, really. But so what we have here is we've got Thursday, and then augmenting to that, falling harder on Friday, and then doink, 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 a little bit higher lows and higher highs every day. So we've pretty much unwound what had happened with the Friday gap. We're hanging out where we were trading on Thursday. The gap is closed, and now there's precious little overhead supply at this point. The NASDAQ is really, especially the mega caps, powering things higher. We're not going to look at hardly any ETFs today. There's some interesting ones out there, I will say, at these levels. XHB comes to mind, but we're not going to do too much in ETF land. I will mention China FXI is still hanging in there pretty much. Stop on this one quite tight, 37.85. But longer term still looks quite good. You can see here that we're persistently beneath this broken trend line for years, really. And then lately we've had this peak and this peak and this peak, each one higher. But the breakdowns following the prior two, pretty impressive. And so that's where I'm inclined to see things going on this one. But the big tension last night was AMD. And after a wait, the earnings came out. And as these things sometimes do, it popped higher and then jiggled around, not really knowing what to do with itself. Then it started to push down into the lower direction. At the moment, it's down nice and hard, over 6%, more than $11 a share. Zooming in here, the lifetime high was established about 1.25 years ago. And we have, since then, we had this long slide. So we collapsed here from 227 down to double digits around in the 70s. So the vast majority of the value gone.
After it bottomed out, though, it had this explosive move higher, more than doubling in price just in a few months, and went ripping higher. And I came into the day, this is one of my largest short positions, and I was relieved to see it tumble last night. We had a good gap down today, so I've tightened up the stop substantially here. But yeah, so far so good on that. AMD is looking good, and it tends to trend for quite some time, either up or down, so maybe this one's a keeper for a while. It has been slightly helpful to pushing SMH lower, though not terrifically. SMH is down only about 0.1%. It has continued to hold above this dashed blue line, which is simply anchored to the prior high here back on June 11 of last year. So we've spent weeks just meandering in this zone, really not going much of anywhere. But the mega caps, the multi-trillion dollar firms, are really holding things up. So take Meta, for example. Zooming in here, we had, of course, last week this explosive move higher. They reported last Wednesday afternoon. On Thursday, it roared into the ionosphere. Friday, the whole market sold off really hard, so Meta succumbed to that to some degree, but has really shaken that off. It's a distant memory now, so it undid that Monday. And so for this entirety of the week, it's been pretty much hanging out where it was during the heady days of last Thursday, when it was rejoicing with those terrific numbers and usage numbers. So Meta really sky high, up more than 1%, right near lifetime highs. In sharp contrast to this, and this is a nice illustration of just how important long-term strategy can be. You know, Meta, it wasn't that long ago that Meta looked kind of done for. It was in really sorry shape. And clearly, whatever decisions were made were the right ones, because they have had about an 8-fold, 700% increase from those dark days, like so. On the other hand, look at something like Snap. They've been in dark days for years. Snap was founded about a mile from here over at Stanford University by some guys in a dorm. And it had kind of an interesting history after it came public, as with Facebook, which is Meta in the old days, had a rotten time of it, fell, and then became kind of a darling of Wall Street. It was down about $4 and it blasted to the 80s. So 20-fold increase back in 2019, 2020, sort of the COVID trillions days. Snap was a great beneficiary, but look what's happened since then. It's a single-digit stock again. And a different way to think of this is that, well, for one thing, had you bought at the IPO, you'd still be down like 75% or something like that. And we're trading now where we're trading back in 2018, which is pretty bad performance for any social media stock. So they had earnings too, and they just cannot seem to get their act together. As you can see, you get pops now and then, but it's generally pretty wretched. Touching on crypto for a bit. The 123 peak, $123,000 peak back on the 14th is still very much intact. We've been slowly working our way lower. We're about $8,000 lower than that now. And this medium-term supporting trend line has been broken. And as you can see, it's got some influence here because it broke here and it's been kind of trapped under that ever since. And so companies like Strategy are well off their own lifetime highs. And a lot of stocks in the crypto/Bitcoin space have really been slipping, in some cases, for months. Here's a DeFi development as an example. It's lost 70% or so of its value. Here's Coinbase, which was at lifetime highs just a couple of weeks back. But in short order, it's gone from 444 to is almost in the 200s again now. So quite a drop on that one. Circle Internet, very hot offering. This has descended from about 300 down to about half that level. So about a 50% drop on Circle. And you may think DJT has nothing to do with crypto. It has a lot to do with crypto because they've been pushing more and more into that space. And here too, we're grinding around near in the teens, which is pretty much as low as it gets. Even the Trump coin itself is still mushed down into the doldrums. So kind of peak excitement was driven by Washington, D.C. in the first half of July. And there's only so much pandering legislation they can throw at the crypto bros till the excitement dies down. So at best, they're just kind of digesting those gains right now. As far as the stuff you can actually hold and is shiny and pretty, gold is just kind of biding its time right now. Hardly moving at all. The front month is off 90 cents, which is like 0.02 of a single percentage point, so not doing hardly anything. But the miners, after yesterday's big rally, they've added some to those gains. We had, this has been a good week. Monday, a big up day. Yesterday, a big up day and a breakout. And then today, adding to that as well. So miners doing terrific. I won't show you the juniors GDXJ, but kind of the same as yesterday's. They're up, but it's just not as pretty. The pattern's not as clear. Now, I also mentioned yesterday another one of the big earnings ones. I had no position in this one, but was SMCI, Supermicro Computer Incorporated. That's become a big meme stock. I tweeted some stuff out yesterday showing how many of the WSB boys had basically pushed all their chips forward into that. Literally, some people put their entire portfolio into like short-dated calls, just nutty stuff, hoping for the triple-digit overnight win. Didn't work out. SMCI hitting pretty hard here, down about 20%. And it's a, it's not a chart I like to trade because it's just a mess. So I wasn't interested in either direction, but I was only interested in as much as a lot of people were making all sorts of big claims about just how explosive the move higher would be. But it's down over $10. As I said, down about 20%. Just still a real mess. I didn't trade it, have no intention of trading it. What I am kind of getting interested in, though, even on the short side, God help me, is the quantum space. Because these are pretty interesting looking patterns. Like here's quantum computing, for example, QUBT. It's not a big pattern. I probably won't bother, but a little short on this just for fun with a 17.25 stop. Wouldn't be bad. One item I actually have for the first time ever touched is Rigetti Computing, RGTI. And in this instance, very simple trade, very small, by far my smallest position, but a 17.60 stop on this, which is that price gap way back there. And so, yeah, we're going to give that a shot as well. How are we doing on time? Not too bad. Tesla, our old friend, the Fibonacci's are still in play here. They've talking about big leaps forward in self-driving technology. I use it myself pretty much on well, I don't drive much. I haven't had to commute in decades, thank God, but I do drive from time to time. And when I do, I like to use FSD. It works great. It's like a miracle. All the negative press you see about it, don't listen. They're just grumpy. FSD works wonderful. But there's talk about a new iteration of that, which is much better than even what they have now. And of course, that's important to the whole robotaxi effort. So Tesla's doing okay. They're up over $10, about 3.5% today. I was looking at some of its big competitors, though. Like here's Rivian, for example. And I'll say what I always say. I think they're beautiful. I'm not a truck guy, but I think they're terrific looking products. But for some reason, the stock just stinks, and it can't stop stinking. It's just been grinding around at these levels for years at this point. I guess as a company, it's just, you've seen the stats, they lose like $90,000 for every truck they sell or something. It's just not a good business. But the product's nice looking, but the stock is really crummy. And so Tesla seems to be kind of the one victor in this. I looked at Lucid too. It's even uglier looking than this. Anywho, just to wrap things up, IWM, the small caps, still think this is an interesting play on the short side. The kind of analog, the kind of pink-green boxes you see there, I think are still possibly relevant. It's got to start breaking down pretty quick here, though, for them to work out. And then the cubes, as I said at the top, quite strong. We're up over 1.25%, right near lifetime highs. And I'm not quite sure what's ever going to stop this bus because we're past the earnings season. There's no really shockers possible along the way. So handle with care. Anyway, thanks for joining me, and I will see you tomorrow. Hope you're doing all right. Good night.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live, my friend, with, well, the closing bell. It's a good day, Sosnoff, to be a spoo doggy. Even the S&P is up 53 back to where they were numerous times, Sosnoff. Look at what I've uncovered here in my quantitative research here. Over the last 4 days, we have hit around 63.70 and change 4 other times, Sosnoff.
We were down 100. We were down 100, up 100, down 30, up 50. I mean, we've pretty much spent the last 4 days going bump, 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 bump. So tomorrow, Thursday, should be a down day, but I don't know. I think Friday's going to be a down day, but we'll see.
We opened on Monday, I believe it's 62.57, Sosnoff. Just a nothing 20-point move so far this week. What are you worried about?
I'm not worried about anything, actually.
NASDAQ up 300 and change. That's your big leader in the clubhouse. Russell is your weakest of the group, obviously unchanged, down 40 cents. Dow up 130. This is a NASDAQ and even the S&P rally today. Volatility in by a whopping 70 cents, Sadnov, almost 4% to 1770 on its lows, really not having a heartbeat today. Bonds, Sadnov, did you see them around 11 o'clock or something like that?
Yeah, I heard, but that was just a kind of like a 2-second rumor on somebody, switching.
I missed it. I actually got an email from a buddy of mine, Jason, said, did you see that bond move? And by the time I looked, bonds were right here, 115.60.
Yeah, it literally took a minute, and they dropped, but by the time you would have queued it up, you would have missed it. If you would have queued it up, I don't think you would have, because it looked like they were crashing for a second. So the rumor was that they were switching the chairman of the Fed or something, but it was just all garbage. And the street didn't like that. So, but then they just came right back. And then after the auction, they were maybe 7 ticks lower than this, but
yeah, I mean, it was a nothing. But it was pretty much a nothing event, right? With the auction,
Yeah.
talking about Central Standard Time.
Yeah, the big move today was like some of the big moves today in the commodity world was the U.S. dollar got crushed. I think that if I'm right, the euro is up like 800 ticks or something today.
You are correct, a little bit more, 860 or so. Yeah.
Yeah. And that was kind of I think that was pretty much the biggest mover. And then I guess, the market we didn't trade Apple today at all. We didn't really have much on in there, but
we did talk about Apple up, I don't know, was it 6 or 7?
Yeah. Well, it's up 10. It's up 10, 11 now. Apple, Reddit. Amazon was up this morning, and
Netflix is up 20. Shop is up 28 to 27, whatever.
Yeah.
Apple going into earnings tonight up 13. We'll talk about that in a minute. Even McDonald's is up $11. So now people spending more money at McDonald's.
Well, you can't trade Apple oven, so forget that stock. It's untradeable.
Yeah.
McDonald's is not untradeable, but it's not the greatest. That's for sure.
Ivy ranked at 13 should have helped you there. I mean, you would have been directional at least premium.
Yeah. For us today, we lost money because we have a position on in indexes. The individual stocks, I didn't lose anything. The earnings plays were good last night. The individual stocks were good. They killed premium in Coinbase today.
Mm-hmm.
They expanded premium in Reddit. I'll give them that. And that's about it.
Yeah, Bitcoin caught a bit again off of its lows of under 114, almost 116 now. Oil down $1.21. I don't think that hurts any Americans' pocketbooks there. Gold unchanged.
Yeah, no, the other commodities were kind of crappy today, and there wasn't.
I'm being told McDonald's is offering Happy Meals for adults. That's why it's going high.
You're kidding. Is that what it is?
That's what somebody wrote me, and they were curious on what toy you would want.
A Happy Meal for adult. Are they giving out adult toys? that would be a little risque for McDonald's.
Not the butt plug again. Can I exchange this? I already got 3 of these.
That would be the funniest gag ever. That would be great. Oh my God. That'd be off the charts. That would help their business. I'm not sure how much a Happy Meal would cost, probably about $30, but that'd be funny, because then they could do like you walk up to thinking, would you like the adult Happy Meal or the adult Happy Meal?
You don't want to have the meals getting mixed up there with the children.
No,
though. You can be careful.
Yeah. Oh my God, that would be hysterical.
Sadnov, I knew today was going to be a good day when I saw, what stock I've been beating up? Costco, that's right, up $26 and change, Sadnov. We are back, baby.
Yeah, I made a little money in Costco today. Shocking, but I've been sitting long in the stock so long. Let's see. Yeah, we're still long it. It's crappy. It's still up $25. It's only $9.68. No. I need another $25.
I do. I could use another $25. I'd be all right with that.
Yeah, I'd be all right. That's a wait. Yeah, I have to tell you, I wasn't as active today as I thought. I thought I would be doing more, and I was just like, some of the pigs, they rallied today. Costco, IBM, a little tiny bit. Some of the dogs, they came for it just a tiny little bit. Nothing.
Yeah, tiny little bit.
Yeah, tiny little bit. But a few of the dogs rallied.
On a day like today, I like to see like what dogs are not participating in the
Well,
market.
anything small cap did not participate.
Yeah, with the Russell unchanged. And you got Lilly going into earnings tomorrow morning down $20. We can talk about that in a moment. Upstart down 15. AMD for earnings down 11. SMCI down 10. Caterpillar and the Dow down 6. And
When you think about all the earnings last night, Caterpillar down 6, SMCI down 10, AMD down. Those are the main ones. Snap. I can't remember.
I want to have neutral delta probably.
I mean, Uber didn't. I don't think Uber was up today. I think it was unchanged or down. Let's see, Uber unchanged.
Uber is up 7 cents.
Yeah. So when you look at the earnings for last night, everything was crap. So I like when they go, well, the earnings carried the market. Well, the earnings didn't carry the market, okay, because the earnings were absolute garbage.
Yeah.
So the earnings didn't carry the market at all. So anyway,
so let's look at the earnings. Airbnb is on board 42 IV rank in there, kind of going sideways to lower end of its range. August with 9 days has about 15-cent wide market. You do anything in Airbnb?
I'm not. How many shares did it trade today?
5.8 million.
Yeah, it's too small for me. I'm going to say no.
How about Lilly? Lilly traded only 3.5 million shares. Markets. I'm going to go to the.
But it's an expensive stock.
Yeah, markets are 50, 60 cents wide in the 2-day options. They're going to be significantly wider if you go out to September. They're going to be, double that, 80, 90 cents wide.
We have the 600 940
in August or September.
In September.
600 940.
600 940. We're going to roll down the 940. I didn't realize how far out of these 940 calls. Yeah, we're going to roll down the 940s. Ooh, not a lot of different choices here. 940 to 920.
It's $20 wide, then $10.
Yeah. I might roll them down. Let's see. I rolled them down. I was gonna say if I can't get filled at the mid price, I'm not rolling them. I have no delta in Lilly, but we have a short strangle. It's currently trading for 626 in September. Now, what else you got?
Next one would be D-Dog.
Don't have it. Don't like it. Hate that stock with a passion. That stock, they should burn it to the ground. We've never made a dime in that stock ever, 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 ever.
IV rank at 30. It's up $3.47.
I said, I'm never trading it again. I swore I took that off my watch list, never to trade it again. What else you got?
Another one you swore you'd never trade again, AppLovin, APP.
I won't trade that. I tried this morning, forget it. Worthless.
Yeah, September markets are quite wide.
Yeah, nothing.
VST.
Oh, that we did a trade this morning. VST.
IV rank of 23. Stock really hasn't been able to have a downtick until the last day or two.
We are short the 155, 265 strangle. We did it this morning at 413. It is 358. Wow.
155, 265. Yeah.
Came in 60 cents already today.
Yeah, you either have to roll down the calls or keep it on.
I'm rolling with the punches here, Mr. Batista. Rolling with the punches.
You gonna roll down to the 55s or the 60s? I think I gotta roll down to 55s personally.
Let's see. I'm at the 2. I'll roll down 5. I'm good. I'm fine. I want to keep a little long delta. What else you got?
Oh my God, you needed that 37 cents. That's gonna help. Wow.
Be mechanical, sir. Be mechanical.
Yeah, that's why I said you should go down $10. DKNG, IV rank of 31.
We sold some puts in there this morning. I have not looked at it all day. DKNG.
In September?
Yeah, we sold the Augie puts expiring this week. We sold the 41 puts at 53 cents. They're currently 46 cents. We're up huge, like 6 cents, 7 cents.
Oh, and a buddy of mine sent me a picture. He just had to wait a day and a half, Sosnoff. What was this stock? Was it in Pfizer? He made like 46 cents, Sosnoff.
Ooh.
So you owe me $20. I'll send you the email.
Your monkeys don't mean anything to me.
You know,
So-
he's got documentation. He's got screenshots.
He can have as much documentation as the bet wasn't.
He's got screenshots, and that's the guy who told me, to play Pfizer. You said nobody makes 20 cents in Pfizer. He made like 46 cents.
He waited 2 days.
A day and a half.
Anyway, DKNG, that's my other.
You're not going to give me the $20 back, I'm assuming?
No. DKNG, we did it small. It's it. And we're just short some naked puts in there. That's it. Yeah, so a small position in DKNG, Lilly, and VST, very small. Earnings have been good to us lately, so we're just going to continue to roll with that. And that's it. I don't think there's another big story out there for us today. I mean, this was a day where, Apple put the market on its back, Reddit put the market on its back, and everything else kind of, eventually Amazon rallied up a little bit, but that was kind of, and Netflix too.
Yeah. The usual suspects that you want to see on a nice.
Kind of, yeah, a mishmash of usual suspects.
Mm-hmm.
So that's okay. It's all good. Trading, I think trading seemed like it was pretty busy today.
I haven't gotten my volume numbers. I mean, I think Nvidia only up $1 and change is probably the weakest of the group.
Well, Nvidia did not trade a lot today. It wasn't a big day for Nvidia, but these S&Ps, man, they never had a downtick all day.
They had that one downtick when Scott was on. They got to.
They went from up 20 to unchanged.
Yeah,
no, right. Jacob was on.
Oh, Jacob was on. They were up 20 to basically unchanged. That is correct. Yeah.
We're up 20. They went to unchanged. They started to rally back. They rallied back 50. There were two crazy moves this morning. They went from up 20 something to unchanged, up 20 something to unchanged, and then straight up 50. It's really, really rare that you see that kind of tape action in the morning. Really rare.
Yeah. And on such a big day like this, I wouldn't expect Microsoft to be down, but it is down $3.30 some odd cents.
So there's no rhyme or reason for any of that stuff. It's just kind of fun the way there's this sector rotation. I feel like it's the same dollars. Everybody's got all the same dollars. They just, everything's commission free. So you just take your dollars out of Microsoft and put them in Palantir today.
Come on, everybody, we're going to Palantir.
Exactly.
I'll run.
I kind of feel like that it's all done on instant messenger or some version of instant messenger, and then they all are doing exactly that. Exactly.
I didn't get the message.
It certainly
going to AVGO.
It certainly feels like that. Yeah, I'm sure they are going to AVGO. I think what happens is one guy buys AVGO and then he sends the message out. We're all going to AVGO, and then if nobody else follows, he's dead.
Oh no!
Then it's Microsoft. Because it can't. Just retail investors do not trade that way. Sorry, Charlie. It doesn't happen.
Pretty funny.
Yeah. No, that's just not cool. Tomorrow we've got trades from the research team in the morning, and then we've got little Radigan action tomorrow morning at 8:40, and that's kind of full day of programming tomorrow, so that'll be fun. But let's see. Right now,
you're about 12 minutes before the close.
I'm going home with the exact same deltas on that I had last night. Exactly
the same exact cash you had on last night, though.
No, I'm a little short today.
They took a little bit of cash from you today.
No, they took yesterday.
Yes, they took yesterday away. Those sons of. Yeah.
I hate when I work for 2 days for nothing. I hate it. I worked my butt off yesterday, and they took it away today. Because you know what? I thought there was a chance for some follow through.
I know you did. You were looking for a down 80 day the other day, remember?
I know, I was hoping, but I didn't get it. So
you paid the price, my friend. You paid the price.
A little too much directional risk on today. All right, let's see what else we got going on here. If there's anything else that jumps off my screen, and I'm going to say, not yet. Not yet. I mean, there's a few stocks that are not even interesting. There's a few stocks that are just all range bound. I thought after last Friday, things were going to get interesting. And then because there'd be a little more direction, but no bueno.
Yeah.
So now we're back to up one day, down one day.
I've got your old curse. When you used to leave, the market would, fall off or fall out of bed or have a huge move. Now it's on me.
Well, I need you to go away Friday then. Because I need
Friday or Friday for our show, Sosnoff.
No, for our show. For our show, it's going to be good because I think there's, it's not expiration, right? It can't be expiration on the 15th. Is it expiration on the 15th? No, no.
No, sir.
No. This is the long expiration. This is
August 15th is expiration.
Oh, it is.
Yeah.
So the first of the month was a Friday. Huh.
Today's the 6th. Yeah.
Yeah. There you go.
Yeah. First of the month was a Friday. Yeah.
Okay. That means that we're going to be doing our show on the opening on expiration Friday.
That's right, Daddy. Live and in charge.
Oof. That means the SPX is going to be all screwed up that morning. That means you're going to butcher everything. Hold on. Doors open at 8. Show starts at 9. So we'll be fine because it'll be half hour into the day. All right. We'll be fine.
We'll be all right.
Yeah. It depends. Yeah. That'll be fine. All right. Good. Yeah. But
veterans like us, come on.
You do know that this is one of the most bearish expiration cycles, not up down on that Friday morning, but just the magnitude of the down moves blows away the up moves.
Okay. Like for the expiration Thursday into Friday, the morning print.
Yeah. The last 27 years are 14 down and 13 up. So it's pretty even, but the size of the down moves is much bigger than the size of the up moves.
Got it.
So we're going to have some fun next Friday because there should be a lot of stuff to do.
Mm-hmm. Beautiful.
Yeah. Looking forward to it. You better get your helmet on though, because I don't want you to, stumble around at all. You better practice.
I'm going to do my best. You know, I will.
All right, let's see what else here going into the close. I know that Wells Fargo downgraded the small caps this morning. I can't imagine that's why they're down all day. I mean, who listens to Wells Fargo? Anybody?
I don't even know if Wells Fargo could find a small cap. Like, I don't even know if they know what it means. And the thing is, I don't think the public knows what that the Russell is the small caps.
Right. So I don't know why they're down so much today. Or they're not participating, but who knows?
That I do not know. So I just had your biggest sell-off of the day, about 6 or 7 handles.
Yeah, that's about 4, actually. Yeah, it's practically crashing. Yeah, my P&L is coming all the way back.
Yeah.
Not really. But I need them if they could drop them 20 handles here on the close. They did rally them last night a little bit on the close, and then when the AMD numbers came out, they sold them off again. But right into the close, they rallied them a little. I don't think tonight's close. I don't think any of those stocks that have earnings tonight are going to move this market. None.
All right, you don't care about, before we go to the overtime, guys, you don't care about Piton or Dash or Oxy? Just making sure.
I do not care. Thank you for your concern.
Well, you always say, I screwed up, but luckily I saved you money. That's what you.
Okay, I'm going to tell you this right now. If I ever own Peloton stock again, slap me.
I can do that.
All right, let's grab the overtime, boys. See what we got here.
All right, let's do it.
Call this a warm handoff.
And then there was one little Indian.
Gentlemen, how goes it?
Good. Elliot, how are you?
I feel like I could be worse for what the stock market is doing today, but thankfully it hasn't really gone anywhere since the close on Monday. So it went down yesterday. It came back up today. We washed yesterday's sell-off. Have we really gone anywhere?
We're a little higher. We're a couple of ticks higher. That's it.
We're 20 handles higher, but man, this has got to be disappointing for a bear.
It is, but it's not dispiriting because the topping that happened last week, we'll see, right? Like if you're short from the highs last week and you thought that was a topping, then you haven't been proven right, but you haven't been proven wrong. So
Ilya,
that high is still there, and we'll see.
As a short delta participant, we're never short at the highs. Like there's no such thing as selling at the highs.
Well, of course. But
I mean, I did once in 1997, but
It was an era.
It was an error, right?
Yeah.
It's very difficult to sell.
Other than blind luck, there's no way to sell at the highs. But when last week the whole thing looked so soggy that they faded the Meta and Microsoft earnings, they faded the EU-US trade deal. All of that looked very soggy even before the jobs data. So if you looked at that and said, okay, the price action is telling me this thing is heavy, I'm going to put on a little bit of risk-defined exposure on the bearish side because this looks like it might be a high, that idea has not been shown wrong. It hasn't been shown right either. We'll see.
Mr. Vecchio, what do you think here? What thinks you?
The stocks are kind of in a range right now. I mean, they're basically at the midpoint from where they were over the past 5 weeks.
Yep.
It's a nice bounce today.
Yeah.
But it's not a lot of breadth. I think that's the big story here, right? You look at the ETFs that are above water, it's tech and miners, and most of the market is otherwise red or struggling. So maybe we just get a lot of chop between 22,800 and 24K in the NASDAQ. It's not great volatility, 15.5 IVR, but directionally neutral over the next few days may be the most prudent thing to do.
Mm-hmm. Yeah.
I mean, we are in no man's land after making the lows pretty early on Friday, Monday to today. You are, I mean, that is right. But man, we were making high after high, and you sell off like that. I mean, that was a good little trap for any kind of bear trying to get short, because you don't get short at the top. You get short somewhere in between. And every time that there's been a downtick, it's been met with buying. I mean, volatility now, the /VX in the 17 handle and not moving any at all today, that gives a little bit of credence to the bulls here, I think.
My line in the sand is basically something like 6,400 on S&P. If you can get back over that and essentially come back into the range where you kind of roughly started August, like late July, early August, into that attempt at a top last week, then momentum has basically fizzled out on any downward attempt. But in the meantime,
that's a sneeze away. That's like this.
It's a sneeze away. You just got to close above it, though.
Yeah, I don't know about that. I kind of think that I thought Monday was the hook, actually, and so we'll see. It turned out it wasn't, but I thought it was. Let's see what happens here.
Yeah,
I'm not so convinced they're going up. I think the most bearish thing is Apple going up. It's stuck. It's been the counter trend stock. Market's going to do the opposite of whatever Apple does, but we'll see.
Yeah,
there's not a lot of news for the rest of the week, and
good news sucks.
Yeah, that may be a good thing. That may be a good thing because you have a window here for the market to kind of find a path of least resistance without worrying about, oh my God, at this hour, this number or this earnings thing or whatever is coming out. So maybe that gives this thing a little clarity or a little room to find clarity.
What's the path of least resistance been, in your opinion?
For the last 15 years?
Up.
I mean, obviously higher.
Right. So I find it hard to be, optimistic about the downside.
Where's Radigan when we need him to just be blindly bullish and optimistic about things?
The most bearish thing I have going for me is that Tony's bullish. I mean, that's honestly that makes that gets me wanting to short everything. Like that's the most bullish I've ever.
For a couple of days now, give me a little credit.
We haven't gone anywhere, but that's the most bearish thing I've ever heard is you getting bullish. I just look for certain indicators like that. Those are the cool things.
Yeah,
those are the fail-proof ones. Those are the ones.
Those are the ones that actually work.
You don't get every day, but they do work.
I'm just waiting for you guys to cancel the overtime transition. That's been my indicator to buy the market.
Indicator.
You're right.
That's the indicator. When we go to calls at the end of last call and we open the phone lines, that's the indicator.
Yeah. Yes.
That's it.
Yeah. Well, we got less than a minute here, Sosnoff. Is this a hobble down 5 handles off of the highs?
Yeah, I don't think it means anything. I'm not going to even. I'm not going to call this limping into the close because this was really nothing. At this close here, who knows? We go. I'm going to take the downside tomorrow. I like it. I like the downside tomorrow, Tony.
All right, well, you haven't been right in 15 years, so it makes me feel good. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the Overtime Boys. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look. They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yes.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But For whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options. If I had a $100,000 account, I was long like 20 grand's worth in the front month for sure. Don't do it, kids. Don't do that.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Stock, shake it off. It's Wednesday. It's August 6th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco, Mike Butler in studio today, sitting in for Dylan Radigan. He's in Chicago. We're here to take you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. As always, you can follow us on the platform Tasty Trade on the website tastylive.com. Come over to YouTube. Mike's manning the chat. Tell us what you think of this action. What do you think of that bond market flash move lower this morning? Not sure what that was about, although there was a pretty terrible 10-year note auction later in the day. Doesn't matter to stocks. S&P 500 up by 1.2% and change. S&P 500 scaling the wall of worry itself. Not sure if it's an impressive day for the broader market because the breadth is pretty bad. Russell lagging the pack, most sector ETFs underwater. Instead, our attention turns to Ilya's beloved US dollar, which is punching both him and I in the face.
Yes, it is.
Gold, silver are perking up a little bit here. Obviously, lots of corporate intrigue with earnings out over the past 24 hours. But Mike, we'll start with you because you're our returning champ here to Overtime in the guest spot. We have a market here that's quite resilient. S&P 500 63.71 on our screen. What say you about this market moving up as we make our way through this first week of August?
Sometimes you just got to close your eyes and smile and just buy every dip you see. I don't think I've seen Tony so happily bullish before. It's very, very rare from last call. But yeah, I mean, when we had the initial sell-off last week, the first thing I did was look at volatility futures, and they were basically not moving. They were up a point, which is basically, for me, that's nothing. If we were to have seen that sell-off and maybe 3 or 4 points be infused into vol futures with maybe a little flattening of the curve, I think that's more telling of a continuation there. But now we're seeing the dip bought in every avenue. Like Apple's was up $10, $11, $12 today. Amazon up almost $10, just reversing the woes of the earnings results from last week. So the market is telling us we should see certain things, and we're seeing it. And so I guess it's that. I guess that's the environment we're in. I feel like we've been there for the whole year.
Dylan's not here, but I think we're recreating him in the aggregate, Ilya, from yesterday.
It does seem like it, doesn't it?
Yeah, Mike, I don't know if you saw Dylan's rant yesterday. He berated Ilya in all bears. Even as a fellow bull, it's like, please stop. He's already dead. But Tony's pretty bullish, and you're bullish. So, Ilya, we don't have it.
And I'm unrepentant.
And you're still sitting. Okay, so why is Mike wrong?
I mean, just take a look at the chart of the S&P and tell me what has actually happened. But
it's like a Rorschach test, Mike.
I mean, let's just put a horizontal line through 6,400 on the S&P, and you tell me what has happened. But it's not exactly rocket science. Last week, we pushed a range. We broke through that range. We remain under that range. We have gone absolutely nowhere but for about a 50% rebound off the lows on Monday. Yesterday, we went a little down. Today, we went a little up. It's a new range we're carving out, and we're consolidating. In other words, the markets are net down off the high, and we're waiting for them to see if they're going to attempt to make a run at offsetting or invalidating that breakdown, or if after what is a textbook retracement after a big move, we're just digesting before the next decline. Have we broken the series of higher highs and higher lows going back to the latest swing bottom in late June? Yep. Have we undone that break? Nope. So what exactly about this price action today tells you anything has changed between the end of the day on Monday and now? Nothing. Zero.
All right.
Oh yeah, I'm a little pissed at you. It feels like you're like, come buy some puts, we'll have a laugh.
The water's fine. The water's fine.
And if I was just amoral and mindless like Dylan said we needed to be several weeks ago, things would be going a little bit better. I kid, of course. I mean, not really. It's not like I sold at the low, so I'm not really feeling the pain. But there's a resiliency to this market. I mean, the Apple news today, Mike.
I mean, again, is there? We're down from the high last week. We haven't come back to retest that high. Where is this resilience? Because the market is
Apple's
up a
up.
day.
Apple's up, Ilya. Apple's never up.
At the top of the range where it's been stuck since early April. Again, where? What is this resilience that we're talking about? Where is it? Show me.
So, Mike, this is my quip with today's market, and I want to give the devil his due, although Ilya's, well, we'll leave that up to the audience, but 10 of the 25 sector ETFs are in the green today. That means 15 are red. And I couldn't help but notice in today's session, when we look at something like SPY, for example, it's up by 0.75%. Our RSP, the equal weighted in S&P 500, is down by 0.2. Same thing for the triple Qs, up 1.26. QQEW only up by 0.2. 0.49. So that doesn't really seem like a healthy market, so to speak, kind of fake looking at the top level. Does that concern you that there's not a lot of participation with today's rebound?
Yeah, I mean, I think it's always cautionary when you have a couple of names driving what feels like the entire move. And of course, under the hood, there's definitely some issues. I mean, looking at the Fed Watch tool, this completely flipped. This is totally inverted from what we saw a couple weeks ago, where we weren't projecting cuts, and then one day everything flipped. Now we have a 95% chance we get a 25 basis point cut. But I stand by. Prove it to me. Do the cut. Actually do it.
Yeah.
But we'll see. Maybe the market is kind of timid until we actually see the cut happen. Strong possibility that it's going to, but this year and last year, it's just been kicking the can down the road. So I think if we do get the cut, I think that's when you may see a lot more volatility in all these names that are in these indices. And maybe that's when we get the macro move that we're looking for, where right now it's kind of just this low vol chop. But that would be a little depressing because we're over a month away from the next decision.
One thing I think, I was doing this as I was getting ready for the Bank of England rate decision overnight, but it's important to remember the Fed cut rates by 100 basis points last year.
What's your process for getting ready for the Bank of England? Do you like brush your teeth, haircut?
That's later. Here I'm just updating charts, looking at what's priced in, getting my pound shorts ready. But as I look at this, they're widely expected to cut. And of course, the president is going to crow about it like he did the last ECB cut. This cut for the Bank of England will be the first one that actually gets them a hair ahead of where the Fed has been since December. The Bank of England has been cutting longer than the Fed, but the Fed has cut more. Last year, the Fed cut by 100 basis points. We should be starting to see that begin to filter into the economy right about now. And the second quarter GDP numbers gave us the weakest 6 months of consumption this year since the first 6 months of 2020, the COVID recession. So the macro situation in the US looks pretty awful if you kind of consider things in context. The jobs report, awful. The ISM numbers, awful. The consumption numbers, awful. Inflation, back up. The reason the Bank of England is so interesting is they're in a similar boat. Inflation is up, growth is cooling. Only now will they take a step in the direction of outpacing the Fed by 25 basis points, but they're only baked in for this cut and one more this year and the third next, which is way less dovish than what's on the menu for the Fed this year and next together. So you look at this and you go, okay, well, should the Fed be cutting? Markets think so. But it's not like they haven't been. It's not like we shouldn't be seeing that stimulus. And yet it's not here. So what does that say about the underlying economy? And is it actually weaker than meets the eye because the stimulus is starting to have an effect to some extent?
How much per year will the tariffs cost you as consumers? Do we have an estimate for that?
I think we're going to find out, because the tariffs are such a black box at this point. I mean, obviously, we're waiting for this cliffhanger this week. Maybe we get another thing that happens. Maybe there's another announcement. Today, India caught a 50% tariff. So We'll see. I think the essence of why the Fed is dithering is nobody knows.
In the United States, there are 128.7 million households. That's according to latest census data as of end of 2023. The Yale Budget Lab is projecting that the median American consumer household, family of four, is going to see about $2,080 in charges. So we're talking about a $250 billion hit to the economy. That's considerable. You know, one of the reasons why lower rates may not
numbers make sense.
I mean, that may be one of the reasons why we haven't seen the interest rates flow through, because interest rates would be helping, say, small business formation. But if you're a small business right now and you only have one supplier and you don't have the ability to stock inventory because you don't have the facility, because you don't have the balance sheet, you're just screwed. It doesn't matter if lower rates are coming around the corner. You can't operate in this environment. So maybe the lower rates just they don't make a difference this time. But there are encouraging signs, right? I know this is a lot of idiosyncratic related risk today because telecoms are surging to a new all-time high. Consumer discretionary is on the up and up here. Mike, these aren't exactly hallmarks of a bear market. When the tech names, when the consumption names, when XLK, this is a new all-time high close this week if we were to close at these levels. How are you managing to ignore the noise, ignore this? Maybe you ignore seasonality all the time, but how are you staying on for the ride right now? Because I found that to be very difficult. And quite frankly, I haven't been involved since Thursday.
I am trading live cattle futures.
That's what you got to do. Man, yeah. I've been sleeping.
Yeah.
That's what you got to do.
I mean, I've definitely increased my exposure to futures products. So I have wheat position, corn position, micro natty gas, micro crude, live cattle, and gold. And that makes up like half of this portfolio. The rest is just sizing down, doing more diagonal spreads, calendar spreads, some iron condors here and there. But yeah, I don't think anything really changes. I'm more prone to taking risk off with smaller winners, especially if they're to the upside. Like Apple, I had a call diagonal spread, got bailed out today, took that off. Amazon, if we see another day like today, that'll be a bailout too. So I'm just basically shifting slightly and by way of taking off winners if they're smaller winners and I get them quickly, and adding more neutral to bearish positions in SPY and SPX. So I had a put diagonal spread that I put on in SPY, took that off when we got that 100-point sell-off last week. That was like a $200 winner there. And I still have an SPX Iron Condor on. I have my short call spread at 6,300, 6,310. So I'm still leaning short with some positions. But yeah, I think keeping risk small, keeping cash on the sidelines, and really just being patient enough. Luckily, football's around the corner too. That'll give us something else to look at. But you just have to be patient and wait for this thing that's going to happen. Because if you're not, I think it makes sense to be positioned for a grind higher up and to the right until volatility picks up. Because there's just no way that the market sells off 5-10% if we're still in the teens in volatility. It's just not going to happen. So
yeah, I mean, Ilya, it's low volume, it's low vol.
Totally.
If the markets are, I mean, you and I went through this exercise, and for the sake of intellectual, which one of these notes is it on my desk? Not you, it's you. Monday, NASDAQ, you had 23,300. You pointed out 23,365 as a line in the sand. Russell was 2210, and the S&P was 6365 on Futures Power Hour. I see markets that are basically on this. All three of them are on the other side of those levels. So what are we actually hanging on here for? If we're trying to be a little bit more conservative, why not switch to directionally neutral as opposed to being outright bearish?
Because the vol isn't juicy enough. To Mike's point, you go directionally neutral, and what are you actually doing? The IV rankings here are not really giving you much to extract. So in my mind, again, you had a sell-off last week. That sell-off has not been invalidated. We have seen a little correction in that sell-off that is textbook in line with what you would expect, where we came back to scrape the underside of the range that was broken. It's the first page of any textbook on technical analysis, but never mind technical analysis. Let's not get that complicated. You had a range. That range was broken. The underlying assumption there is, oh, okay, something different is going on. Have the markets shown you that something different again is now occurring? No, they haven't. So what is it that you're doing here? Well, from a risk-reward perspective, you have a ton more room on the downside than on the upside. If last week's topping signal is wrong, and maybe it's wrong, I'm not married to it being right. If it's wrong, you're wrong fast. If you're right, you're asymmetrically right by a lot. Vol is cheap. Puts are cheap. Duration is cheap. The thing to do from a risk-reward perspective, it seems to be the most obvious thing in the world, is to be a little bit short and see, because you can buy put verticals here that are risk defined for not even peanuts. And you can give yourself tons of duration to dilute your sensitivity to near-term delta and make this very easy to float. So if you're going to do anything, you have to be risk-reward minded and price action minded. Forget whatever you or I or anybody else thinks about the economy, the tariffs, blah, 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 blah. What's the price action say? We had a breakdown that isn't invalidated. Vol is cheap. Risk-reward is asymmetric. This is not rocket science, as far as I'm concerned.
Yeah, to Ilya's point, the put diagonal I had on in SPY. So SPY Ivy rank low, implied volatility in 17.8 for September. These are really low numbers. The one I had on was a 30-point wide diagonal spread. I had the 630, 615. I bought September, sold August. But right now, if you wanted to just, like, let's say we open at where we're at now, you could buy the 630 October and sell the 600 September for $9. That's a 30-point wide diagonal spread for less than $1,000, and half of your cost is baked into the short premium that falls off. So there are ways to get defined risk, positive gamma, positive delta if there is a sell-off, and you can double that capital and hedge in a big way. And even if we grind higher, it's not going to be the end of the world. With the ability, with a 30-point wide diagonal, you can roll that into a 20-point wide or even a 10-point wide and reduce your risk dramatically, because you're starting off with a 30-point wide for less than a third of that width. And
the chart looks good. It's just I just hate being long stocks in August and September.
Yeah. Unfortunately, the click and drag where you can change the axis, it doesn't really work to the downside. It only works to the upside, where it gives you some more room. The other trade that has been a really good trade this year has just been like broken wing butterflies. So I've been using those in gold futures. So to Ilya's point, like, let's say we're seeing a 50-point rally. Let's say you get another one tomorrow. You could throw on a call broken wing butterfly in SPX way further out of the money and collect $200 or $300. And if we do get the sell-off, you can turn that into a symmetrical butterfly and keep that credit, or a majority of it. I've been doing that with gold futures this whole year, and it's been a really good trade. So that's another alternative. Like, get a little directional, but still collect a credit, have no risk to the downside. It doesn't have the same teeth as a diagonal spread or even just like a short contract would if you're using like a micro futures contract. But there's plenty of ways to play this if you want to throw on some new neutral to bearish trades.
Okay, so broken wing butterfly is a little bit more of an advanced options strategy here. It's you're not going to have strikes that are equidistant from the midpoint. Do you mind just breaking down why, under what situation someone would want to put on that broken wing butterfly and how they would actually apply it? And I know, for what it's worth for the people here, you can go to tastylive.com and look up our concept strategies. This is in there. But Mike, while we have you, could you take out your whiteboard, so to speak, and explain it?
Yeah. So if you're in the GCV contract, the 23-day contract, and you pull up that options trade. So basically, the one I have on is buying one of the 3480 calls on the upside.
3480. Mm-hmm.
Selling two of the 3500s. And then buying one of the 3540s, and just move the put on the they're all calls. Sorry.
Oh, sorry. They're all calls.
Yeah, they're all calls. You can just drag them over. So yeah. So this, and then if you double click the middle one and then just add a contract.
Yeah, my fat fingering this.
Yeah, if you click the quantity button to the right.
Yep. Well, I'm just totally losing this. Anyway, go on while I figure this out.
So that'll right now it's a $220 credit. Is what I'm seeing. So basically,
making an arse out of myself here.
You're good.
Go ahead, keep explaining.
If you highlight the middle one, and then on the toolbar right above the price, if you click the right arrow where it says quantity.
I know. I it's right there. Thank you.
There you go. So now if you go to the trade mode and go to curve, and then click analysis.
There.
And then go to expiration or P&L expiration. Make sure that's highlighted. It's on the left side. Yeah, you're there. Yeah, click that again. So if you zoom in, you'll see what this trade is like. So basically, you're collecting $230 or whatever the mid price is. So you have no risk to the downside, but you have this upside kicker if we do drift higher near expiration. But the nice thing about this trade is, because I'm collecting $200 and change, if gold futures sell off, like let's say from 3,400 to 3,350, I can move that 3,540. So ultimately what I have here is a 20-point wide debit spread financed by a 40-point wide credit spread on the upside. So if gold sells off, I can move the 3,540 call. So I can sell out of that call and then buy the 3,520. And if I can make that adjustment for less than $250, I'm basically legging into a free butterfly and I keep the credit. So I've done this like 6 or 7 times where I'll get into it for $300 or $400 and then I'll remove the risk for $1 or $1.50. So I'm leaving myself with a symmetrical butterfly that I have no risk in. And then now if you make that adjustment, if gold actually does rip higher towards the butterfly, you can sell out of it for an additional credit. So lots to take in there, but basically playing for omnidirectional moves, removing risk to the downside. And then if you get a downside move, you can remove the risk from the spread entirely and create a symmetrical butterfly.
And we've lost Chris's audio.
I keep muted. I'm responding to something from our PR team. I'm doing a bunch of things here. It's like there's a show going on, right? So we have, Mike, I think it's really important because I've talked about this a few times this week on air. A lot of our audience, a lot of traders have 3 years, maybe even less experience before they even get to options. And just retail traders in general don't have that much. So when we say something like a broken wing butterfly, it's, I don't even trade like this. I don't think this is necessarily the way that I have succeeded.
It's not the way I do it.
But having you on here,
not because I have, by the way, a strong opinion on this being right or wrong. This is just not the kind of approach that I grew up doing. So I'm learning along with everybody else in strategies like this.
And that's, I think it's an important thing. There are many ways to skin a cat. And if you're a SpotFX trader, maybe go to currency futures. If you trade currency futures, take a look at SpotFX. Do something what Mike's talking about. Because I have not been great on gold. Ilya, you have. I'm still leaning long deltas, but the way that I'm doing it is through calls. You've been doing it through short puts. I know right now you're not necessarily long gold.
No, I'm short calls now, but I'm still on the sort of vol extraction side of it.
So, Mike, to that point, it's an 18.3 IVR. Silver volatility is also likewise deeply in the hole here, 6.7 IVR. How do you approach? Do you have a specific approach for a volatility regime in the metals, or do you like looking at GDX and GDXJ, which these guys are looking a little bit different than gold and silver, which have been kind of stuck in the mud?
Yeah, I think for gold futures, just because it's a bigger product, I'm almost always doing defined risk spreads like that. But if volatility picks up, I would go to GLD, GDXJ, depending on the size of the product I want to trade. But GLD, I've been doing a lot of straight up diagonal spreads there. So because like right now, same story, 15% implied volatility is so low. Like the delta you can get in here relative to a $310 stock is crazy. Like these products, in any product that has less than 20% IV is so low implied volatility. Like yes, you can have a move that's within there, but it's just so narrow, and you're usually going to get some kind of thing in the real world that moves that product greater than the implied volatility at some point in time. But yeah, if we were to get a big pop in GLD implied volatility or GDXJ, that's where I would go to sell premium, just because they're smaller products. But yeah, right now I'm just sticking with the gold futures, straight up broken butterflies, and just keeping risk really small and giving myself a lot of ways to have that thing work out.
Oil here today. Volatility is trending a little bit lower here over the past few sessions. It's 28.2 IVR. It's still sitting around 64, 65. We're shuffling back in. There was the announcement today from President Trump that he'll be meeting with President Putin to talk about ending the Russia-Ukraine war. So I think this August 8th deadline is, just more theater. How do you feel about oil at these levels? Are you still trading this sideways like I am?
I do not have anything on in oil now. Basically, the last thing I did in oil was being short that spike back in June and fading that down. Since then, we haven't really gone anywhere. And again, horizontal line fans rejoice. If you put a horizontal line here basically through like 62, 61, you get a very clean axis where you had a consolidation range after the April shenanigans. You take that out in June, you spike, we've come back, we're retesting the same axis. So we're essentially sitting at the midpoint of this, call it 62 to 72, 74 range. And this thing's got to make up its mind. It doesn't look like there's anything terribly attractive here. There's a little bit more IV, so I suppose you could entertain some downside to upside balance and attempt to kind of extract this. But for me, my bias is bearish because I think growth concerns ultimately overwhelm everything else, and energy is very cyclical. But it hasn't happened yet, and the price action isn't saying that it's about to happen. We're basically sitting at the bottom of the range, and so the risk reward is collectively terrible. If you're going to be directional, then it doesn't make sense to sell directly into the bottom of a range. Nothing says that it's not going to hold here. At the same time, the long side is unattractive because nothing says that you will. You're basically just scraping that, and there's no sign that you're turning. If ever that there was any reason to be skeptical of the downside, is OPEC Plus came out and said that they're going to increase output, which almost certainly is a thing to fade. So, because these guys are incompetent and they can't do anything. So, if you look at this and say, Right. So they're saying that at face value, the bias for prices is lower. That's almost certainly wrong, just because of the nature of OPEC plus incompetence. Maybe you look to fade it, but there's no evidence suggesting that you should. So I'm standing on the sidelines here. I want to be short, but for reasons that haven't materialized in the price action, and the risk reward doesn't suggest that this is a time to put your leg in the water and feel things out.
Mike, I've been leaning directionally neutral for the better part of the last 6 weeks now, just continuing to push on to short iron condors. How do you feel about oil here? There's part of me that sees an uptrend breaking, which says maybe lean a little bit more directionally neutral, bearish. There's another part of me that says we've just been meandering around 64 for better or for worse. March, April, May, June. Why not August?
Yeah, I have to admit my leg is deep in the shark and piranha infested waters here. I just got long the micro crude contract today, but I have more of a Neanderthal view. It's just like 5 red bars, then I will buy. Yeah, but
yeah, I mean, hey,
I mean, this is a product.
Anything else?
Yeah, this product is, I only do one contract, so this product is relatively small. I have been doing iron condors in the bigger crude contract, but just looking at this, like if we bounce from 64 to 65 or 66, I'll just take it off. I'm not looking for a huge move, but I'm willing to hold the risk going forward. And just doing one contract, keeping the size small, even if we get a move to April lows, it's not the end of the world. But I'm willing to take a stab at this regardless of the narrative, just because you can get small with the crude contract and see what happens. But yeah, bigger intraday range today. We'll see what happens. But yeah, I just bought the contract a little bit earlier today. I got filled at 64.60 or something like that. So I'm looking for a little bit of a move higher.
Yeah, a little bit of a move higher. We had some inventory today, and we still have severely low inventories here in the U.S. That's the story. Now, inventories are being rebuilt. What does that mean for the economy? I mean, we point to the research that shows if you look at the last 30 years of data on a rolling quarterly basis, demand for crude oil measured against global GDP has a correlation of about 0.92, nearly perfectly positive. And we have lots of evidence that growth is slowing, so probably not good for crude. That said, we don't want, I say we collectively, but the administration doesn't want oil patches going under. They don't want American production to shutter in. So does oil get that far below 60, 55? Probably not. Mike, if I was short this, I would not get that much more bearish when I start seeing a 5-figure. And if it's a 5-figure, I start looking long. And if we start dipping below 56, then we have much bigger problems on our hands that probably are spilling over to the equity market. Yeah. So I'm comfortable just looking for more ping pong around here. Goes back to 65, 66, staying directionally neutral. There's a lot of time, 42 days still. Slow burner, but that's what theta decay plays are. We just have to run out the clock and hope things don't change too much.
Indeed.
It is Wednesday, though. Before we go into anything else, you guys planning on watching anything fun tonight, Mike? Anything on TV around 10 o'clock?
I don't.
You don't have Paramount Plus, do you?
I don't. What am I missing?
What's going on here?
There's a new South Park episode tonight.
I'm sure it'll be the #1 most watched episode ever after the last one.
No, nothing's going to beat Scott Tenorman. That's just too good. That's too good. Scott Tenorman's chili is too good. Nothing will top that.
I did watch Hard Knocks last night, though. That was great.
Oh yeah. Who are they? The Bills?
The Bills, yeah.
How is New York's only football team?
They're great. They're going to be great. it's a good look at Josh Allen, how he's just a regular nice guy, but there's some very entertaining scenes in it. Got to check it out.
Yeah, the New Jersey teams. We don't talk about them. We don't talk about them right here. Yeah, and you know what's so funny? James Coney, one of the producers, he always throws Jets jabs at me. It's like it's been like half my lifetime since they made the playoffs. I know they're bad. This is like a gotcha.
When I saw the Justin Fields headline of him getting like carted off, I was like, you gotta be kidding me with this team. But it was minor.
That was very much expected. Okay, so speaking of media here, Disney had earnings today, Mike. The stock trades a little bit weaker, 2.66% to the downside. McDonald's, Disney, Uber, Shopify, these seem like pretty standard American consumer-facing products. I know that Shopify is a Canadian company here, so it's a mixed bag. What's the most compelling earnings story that's going on right now? Is it how companies that are not meeting the mark are getting punished? Is it the fact that the market's still holding up? Do you have any compelling earning plays coming down the pipeline?
I mean, we're kind of running out of earnings trades going forward. There are still a few that are yet to report that are big names. I think it's Netflix or Nvidia, one of those two.
Netflix. Nvidia is coming up in what, the 27th of August? Yeah. August 27th.
Yeah. So Nvidia is a later one, but I traded DraftKings to the downside today, just because I'm not loving all the tax stuff I'm hearing flying around of like how professional gamblers can't write off their losses if they're doing different books. That would apply to like professional poker players and sports bettors, things like that.
Can you explain that a little bit more? I haven't heard that. That's interesting.
It's basically a new or an amended rule where you can only write off 90% of your losses against gains from a different book. So like, let's say your net profit is $10,000, but you're doing it on big volume and you've done $200,000 of revenue and you have $190,000 of losses, you can only write off 90% of that $190,000 loss. So there could be a scenario where you don't make any money, you scratch, but you're paying the government as if you won because you can't write off everything. It's crazy. I don't know if it's going to completely go through, but there's a lot of professional poker players I follow that were going nuts at the implications of that. Obviously, because if you're playing big tournaments, those are $10,000 a pop. So
interesting. Okay, that actually makes a lot of sense because my mom's a tax attorney. My brother's in sports gambling, and last time they were together, I heard him complaining about something to her with taxes. Now this all
that's what it was.
It's all coming together.
There it is.
Now it makes a lot of sense. Okay, it's like, well, hey, it sounds like it's they're trying to disincentivize people from sports gambling then.
It would appear so. But there's always a workaround. Like if you just stick with DraftKings, it's not going to really matter because it's all centralized.
Right.
But yeah, DraftKings rallied after the close. They're selling off closer to the close price. I played it to the downside with a long-term diagonal spread. But yeah, I mean, I think Disney's interesting because Disney is acquiring, ESPN was acquiring Red Zone and that whole product suite.
They better not screw that up.
Yeah. I'm not sure that they will. I think they'll be okay. But
you think they're going to put commercials in there?
Maybe. I mean, Netflix is interesting. Netflix has just sold off aggressively from the highs. There's been talks that UFC might catch a deal with Netflix. But all these streaming companies, like eventually they're going to be the main stakeholders in all of the MLB, NFL, UFC products that we love to watch. So we'll see who comes out on top there. But yeah, I think Nvidia will certainly be kind of the fireworks to end this earnings season. But we've been looking at trading some fringe products. AMD, sizable move to the downside, kind of surprising. But then again, all these stocks are up 100% from April lows. So
What are you going to do?
Yeah, that is something I shared in our research chat internally here today, taking a look at how the rally has evolved. Goldman Sachs sent out this report. S&P 500 from the Liberation Day market lows. S&P is up 27%. Nasdaq's up 38%. Unprofitable tech is up 57%. AI-related names 60%. Their basket of most shorted names up 68%. Their basket of meme stocks 77%. Quantum computing stocks are 84% off the low from Liberation Day. This is a very funny inclusion. ARK, Cathie Wood Fund, is up 86%. And then Bitcoin-sensitive companies are up 112%. So their title of this note is High Momentum and Lower Quality Groups Rallied the Most Following the Liberation Day Market Lows. This is the returns from 4/8 through 7/31/25.
Asterisks in dollar terms.
Okay, but even accounting for the dollar loss, you have well, how much is the dollar up from April 8th? It's basically flat, in fact, right?
The dollar is not up.
Since April 8th?
Oh, since April 8th, the dollar has really only started what is starting to look like a little bit of a rebound on July 1st.
Okay, so the dollar's 4% lower, and if we back out the dollar, ARK is up 82%. Okay, it's still crazy.
It's still crazy, yes. But I mean, obviously, we're talking about very different volatility. When we compare the dollar to something, the thing that it makes sense to compare it to is the S&P, the NASDAQ, because these are now comparable-ish things volatility-wise. I mean, obviously, these things are not remotely as liquid as the dollar, and so you do have to scale it. The low quality of the names tells you a story. Yeah, they're up, high risk, high reward. But at the index level, what you see as positive sentiment in U.S. equity markets since April, then extrapolated over sort of the range of volatilities and jumpiness across markets, what you end up with is, at the index level, the dollar has fallen a lot more than stocks have gone up, almost by half. The S&P is up, about 6% on the year? In fact, stock markets in general, on average, Russell, NASDAQ, S&P, on average, up about 6% this year on net. Dollar's down 13.
Like if things like ARK are flying, I think ARK is pretty funny. Years ago I was actually called up by the New York Times to help contribute for a profile on Cathie Wood, which I don't know her at all. Never met the woman. I'm sure she's delightful in person. But they were asking about her investing strategy, and I pointed out I was asked, do you think that she will change her approach? And I said, no. If you listen to her and you read everything that she's written from when she founded her firm, her investing strategy is informed by her faith. Everything she does is informed by her Christianity. And so I said, I don't think Cathie Wood is ever going to give this up, because unless she leaves the religion, right? And she has stuck to it. So credit to her. That's the power of faith, I suppose.
Mm-hmm.
She has. And this was what the whole profile was. Seriously, look it up. It was a New York Times article from August 21, where they looked her up and talked about her, a success. And that, of course, is a few months before the bubble begins to pop. NASDAQ peaks in November 21, S&P in January 22, and then ARK goes by the wayside for many years. In fact, just to make that point emphatic on the chart, we'll go to the weekly. Right. So this is basically when she's profiled by the New York Times. Things have changed since then, is my point. But what do you make of a market, Mike? Because Ellie and I talk about this every day. This guy kept me up on the phone for 3 hours last night until 1:30 in the morning. So I've heard enough of him. What does it say to you that these unprofitable names, the AI names, the meme stocks, the Bitcoin, the ARKs of the world, are the ones that are leading to the upside, outpacing your regular S&P 500?
Well, to me, it tells me that there's a larger appetite for risk overall in the market. I think that parlays directly into what we're seeing in the real world, like sports book stuff. Like you watch a Mets games now, you're gonna see DraftKings, FanDuel, all the casino stuff. Like unless you're in a area where that's illegal, but
we're not watching Mets games these days, Mike, because the team is so bad.
Yes. But yeah, I mean, I think I think a lot of people look at what's happening right now, the AI movement and how things are changing, and they think to themselves, this could be the next Apple, this could be the next Microsoft. Let's get in now before it's too late type thing, regardless of the outcome. So, and when you think of the cost of everything, that I actually read an article. I think the Stock Messiah in the YouTube chat sent me this article, if I'm not mistaken. But it was basically how everybody's like, my world doesn't change if I lose a couple $100. Why not throw a couple $100 into something that could 10x or 20x? Like that's the mentality that a lot of people have. So I think it's an appetite for risk. I think it's people want to be involved and not on the sidelines. We're seeing that with options volume uptick. We're seeing that with more people with brokerage accounts. It's never been easier in the last 10, 20 years to open a brokerage account. You can open one in 5-10 minutes. So I think it all just kind of, everything goes hand in hand, and more people want to be in it than just watching on the sidelines. So that's kind of my take, but it's always interesting when you see mass participation and then how people react and how markets move when more people are reacting in the same way. And I think that's why you're getting a lot more of these violent sell-offs followed by violent dip buys. Everything just moves so much more quickly than it did 5 years ago.
Which is interesting because obviously vol readings are relatively low. So you have this thing where the market it's almost talking out of both sides of its mouth, right? Where you get these, I mean, just look at currencies, which were dead for years, and look at these swings now. I mean, this is easily the most deep pool of liquidity anywhere, and now you're seeing major currencies swing like they're emerging market exchange rates. So on one hand, the swings are wild, even in very liquid names, even in very liquid tickers. On the other hand, you look at the VIX across the board, and it's not just VIX; it's crude oil volatility, it's the MOVE index, which is bond market of all. You look at all of this stuff, and people just don't see or price it. And it feels like complacency to me, but until it is, it isn't. So it hasn't cracked yet, but Mike, to your point on sort of risk appetite, if I have $200 or whatever to roll the dice on an asymmetric outcome, that's kind of how I feel about the baby short exposure I have in the stock indexes here. If you lose very little. I've locked in on my verticals somewhere in the realm of 1 to 1.5% of equity risk on each one of these positions. It's nothing. But if they work, they really work.
If they work, they really work. But they're not working for me, Elliot, right now.
Not yet.
One thing that I wanted to pull up here as we close this out is something that really ground my gears today. And we have been taking a fair amount of shots at the president of the United States and some of his ridiculous policies. So we have to, in good faith, call out bad things wherever we see them here on Overtime, because we stand for intellectual integrity. Bernie, no! Why on earth are you publishing a chart of median home prices versus real weekly wages. That makes absolutely no sense. What a chart crime of chart crimes for the century. This is horribly misleading. Even if the underlying point stands, you can head over to Fred and remake this chart yourself. And what I did is I anchored real wages to 2010 levels. I anchored real median home values to 2010 levels. The dark blue line is your personal income. The dotted green line, that is your home value. What do we see? Yeah, home value growth price growth has absolutely outpaced wage growth since 2010, since the global financial crisis. But you know what? This chart doesn't prove that point. So
No, it doesn't.
Stop doing things like this. As a home building max, as a homeless, okay, this hurts the conversation. So shame on you, Bernie Sanders. Shame on you. With that, overtime's out of time. We'll be back tomorrow, same time, same place. Every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Elias Spivak in San Francisco, Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. More Tasty Live next with Ilya and Macro Money.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days. I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Well, stock markets decide that they're going to continue to idle. We get a pullback yesterday. We erase that pullback today, ultimately end up essentially where we closed on Monday. Markets attempting to find a path of least resistance, apparently. But a more interesting thing is seeming to be happening in currencies. US dollar taking another bash on the head today. And that's setting up an interesting opportunity, perhaps, for investors waiting for stock markets to do something and waiting for bond markets to do something. As we get a little bit of a contest here between global central banks and who will cut interest rates when. Because while the Fed is still dithering, we're going to have a Bank of England monetary policy announcement here that is almost certainly going to give us another cut. And so what this sets up then is a little bit of an interesting dynamic as we look at what is likely to happen next in, at the very least, the currency markets, while stocks try to find their way. So what we're going to do here on Macro Money, I'm Ilias Spivak, head of Global Macro here at Tasty Live, is we're going to break down what is happening here, what the Bank of England is expected to do, and then land on what the trading opportunity here seems to be, because this does look like something of a juicy setup. So this is the expected outcome here. We can see for August, we're expected to have rates come in from 4.25% to 4%. Looking at benchmark SONIA futures here, these are the UK equivalents of Fed funds futures for the Fed in the US. We have the cut fully discounted. It's there. It's in the market. That's not going to surprise anyone. We also have another cut on the menu by year end. We can see by December we're at 375. So we're looking for this cut and then one more before year end. And if we look at the way that the overall outlook here has shaped up, it has been remarkably stable. And we see here that beyond the cut, that this point is something of a given over the next 24 hours. Here's that extra cut before year end. And then another one on the menu for next year. So the full 25 basis points of another cut now baked in, and the markets apparently assigning a slightly elevated chance, so a non-zero chance, if you will, that there will be a little bit more. But of course, at 32 basis points, it is in fact just a pittance. So if we consider sort of what we're looking at here, 32 basis points is only 7 in the direction of a second cut next year, a second 25 basis point cut, which puts the likelihood there at just 28%. So the market's seemingly well anchored here around one more cut this year beyond what the move will be over the next 24 hours, and then one more next year. Now, this has been very stable. We can see here going all the way back maybe to April, May. The tally has barely budged. We've kind of oscillated in this 50 to 75 basis point thing, so within one cut range, and we're not really going much of anywhere. And the reason that this is so interesting, of course, is because the dynamics around the UK economy would suggest that there's a very similar kind of stagflation flavored worry here as what has kept the Fed on the sidelines this year. So in the first quarter, we can see GDP growth in the UK slowed. It was rebuilding all of last year, and then starting this year for the first quarter, it took a step lower. Since then, this is now the first data that we have going into the second quarter, we can see that both April and May saw GDP decline. The UK is one of the few economies that publishes monthly GDP data, not just quarterly, so you get a sense for which way the wind is blowing, as it were. And we can see that into the second quarter, things do not look good. We have output actually shrinking. Moreover, if we take the year-on-year view of this monthly data, we can see that the situation has significantly deteriorated. The year-on-year growth rate took a little bit of a leg lower in April, but it really fell off the edge in May. And so we're looking at here the weakest economic growth dynamics for the UK as of May in just about a year. Reference point here is June of 2024. So the situation is looking soggy. The latest numbers that we got on the Purchasing Manager Index data that was finalized from S&P Global this week, initially published 2 weeks ago and finalized on Monday this week, or Tuesday, we're looking at signs that, again, we're kind of idling with a downward drift. In particular, in July, overall output took a leg lower. As ever, of course, these numbers are centered around 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And we can see that while we're certainly not in contraction territory here, the July numbers are pointing us in the direction of a slight weakening here in overall growth. We tick down on this composite index. And so the growth dynamics over recent months and over the course of the second quarter going into mid-year, not great. But at the same time, the inflation picture is firming. So what we see here is, in particular, an uptick in this housing, fuels, and utilities component, which is essentially energy prices. And what we find is that that's becoming an increasing uplift on overall inflation, so much so that in June, we end up with headline inflation at 3.6%, which is a 17-month high. Moreover, the core number, which takes out fuel and energy, ticked up even higher to 3.7%. That's not so crazy considering it's been running north of the overall here for a while. And to some extent, this reimagining of what's going on energy is statistical give back from what happened here, where energy was actually a negative influence on overall inflation. So in some sense, we're rebasing in this data. But that we haven't really moved on core tells us this is not just something you can easily dismiss as energy prices being a weirdness in the data. In fact, if we look at the breakdown here, to be sure, we have an outsized contribution from energy, and that's echoed in a pretty significant jump in transport costs in June versus May. But even if you hold that aside, the inflation picture is relatively elevated, and it's not difficult to make that determination. I mean, here's about 1%. Here is another one. So that's the 2% inflation target. And then on top of that, there is all of this and all of this, giving us inflation, even if we hold this aside, north of the target. So if we kind of back of the napkin eyeball this math, we're sitting at a headline rate of 3.6%. Take away these shenanigans on fuel stats, and you're left about 1% lower, and so still going the wrong direction. And yet, just take a look at how tightly wound these implied rates curves are. We haven't really deviated from this implied rates path over the past 2 BOE meetings, despite the fact that the data has been a little bit confounding. In that, of course, much like what the Fed is worried about in the US, we have these stagflation-flavored dynamics. Now, we don't want to say stagflation is here, because obviously the economy isn't stagnating, but we do have a parallel rise in inflation with a slowdown in growth, which is precisely the kind of policy trap that the Fed is so concerned about, and why they haven't cut rates so far this year. And so, in some sense, this BOE situation is very interesting in terms of what it might mean and how that extends to what the Fed is doing and sort of what the logic here looks like. These policy expectations have been remarkably stable. Moreover, while the BOE is cutting while the Fed is holding, their latest cut, the one that they took this year from 4.5 down to this 4.25%, that only just caught them up with what the Fed did last year. So last year, if we remember, the Fed cut rates by 100 basis points between September and the end of the year. 50 basis points in September, another 25 basis points in November, another 25 basis points in December. The BOE started cutting sooner. They started cutting from 5.25 in July, and now down to 4.25. They've caught up with the Fed. In other words, they've now issued their own 100 basis points. They started earlier. They're still going. The Fed did everything in one shot, as it were, or over the course of just a few months. But the BOE has only just caught up. And this cut will be the first step to pace ahead of the Fed on easing. If we look at the outlook, though, the outlook still favors mainly a staid Bank of England. So as a cumulative tally beyond this cut, we're looking at about 2 more with some rounding error through the end of next year. Compare that with the outlook for the Fed, where, never mind what policy officials are saying, although even their outlook is more dovish, they're seeing 50 basis points this year, basically equivalent to what the remainder is for the BOE with this week's cut and then one more. But then the markets see 70 basis points next year, so they're veering on 3 cuts from the Fed next year for a cumulative 5 cuts between now and the end of 2026. That's against 2 more cuts. So that's 3 more cuts from the Fed than the BOE. And yet, evidence of economic weakness is much more acute in the UK, at least looking at the PMI data, than it is necessarily in the US, although, of course, the evidence does seem to be stacking up. Weaker jobs growth, obviously, the ISM numbers this week putting the economy in the US at standstill, the second quarter GDP number giving us such a weak consumption reading that in the first 6 months of this year, we end up with the weakest stretch of household consumption since the first 6 months of 2020, which was, of course, the COVID recession, and U.S. inflation is ticking up, albeit not as much as in the UK. So one would think these are somewhat analog situations. One would think the Bank of England is going to be a little bit more reticent, much as the Fed is being, because this does put them somewhat at odds. On the one hand, the weakening growth seems to indeed beckon cuts. On the other hand, the higher inflation seems to argue for patience, as the conundrum that the Fed has highlighted. But again, the delta between these curves is tiny. So from May, 2 meetings ago, to June, the previous meeting to the one this week, and now less than 24 hours before the next meeting, the policy path has barely changed. So the Fed was more dovish than the BOE last year, is looking to be more dovish than the BOE looking at market expectations through the end of next year. Policy appears to be on autopilot. And yet, and this is where the trade idea seems to emerge, the British pound has been at the forefront of a rebound in the US dollar. That is to say, the British pound was the first of the major currencies at the beginning of July to really start to roll over against the US dollar. A tariff deal between Prime Minister Starmer and Donald Trump, notwithstanding. The UK was out in front on a deal on tariffs, and that hasn't helped. As a matter of fact, what we have here is a very clear reflection of the dollar's blistering sell-off since the beginning of the year becoming overturned, and this series of higher highs and higher lows giving way to the dollar recovering and starting what appears to be a new sort of trend. Now, the dollar has taken a little bit of a beating here this week. We can see once we found support here anchored right around 132, we've bounced to retest the underside of the former range here that's held between roughly 133.80 and 138. So this consolidation thing now being retested from the underside and tellingly holding. So the same kind of backfill that we saw here, where right around 136 there is this range bottom. You can see it annotated by these highs and these. We get the initial break. We hold this support, bounce, retest this underside, then make a new low. The stair step seems to be continuing. We hit this support, bounce, and we are now retesting the underside of this level here. That, of course, makes for a very interesting opportunity, because if there is, in fact, a dollar rebound that's building despite the fact that rates are looking much more dovish in their outlook in the US than they are looking in the UK, and at least in the UK, things are very stable and the markets are not looking for the Bank of England to do anything untoward, they're pretty well anchored on what is going on, then what's happening here is a dollar that is recovering despite the fact that the markets are convinced the interest rate differentials, the typical drivers of currency markets, are pointed against the dollar. And so what this then sets up is a very interesting situation. If the Bank of England were to deviate from consensus, that is to say, if, for example, we got the cut, but the guidance seemed to suggest that there's more easing on the menu than is already anticipated, then the British pound would likely fall, because there would be a readjustment here to a less favorable yield differential for it versus the dollar. And perhaps the slowing growth dynamics do that. If, on the other hand, the Bank of England issues the cut, again, that much is pretty much a foregone conclusion, but then expectations for further easing are actually diluted because it decides to focus on the inflation piece and say, well, you know what, 3.6% is going in the wrong direction. We're probably going to see more in this sense. We don't want to let inflationary pressure out of the bag. Let's make sure that things remain anchored. Well, then maybe you get a little bit more British pound strength, but it hasn't been able to make hay of the yield differential so far, so it's unclear that it's going to be able to do that. And then let's suppose that the market is right in that it's been so stable in what the BOE is expected to do, and it basically has concluded that the central bank is on autopilot, that it's going to do what it's doing, look through volatility in near-term data, and say, you know what, we're just going to keep doing it. We're just going to keep doing what we're doing. Well, if the market is right on that front, then the status quo remains. And that status quo is a British pound that is retreating despite the interest rate differential story seeming to favor it. And when any asset is unresponsive and indeed moving in the opposite direction of what the sort of macro, fundamental, whatever architecture seems to imply, when the price action is openly clashing with quote unquote the news, well, then you have a market that has a very strong intent to go where it wants to go. And that's something of a tell. In that context, then, what we've seen in this British pound rebound over the past 4 or 5 days is an attractive mulligan, whereby if you haven't entered short already, this becomes the next opportunity to do so. Obviously, doing so directly in front of event risk is not the world's greatest idea, but if you get any level of spiking, any level of volatility around this zone right here, and you end up holding here rather than breaking out, then what you end up with is an attractive setup. Now, you might front run that and say, well, you know what, we're already back testing here, and if one is wrong, then one is wrong quickly. And if one is right, then we have an extrapolated move down implied here. If we kind of, again, back of the envelope, extrapolate what this topping setup would mean going forward, and sort of the first page of a technical analysis textbook answer to how you do that is you take the height of this range and you plot it down this way and say, okay, well, if you basically move the width of the range down, what would that look like on a confirmed break? And that looks like a return down to sub 130, around 129.60 or so. So this appears asymmetric in favor of shorts, and the price action seems to suggest that the risk reward is attractive at these levels, And the way that the pound has been behaving suggests that it has a mind to go lower, even if the news and the interest rate architecture seems to suggest that it should be doing the other thing. And that is macro money for today. As ever, we are here after overtime, Monday through Thursday. That's a show I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. I'm likewise on with Chris for Futures Power Hour, Monday and Friday. I'll be on for a special one tomorrow, so come and join for that. I'm also on with Chris and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events. Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned
that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show. All right. Tasty Crypto Show. I'm Ryan Grace. With me today, Dan Cecilia, and of course, special guest, Greg Magadini, fan favorite. What's up, guys?
Hey, what's going on?
Greg, how you been? It's good to see you.
Been great. Happy to be here as always. Just talking before the show, just came back from a couple cool places, Montreal and Lyon. Still working out there, but it's just nice to be abroad a little bit. And yeah, check out these markets from overseas locations. It doesn't change anything. It just feels cool.
I've got to ask, Montreal or France? Which one takes the cake for you?
Oh man, I think Montreal is probably where I would live, but I think France is prettier. Like there's so much in the architecture in France, and you go out to those like buildings and churches, they're from the 1100s. It's just nuts.
That's awesome. Well, it's good to have you back. It's great to have you back on the show. We've got a lot to talk about here today. A little bit of a bounce in the markets from what I can tell after some weakness here recently following non-farm payrolls, revision to prior jobs numbers as well. The age-old question, Greg, what do you make of it? What's going on in the markets? How are you thinking about things right now?
Yeah, so I think really what we saw last week is a nice juxtaposition between digital gold for Bitcoin versus risk on asset for Bitcoin. So Bitcoin kind of has that mix, whereas Web3 altcoins all have more of a risk on asset flavor. So it's really interesting to see that, non-farm payrolls coming in bad and revisions essentially like erasing the past 2 months really increases the rate hike probabilities. And so we saw gold rally pretty hard on the back of that. But Bitcoin actually kind of sold off on that. So that's where like the risk asset of the Bitcoin mixture kind of showed its hand. But that being said, Bitcoin outperformed versus, Solana, Ethereum, Web3 plays, which shows that there's a little bit of a bid for Bitcoin as digital gold. So I think, lower rates is probably great for Bitcoin going forward. We saw a nice recovery. This uptrend is intact. It's still a low volatility environment. There's no reason to panic here. There's no reason to sell any Bitcoin here. And I actually think that the risk assets recovered pretty nicely, and we could just see momentum go back into Ethereum and some of the altcoins here as well, assuming tech continues to rip higher, which it clearly is.
You think it's cut and dry? I mean, we've obviously seen the Fed funds probability shift immediately following that announcement with the market repricing the probability of an interest rate cut upcoming. But should we be careful what we wish for? I mean, typically you see these cuts kind of follow some weakness. And as you described, we get the digital gold side of it, we get the risk asset side of it, and sometimes there's a pretty strong positive correlation between equities and Bitcoin. And I guess where I'm going is, do you think that we have to see more weakness in the market to get these cuts that ultimately probably take us closer to what I like to call blast-off mode or altcoin season? Do we get that from here, or do we have to go through a pocket of weakness and there's a little bit of risk? Or do you think, as you mentioned, it's kind of just stay long, stick with the trend?
So I think overall, stay long, stick with the trend is the base case scenario. But I think what you're mentioning is for the path of rates going forward, there's kind of two scenarios that I keep thinking in my mind. There's the traditional scenario where there's economic weakness that justify a rate cut, which is kind of what you were just mentioning. I think that's kind of business as usual. And, there'll be some downside gyrations, but everything will kind of trend higher. I think if we get rate cuts in a strong economy because of essentially like pressure from the administration for the Fed to cut the front end of the curve, I think that's a whole different sort of scenario. And essentially, if that's the case, I think there's extreme steepening in the curve, in the yield curve. I think the long end rates go a lot higher despite the front end being cut, just because it's going to be sort of an inflationary, in my mind, an inflationary type of preemptive cut, as well as threatening the Fed independence. So the Fed's got that dual mandate, fighting inflation and keeping full employment. If we don't trust that they can fight inflation freely, I think that's a steepening event, and I think that's a blast-off moment for crypto and for gold, for Bitcoin specifically, and for gold. Gold's been relentlessly going higher, and I don't see any end in sight here, and I do expect some sort of like capitulation move higher in gold, and I think that would be the catalyst for that, and I think Bitcoin would do the same. And there's a lot more beta to Bitcoin than there is to gold.
Yeah, and to add to that, you're starting to see a bit of, well, maybe it's too early to call it, but it seems like that bearish trend in the dollar might be resuming here. We've had some recent dollar weakness, which maybe adds a little fuel to the fire in that environment. So all that said, I mean, what are you seeing right now in the market from the kind of volatility perspective? You had a lot of great trade ideas previously here on the show, and we love your analysis around what you see with the term structure. What's on your mind from that perspective?
Yeah, I think the vol environment is super interesting in crypto right now. I have a couple charts here. I don't know if I can share one of these here, but this first chart I have up on my screen, this is really showing us where implied volatility priced forward vol, and then where where implied probability priced future realized vol, and where that future realized vol actually came in. And so what we see here is, for the exception of 3-day options that we had over the weekend, implied is constantly overpricing realized, and it's by a good amount too. So especially if you look at the long end, I mean, you're seeing implied at, call it 40, 44, but realized really coming in only at around 30. So the way that I like to think about this is that the variance risk premium of selling options is really harvestable right now, and there's good edge in being short the options in Bitcoin. If I look at term structure specifically, just to kind of get an idea here, we can see right here, this is the forward vol in the orange dotted line. So that's showing us the volatility between any two expirations. And we really see that December contract being sort of the point of the most expensive point on that curve. So there's a lot of premium being bought in those December contracts. Assuming all else equal and the term structure stays the way it is, we're just going to roll down to current realized vol levels of around 35. And so there's a lot of juice there for Bitcoin covered call selling, even delta neutral types of strategies. I think that's pretty interesting.
What do you think the explanation is for, the elevated premium that you're seeing there towards the end of the year? I mean, is it just people coming in and they kind of come at it with this perspective where, look, I think Bitcoin, name your arbitrary price, 150,000 year end sounds good, or is there, more to it?
Yeah, there's a little bit of speculation in the market. So we just had some regulatory clarity with the Genius Act and the Clarity Act. There's also some speculation in the market around sort of, what's this Bitcoin reserve going forward? Is it just, not selling government-owned holdings? Is there an event of potentially adding to those holdings, something like that? So I think a lot of sort of that regulatory uncertainty and hope for an event is going to be kind of fleshed out here to year end. So I think a little bit of that is the pricing. But also, let's keep in mind that this contango term structure has been pretty steady for a while here. Let me just show this chart. So this is showing us the term structure shape through time. So a 1.0 reading is a perfectly flat term structure. We're above 1.0 like we were during the election or the inauguration or Liberation Day. That brings us into backwardation. But really, since Liberation Day, we've been in this constant contango form, and that's just also a property of this shape. So, if you're consistently in contango and you go a couple months out, it's just going to be an expensive point on the curve, just naturally. So I think it's a little bit of a mix of those two things.
Is it fair to say you look to sell that longer term volatility, and if you're trying to take a shot here on short term price action, you want to stay kind of in a near term duration in that sense, something that's got a little bit less time on the side?
That's exactly right. As long as we keep this shape, that's the way to do it. Long-term options are just going to be naturally overpriced and roll down the contango curve. And then if you're trying to trade short-term price changes, really getting some gamma on the cheap at the very front end of the curve, call it dailies or weeklies, that's going to be the best bang for the buck.
Okay, yeah, because it's interesting. Dan and I have noted how, and we've just ranked volatility kind of or implieds on a 1 year basis, a simple approach, but gives you a sense of where you are, relatively speaking, and it gets lower and lower every time that we look at it from that perspective, and maybe continues to move lower here, as you've mentioned.
Yeah, and
we talked about some of the term structure and kind of, how you'd play this. And you had an interesting trade idea that I want to dig into in the newsletter. So you had sell the 150,000 Bitcoin call against the spot 2.5 BTC delta exposure. Can you walk us through like the risk reward on that, or how you think about like sizing a trade?
Yeah, exactly. So that's just a delta neutral kind of vol play. So basically, I'm selling a 25 delta call, so I short 25 deltas, and I own the underlying Bitcoin for 0.25 Bitcoin. So that flattens up the short delta. So now I'm long delta on the Bitcoin side, short delta on the option side. Now, one of the nice things is if the volatility, shape remains the same, each day that goes by, there's a little bit of theta, and then there's a little bit of contango roll down. And so as vol comes out of the market, you're naturally picking up deltas. So there's a little bit of a, you don't want the market to rally too hard, too fast, because then you're just going to be short that short call in your 25 delta position in Bitcoin. It's not going to be enough to compensate for that. But as long as we continue to grind higher the way that we have been, basically what we're going to do is that your spot Bitcoin is going to gain as we grind higher, and then that option is just going to bleed volatility and bleed away its deltas as we approach expiration. So it's a great way to essentially have very little risk, so to speak, in a situation where we continue to grind on a steady path higher. Caveats there: crash down or crash up. Those are the pain points. So again, this is still a short vol trade. So you don't want crashes in either direction, but that's kind of the trade-off that you're making in that type of position.
And I might have missed it, but what expiration would you look to do that in? Is that year end where we've seen these elevated premiums, in the December expiration, or how do you think about that?
Yeah. Yep, I think really selling the most expensive point on the curve is the most interesting. So you can just see here on this curve, the December contract is trading about 44 vol. The end of October contract is trading about 42. The end of September is trading about 37. So basically, every month that goes by, you collect that theta, but then you also get that grind lower down the curve. So selling the most expensive point on the curve is, in my mind, the most interesting.
And I guess I got one last question for you on this trade specifically, Greg. Presumably, when you talk about, okay, I want a quarter of a Bitcoin, I'm going to sell the 25 delta call against it in December. You can do that on an options exchange like Deribit, for example. Is there a similar way to set this trade up or to get similar exposure with IBIT? Is it, and it's not going to be perfect in terms of the delta hedge necessarily, but is another way to look at it just coming in here, I want to own 100 shares of IBIT, or I guess depending on the capital that you have in your account, you could size it so that you have 25 shares and you sell the 25 delta call against it. But is there a similar approach when you think about some of the ETFs and the options on those now?
Yep, it would actually be pretty much the same identical trade and should be very easy to replicate. You just look for the 25 delta IBIT option that expires in December, or you can even go out to the January one just for liquidity reasons. And then you buy 25 shares of IBIT against it. And so that's essentially the exact same trade.
Yeah, when I'm looking at this right now, I mean, obviously the market for these options is closed, but it kind of puts you at about the 85 strike. It's a 22 delta currently, or you could go to the 80, which is a 28 delta, given the $5 increments there. But you're going to get anywhere from $2 on the 85 strike, or almost $3 on the 80 strike. So a lot of premium in there, as you mentioned.
Mm-hmm.
So another interesting one from your newsletter was the Bitcoin versus BTC versus coin vol trade. So Bitcoin versus Coinbase vol trade. Sell the Bitcoin December call, buy the coin call spread. Are you still, what do you look for there, and how do you manage that, like a cross-asset vol trade like that?
Yeah, so obviously there's a lot of sort of rebalancing considerations to keep in mind. But one of the things I really like about, let me just go to Coinbase here real quick. So one of the things I really like about Coinbase, and we've seen this post earnings as well, is that the volatility tends to pay option buyers. So the realized vol exceeds the implied vol quite often. And so if we just look at this chart that goes back to March, the orange line is realized vol, The blue line is 10-day at the money implieds. And so what we see is that realize when it does underperform implied, it does so by, call it, 20 points, 25 points. But when it overperforms, we've seen realize exceed implied by nearly 100 vol points. So we haven't seen this in Bitcoin in a long, long time. And we'll probably touch on this in a little bit, but MicroStrategy also hasn't done this since February. So Coinbase is still the one sort of crypto asset that's really paying vol buyers. And so whether you're trading short or long, there's an interesting type of trade to do here. I just like the long side to offset my sort of short call on the Bitcoin exposure. And the idea here is that you buy that call spread in order to get theoretically some upside crypto exposure. A lot of the Coinbase performance is correlated to Bitcoin prices. It's not a perfect correlation. There's definitely a beta multiple there that you got to think about. But basically what you want to do is you want to balance the deltas accordingly. So you would buy enough call spreads that the dollar value of the delta of the call spreads in coin is similar to the value of the short Bitcoin call in dollar values, and then you scale that for beta. So let's just say Coinbase has a beta of 2, and your call spreads are equal to, call it, 20 shares of coin. So that's like $6,000, 20 shares times 300, $6,000. The beta of 2 is the equivalent of $12,000 of Bitcoin. And then if you go into the IBIT market, you would sell calls at the 25 delta. You sell a ratio that gets you around $12,000 of exposure, short exposure. And the idea here is that your Coinbase on an upside move will outperform a lot what the Bitcoin market will do. And you see this being borne out in truth for the volatility markets of these two assets.
Yeah, I personally like this trade a lot. And obviously, you don't see this spread in there as you're showing on the screen all that often. But I think we're also in a market environment where, I mean, anything is possible, but it's unlikely that we see Coinbase just jump off a cliff. I mean, it's already done that post earnings. You probably get a recovery here, and I think that they would trade with a stronger positive correlation moving forward, especially if we're in a, if we truly are, which obviously I believe, in the bull market that we've been in and remain in here for crypto, generally speaking. Like, they should both go up together, I guess is what I'm trying to say.
Yes, they should. There's something to keep in mind that we noticed in the earnings report for Coinbase. So one of the weak points and the reason why the earnings report disappointed so much is that the retail flow for Coinbase was lower than expected. That's really how they make their money, is in retail flow. So then that opens up the question, is retail not participating in this crypto rally, which I find that hard to believe, or is the retail flow just trading somewhere else? Are they just trading the ETFs instead of trading directly on Coinbase? Are they trading at some of the competitors such as Kraken or Bullish or Gemini, stuff like that? So in my mind, the edge that Coinbase provides is that they have a bunch of altcoins listed on their exchange. So that makes me theorize that really this trade, the way it performs, is if we get alt season. If we get alt season, then retail has to trade on Coinbase to buy altcoins. If that's the case, Coinbase should outperform because it has a more direct exposure to altcoin crypto trading.
Yeah, that's an interesting perspective, just given the swath of tokens that you can trade on Coinbase, and maybe that is your indicator of whether or not we're in altcoin season. Everybody asks that question. We look at Bitcoin market cap dominance and some other ratios to get a sense of that. But I'm going to start thinking about it from the lens of Coinbase. To that point, though, Greg, I want to ask you a little bit more about, your view on, is retail participating right now? Because when I look around, the narrative has shifted very quickly to ETH. You have these treasury companies that are being spun up. People are adding ETH and other crypto assets to their balance sheet. But ETH is kind of taken center stage here. From the people that you talk to in your circles, I mean, what is driving this market? Because I don't think you really see as people like to go to the Google search trends, or, you have your friends that are texting you that aren't in the space, but all of a sudden are asking you about whether they should buy this token or that token. I mean, are you seeing any of that? Because my view is that you really aren't seeing this kind of rabid retail participation yet. Do you see that as well, or do you have a different view?
I think I do see that a little bit, because in past bull markets, you're right, we get our friends reaching out to us looking at really cheap altcoins. That's typically the sort of altcoin season bull market property, where everyone wants to get long crypto, but they want to buy something cheap that hasn't moved yet, and that sparks the altcoin season. We haven't really seen that part yet. What we've seen so far is really macro-driven and regulatory-driven flows into the major pairs, Bitcoin, ETH, a little bit of Solana. But really, the macro narrative is driving Bitcoin. So I would say that's 50% of the story. The other side of the story is going to be more around regulation. So in my mind, the more regulatory clarity that we've got, or that time goes by for that to materialize into the market, we've got some really nice bills just recently signed. I think that's going to be really good for the Web3 narrative, the altcoin narrative, a lot of tokens that were maybe deemed securities. Now people don't have to worry about that. The Tornado Cash guy, his case was essentially dismissed. So there's all these sort of these preventions going away from altcoin season, but I think there needs to be time for that to trickle in the market. So I think that's a little bit of the other side of the equation that we're waiting on. But yeah, that's kind of how I'm thinking about it. Long story short is we haven't seen the full-on FOMO retail flow into altcoins yet.
Yeah, and on that note, if we know rate cuts are coming in September, right? There's a 90% chance of that. Labor market weakness you covered in your newsletter. Where do you want to be positioned in crypto if this is all coming and lining up for this altcoin season? Do you just stick with majors? Should we look to alt layer ones? Is something more deep in that Web3 DeFi space the way to go? Or, hey, do we, maybe something new? I don't know, these content coins are big, or, meme coins. So where would you position yourself if we know this like macro setup is happening?
Yeah, I still like the macro setup the most. I find it the most interesting, especially because it's the most optionable. But one more play that kind of comes to mind is if we're thinking about the macro play and we're thinking about where retail is trading and how vol is lining up, that really brings me to MicroStrategy. So MicroStrategy, since essentially February of this year and sort of downside Liberation Day vol, the volatility for MicroStrategy has been pretty low and consistently steady. So in my mind, this creates a nice, MicroStrategy has a higher vol than Bitcoin. So when I think about essentially buying Bitcoin and selling that covered call against it, or that delta neutral ratio call, a more interesting way of doing that, in my mind, is actually selling the calls on MicroStrategy, specifically 2x ETF MSTU MicroStrategy instrument, because there's going to be a performance drag over time of the 2x ETF. So the asset kind of decays and underperforms MicroStrategy. But then MicroStrategy also has interesting dynamics. So there's a premium over asset value that MicroStrategy trades at. Well, since the November election, and where we really saw MicroStrategy break $500, that premium's kind of been degrading away. So the degradation of the premium prevents prices from moving too high too fast. Then you have the volatility itself is pretty low and steady. And then you have an instrument like MSTU, which is 2x MSTR performance, daily rebalance, that has a drag to it as well. So now you can sell that call on MicroStrategy and use that to, maybe buy that Coinbase call spread, or maybe trade Bitcoin underlying against it. So that's a nice way to trade the altcoin season coming on. So if we do get altcoin season, yes, that's good for MicroStrategy, but it should be better for something like Coinbase. And in the vol markets, all else held equal, really prove that trade will be more beneficial to long volatility on Coinbase than it would be to long volatility on MSTU or MSTR.
And when you look to sell that call, are you doing that in MSTU or are you sticking with MSTR?
MSTU, because I think the MSTU is going to underperform MSTR, and MSTR is going to underperform Bitcoin, and Bitcoin would underperform alts
Gotcha.
in an alt in rotation.
And that's, again, due to the rebalancing or the drag from that rebalancing on the leveraged ETN.
Yes, exactly. And for anyone who's kind of new, anyone in the audience who hasn't really looked at the 2x performance drag, really all that is that when the asset drops, it drops from a higher denominator. And when it rallies from a lower denominator. So the percentage drop and percentage gain might be the same, but the dollar value are going to be different because where that percentage is based off of. And so the higher the volatility, the more that the drops are bigger in dollar terms, and then the rallies are underperforming in dollar terms. So over time, that just degrades away.
So kind of similar to what we see in some of these leveraged volatility products.
Yeah.
Okay.
Exactly.
Real quick on the MicroStrategy note, I'm curious what your opinion is, if you have one or if you've dug into this. Do you think the way they're issuing this preferred share and this MNAV benchmark, do you think that's sustainable long term? I was on a couple podcasts where people were asking me this, and I wonder what your take on that is.
Yeah, I'm still undecided in that a little bit. I do think, basically what they're doing is they're getting cheap capital funding to get you a levered position into Bitcoin, and the shares are worth more Bitcoin over time. I do think that type of trade cuts both ways. And so it'll be interesting to see how that performs on a severe pullback or God forbid, an actual sustained bear market rally, or bear market sell-off, I should say. So I'm still undetermined. It's kind of a wait and see for me, but it's definitely interesting to see what's going on there.
Yeah, that's a great point. That's what's kind of, I wouldn't say terrifying, but maybe slightly scary in that all of these products that in some ways maybe have certainly fueled the narrative and possibly fueled the price action that we've seen have all launched and have come to market recently in this environment. It's not like they popped up kind of at the lows here. So we really haven't seen a market environment which could have a negative impact on trading activity here with some of these products.
Mm-hmm.
Greg, one more for you before we let you go. A fun one. I know you're typically in the volatility products and kind of have more of the derivatives angle in terms of your trading. But ETH versus Bitcoin, everything we've walked through, the macro setup is there. Liquidity looks pretty good. Rate cuts on the horizon. We've got some policy tailwinds as well. If you had to pick one or the other, where are you?
Yeah, I think ETH right now is making its comeback. I think ETH making new all-time highs is very logical. It should that makes sense to me. I'd be very, very surprised that we don't see new ETH all-time highs. And those all-time highs from these prices are about, right now we're at 3,600, so call it about a 50% rally. So I think we get ETH all-time highs before we get Bitcoin 155.
Awesome. Well, we'll leave it there, but before we let you go, where can everybody find you? You put out a fantastic newsletter. I am a reader myself. How do people get on the list?
Yeah, absolutely. So our newsletter is written weekly. It's free. It's at amberdataderivative.substack.com. And then you could check out all these charts for free with a free email sign up at pro.amberdata.io.
Awesome. Well, Greg, thank you as always for coming on. Looking forward to having you back soon. But that's going to do it for our show. We'll be back on Monday. Until then, I'm Ryan.
I'm Dan.
Peace.